Good morning. Good morning, everyone. Good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, the 26th, 9:18 a.m. We've got about 12 minutes to go before the opening bell. Just a reminder, I will be out tomorrow. I will be monitoring the markets. I just won't be broadcasting and yapping away all day like I usually do. There's a lot of good traders in the room, so most in the room follow the similar styles: 9, 21, 50-day, 200-day up and to the right. We're looking for long trades. Intraday, we're looking for VWAP up and to the right for bullish trades, down and to the right for bearish trades, flat for no trade. There's a lot of people in the room that follow the same methodology, buying dips in bullish patterns, selling premium, maybe bear call spreads at the highs if you're bearish, and looking to collect some premium, or selling covered calls, or whatever it is that you like to do. There's lots of people in the trading room that are good at what they do. I just won't be here broadcasting tomorrow. I'm going to be with my daughter touring Duke University. All right. Give me a couple of minutes. I need to do a couple of things. I'm going to mute you, but I'm not going anywhere.
So we got the commonly called death cross there. Maybe not the greatest trading signal, but another sign that the trend is deteriorating and intensifying to the downside here. Momentum, our RSI here, bearish, slipped below the 50 midline. Got a little bit of a small trend line here. You could watch that to see if it's invalidated if we break through that trend line to the upside. But for further support, this green line here represents some lows that we saw back there, 14,216. And then that's where we are also intersecting with our lower level, our channel, 252-day EMA just below that near 13,980.
Yeah, that 13, that green line you mentioned, that might be an area of support because I think we're right there when the cash opens at 8:30 Central Time here. Do you have another chart here for us?
One last one here, just long-term picture, trending downward off those old highs near 16,764. The point to the upside, 52-week highs. Point to the downside, this old peak right here near 13,565.
13,565 being support. I mean, after this economic data, it's surprising that we wouldn't see, a little bit of a break to the upside after the, basically 3% drop we've seen in the NASDAQ so far this week. But some key levels here that Rick brought us here to watch on the NASDAQ 100, which is still outperforming the overall equity market so far this year. But these are some key levels that Rick brought us, and that's going to wrap up the Future Show here on the Schwab Network. But stick around. Morning Trade Live's coming up next with Oliver Rennick hosting from the Schwab Impact Festival in Philadelphia, Pennsylvania. So hosting live.
All right.
Stick around for that show.
Just a reminder, I'll be out tomorrow. Be visiting Duke University and the Research Triangle, North Carolina, Carolina State, North Carolina State.
My dad was a hard worker. He used to do side jobs.
That area. Anyway, if anyone knows anyone that went to school there, I'm looking for a good restaurant or two. We're staying at the Hilton right on the edge of campus, so that'll be really nice. So I won't be here, but I will be trading and monitoring in Slack. All right, so you just won't be able to hear my lovely voice. Okay, so I'll share a few things with you, what I'm thinking at the moment. Shortly. Let me just get everything set up here before we get started.
We only own that. The 8th best life science food. We don't need to own that. Give you 100 names, make it, design it in a way that should outperform every year, and then you basically have a far superior strategy. And again, like I said, we have a track record of alpha. I know most managers outperform the market every year. Yep. We've outperformed 15 of the last 16 years.
All right, we're open. We are open. First 15 minutes, not doing much of anything except taking profits off the table. Watch the markets for any further dippage. Looking for a bounce.
Well, there's a lot of AUM there to chip away at.
We're on for all of it.
All right, love the confidence of the strategy and the performance to back it up with the launch. And we'll definitely keep in touch, David. I love the macro thoughts as well. Appreciate it.
All right, thank you.
Absolutely. David Drew joining us from T. Rowe Price Investment Management. TCAF is the equity long-only fund. We're going to go straight into the market here because the opening bell just rang and the market's looking a lot better than it did about an hour ago, probably thanks to the bond market's response to GDP. Even though we printed 4.9%, as Kevin mentioned, the consumption expenditures, the inflationary component, a little bit light, and suddenly you've got some risk appetite coming back into this market here.
All right.
That's all right.
Watching the markets.
We're trying to come back to even now. We're only down about $5 in Meta after touching as low as 287 earlier. So 283 actually was the first tick after the earnings. Still more movement though to get through, and a lot of stocks
looking for a bounce in the markets.
Investing from the Chicago newsroom of the Schwab Network to talk about a few other movers here. And Jenny, we've got two both down, one more extreme. So let's talk about Align first, the maker of Invisalign. Down 22%. When we were going through these numbers last night, they weren't pretty, but I was arguing that they still have a very dominant role in the industry. I guess I was too flippant about it. The market is like in panic mode on this stock.
I think a lot of the selling can be attributed to the earnings.
All right, sector-wise,
Fairly negative. I completely agree. I mean, we saw quarterly earnings.
we have about 60% green, about 35, 36% red, and we got a few percent unchanged. Biotech's unchanged. Semis, seeing some buyers on the semi side.
They said dental practices and industry research firms have reported deteriorating trends, including decreased patient visits and increased patient appointment cancellations, along with fewer orders.
Tesla, looking for Tesla to bounce.
So as a result, then for the full year, they did guide
Bitcoin did dip down to 34,000. It's rallying off the low. Netflix, watching that for a follow through. Nvidia, looking for a bounce.
Difficult quarter, but do acknowledge some reasons to be optimistic now looking ahead, saying that looking past this volatility we're seeing in reaction to the earnings and focusing on fundamentals, there were still several bright spots in the quarter, which should give them some confidence in the mid to long-term potential of the overall stock, and they do rate it at outperform. This name does have an average price target right now among analysts covering it of $370 a share. So, I mean, nowhere close to where we're trading, and shares were up 20% on the year into today's report. So now, I mean, giving up a lot of that strength, really, really negative move to the downside. But I just
Tesla looking for more bounce. Okay. S&P.
That is not something that you want.
Yeah, I guess lower the bar as much as you can.
Okay, we're getting a little bit more upside follow through now.
Looks like investors are trying to jump off what they see as a sinking ship for the near term. Love that there's still some analysts holding on to hope, but we'll see how long those price targets last. Ugly move here. Okay.
Looking for a little bounce to continue. S&P.
Not as dramatic on the year. UPS, the delivery service that's been lagging so far behind FedEx, embroiled in more labor.
Okay, looking for more. Okay, it's still early. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Thursday, the 26th, 9:34 a.m. Tick cumulative, we have 1.6 to 1 up volume. So just assume this is shorts covering for now. I would assume that most of this is short covering. We got 1.7 up on the NASDAQ. Tesla, no follow through yet. Tesla.
That was one bright spot. Net income fell to around 1.13 billion. That was down from 2.6 billion a year ago. Adjusted earnings per share expectations. Revenue was down 13% on a year-over-year basis, which marked the fifth straight quarterly revenue miss. Domestic package revenue declined about 11%. Average daily volumes fell 11.5%. And international package revenue was down about 11%.
So with UPS down a bit, many are thinking Amazon. That's going to weigh on Amazon.
Now for 2023, they did cut their revenue outlook primarily to reflect these global macroeconomic concerns. They did reaffirm their full-year dividend payment expectations of around 5.4 billion, but cut their expectations for share repurchases to approximately 2.25 billion from around 3 billion. So as far as year-over-year figures go, I mean,
All right, most sectors, about 55% of sectors are green. We got a few more going red. Consumer discretionary is flat. Staples are flat. Semiconductors could be the area to focus on today. It's a little early. NXPI in the top 5, NXPI, Lam Research, CLAC, KLAC, ASML. All right, ASML, nice little bounce. Yesterday, Cassava Sciences had some bullish news, approvals. All right, looking for that to follow through.
Ordering everything online.
Yeah, good point. Seems like there's some real structural changes.
All right, let's take a look. See who's leading the markets today.
Just kind of dropping off the chart here a bit. Thanks, Jenny.
Okay, so it looks a little better. A lot of green and utilities, materials, and real estate. Industrials reporting this week looking better. Financials look a lot better than they have lately. Technology looking a little better.
Southwest RCL, let's go there. In the category of companies that already have been doing poorly, but are getting a little bounce. Southwest, maybe one of the few, but I mean, 80 basis point rally after a slide from 40 bucks to 23. I mean, it's still one of the worst airline performers out there.
Yeah, definitely. It's actually recovering from pre-market trading. We actually did see it down a considerable amount here. So we are seeing some buyers coming in, and that's because of their mixed earnings announcement as well as their guidance moving forward. They actually did report revenue coming in at $6.5 billion, below the street's expectations of $6.57 billion. So we did actually still saw revenue increasing 4.9% on a year-over-year basis. The adjusted earnings per share the number came in at 38 cents. That actually did meet expectations. And when you're looking at quarterly net income, that came at $193 million here. But the problem that we actually did see is the load factor number here. The load factor actually came in at 80.7%. That's actually down from 85.4%. And we're also, that also missed the estimate to 83% here. So we are seeing a little bit of a decrease when it comes to travel demand. Now, the revenue for available seat mile actually increased for the quarter here. But once again, they kind of also reduced their outlook when it came to capacity expansion for Q1 2024. Now the new forecast is 10 to 12%. That's down from the early estimate to 16%. Now, but we kind of had this conversation about a week or two ago. We continue to see a lot of these promotions, and a lot of them are fairly cheap. And what we can kind of like infer from that is demand is weakening. So they're going to actually kind of change up their schedule going into next year to try to right size the business at this point in time. We continue to see some headwinds when it comes to labor costs as well as fuel costs. Fuel costs has increased rapidly over the last couple of quarters here, and that's actually having an impact on their margins. When you're looking at the stock, it's not really good performance even on a 1-year basis or even if you look at a 3-year basis. So it's catching a little bit of a bid today, not really that surprising compared to where it has been. In the past, it's really trading at a key area of support, whereas we actually broke through, let's say, the $21 level. And we're talking about a very cheap multiple for an airline company that is considered to be one of the best in the United States.
Okay. Yeah, the crude price dropping here again this morning, I guess, helps, gives it a little shot of life too for this whole sector.
Potentially. So the problem that we've seen when it comes to jet fuel is actually the refining blend is really not there. So even though we are seeing a decrease when it comes to prices for crude oil, the type of oil that's needed for jet fuel, heating oil, distillates, things of that nature is still in short supply. So that's why those prices have stayed elevated and have been able to weather the storm when we talk about some of this volatility. Now, it might provide a little bit of downward pressure, but I don't think it's going to provide as much as maybe the market would think, just because of the refining structure that we have in the United States right now.
Okay.
We're just been letting the markets settle down.
Still not getting much love from the street, despite it seems, not the worst earnings. Like, it's okay. I get it. Maybe like the initial thrust of the post-COVID travel boom has run into a little bit of speed bumps, both from kind of consumers' ability to pay up for those super high prices that the airlines are demanding, and then the airlines kind of running into a few of the kind of macro headwinds.
All right, 4170 is a support level.
Just such a brutal chart for Southwest, and a big difference between that company stock performance. You know, and Americans down there too with Southwest, but you still have a little hope. You know, maybe in like a Delta's like the last one standing. Maybe not. I don't know. The list is low now. They're all basically at 52 weeks or below. 52 week lows or below. So the whole thing it's really falling apart. How about the cruise lines? Because
All right, looking for a higher low.
and of course they're very different. Obviously, one flies, one floats. But the chart sure looks a lot better for RCL.
Yeah, definitely, especially coming off of a very low base here, where they're actually really getting into their stride post-COVID, and we are also seeing the impacts of China reopening, some international travel continuing to expand here in certain areas of the market, and you can see that reflected in their earnings. They actually had adjusted earnings per share of $3.85 a share. The estimate is $3.46. They also beat revenue estimates as well, reaching $4.16 billion.
All right, SPY trying to make a higher high. S&P on the move.
5.5% on a year-over-year basis, and you're seeing onboard and other revenue actually increase by 25.4%. So what does that really translate to? That just shows that they have pricing power, or they have been able to increase prices throughout this whole COVID-19 reopen phase, and then continue to see the impacts when it comes to the amount of people that are starting to increase their travel when it comes to the cruise lines, and they're not lowering those prices. So that's going to drive top line growth.
All right, Tesla a little bit lower.
And that's what they're really seeing right now. In the face of some macro headwinds, like
All right, we're still waiting on the markets to settle down. Get a good read after about 10 o'clock. Okay, again, we have strength in utilities, materials, real estate, industrials. A lot of the tech stocks are higher after drubbing yesterday. So shorts covering most likely to begin with. Let's see if we can kind of get any follow through. If we get a follow through, we'd be looking for it in the major indices like the New York FANG index. Okay, so we'll see a bounce there. We're at support. Either we break down or we bounce.
Well in advance, 3 months, 6 months, even a year out. So they're able to really kind of pinpoint. Yeah, they're able to pinpoint what their travel demand is going to be, and if you cancel those particular tickets, they also are going to make a little bit of money when it comes to those cancellation fees. So they could see out a little bit more. I'm not sure how quickly the consumer is going to be able to adjust or really, adjust their spending when it comes to cruise lines here in the near term. It's kind of an uncharted territories, if you will, because we've never had a pandemic like this and a robust cruise line industry like this. So right now, once again, they're kind of still a little bit more bullish on the marketplace. It appears that the consumer can be stretched, but want to also experience the cruise lines at the same time. It's a very interesting dynamic, but it seems to be playing out, at least for Royal Caribbean.
Well, it also seems like, to your point about their free cash flow improvements that they've made, being able to provide a little relief to their debt burden, that's crucial too. Because, I mean, look, I'm not going to lie. 3 years ago, when we were in the middle of the pandemic, I wasn't convinced these companies were going to make it through for various reasons. It was totally unknown how the public was going to respond to them proving again that there is a greater risk of getting sick when there's something like that event happening in a contained area like a cruise ship. Then there was also, of course, the debt issue. How is their balance sheet going to be received by Wall Street? And yes, it's worse than it was, but we've already seen the numbers.
All right, here's
Popular as ever. People are completely
the New York FANG index.
What kind of sentiment was attached to.
Okay, so these 10 stocks we're watching
It's amazing, frankly.
for more follow through. So far, we've got 1-to-1 up volume. It was about 1.6, 1.5 on the NASDAQ, 1.3. Important because we want to see what institutions are up to. Tick cumulative is trying to turning sharply at the moment. Tesla, no bounce.
How about MasterCard? Let's talk real quick about consumer spending. 3
Yeah,
weeks
well, we
now,
kinda
the
got a-
stock has been pulling back.
Yeah, we actually kind of got a little bit of a preview when it came to Visa's earnings, and MasterCard kind of matched those same type of sentiments here. We actually see Non-GAAP earnings actually coming in at $3.39. That beat the street's expectation by 18 cents. We also had revenue coming in at $6.5 billion. That's a 14% increase on a year-over-year basis. But they didn't miss expectations, but it was really small. It was around $30 million here. Now, purchase volume actually did increase once again because of the strength of the consumer by 12% on a year-over-year basis. And when we're looking at just some of the components when it comes to their spending, 11% growth in the gross dollar volume on a local currency basis. They had a 21% increase, Oliver, for cross-border volume. We've had this kind of conversation over the last couple of days. Huge tailwind when it comes to a lot of these card processors, and then 15% increase in switch transactions. So they've expanded their footprint when it comes to
Okay.
but they're also continuing to see the benefits of cross-border travel, the international travel that we've been kind of talking about here, and the strength of the consumer. And once again, this is more of a technology company. We don't really have the credit risk that some of these financial companies have, like banks. And
No follow through yet.
So they're able to
Semiconductors still in this descending channel. S&P still in a descending channel. Looking for a bounce. Most people are thinking bearish at the moment. We're right at that lower trend line. We're at a previous breakout level where we started the year and the breakout in May. We're right at that level right now.
Last one, real quick, let's talk IBM. Kind of a sleeper tech performer this year, Kevin, and it kind of continues. They retained their positive performance in 2023 after earnings. And for IBM, I feel like that's still a pretty big deal after so many years of disappointment.
Yeah, definitely. Actually, a lot of legacy tech companies are starting to make a little bit of a comeback. IBM is no different here. They did beat on the top line here. Revenue came in at 14.
Bitcoin still bouncing.
He was looking for $14.77 billion, and the adjusted earnings per share came in at $2.20 versus the street's estimate of $4.
Stocks that are hot today on the S&P 500. ServiceNow. They had a big contract with the military, I believe. Rollins, AMP, looking for a bounce. Worley Automotive. Raymond James Financial. Nice little bounce, but fading. The financial's doing a little bit better today. Keurig Dr. Pepper on the bounce. Masco. All right, nothing really jumping out. Dow Jones, IBM, gapped up after earnings. IBM. Okay, looks like S&P wants to push a little bit lower now.
Not necessarily, I guess, at the top of the list still, of course, but one that should be part of the conversation. So
Tesla testing the low, the previous Friday low. And the Monday low right in this area. Tesla. Not much to do at the moment. If you're looking for quality names on a discount, keep an eye on Google, because Google probably going to take a couple of days to base, but I'd like to start a position in Google. You can see waiting makes sense because we're another $5 lower. $6 from that open on the gap down. So do we get a doji here? Still nothing to do. RSI is oversold now. All of the indicators are setting up, resetting.
You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week. Schwab Network.
All right. Bitcoin Still trying to push back towards that 35,000 level. We're at 34,003. Keeping an eye on that. Google. VIX at the highs at 2091. IBM. Gap and fade. Looks like people are taking profits wherever they get them and just calling it a day. Merck, nice move on Merck. Nice pop on Merck.
Available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Merck's on the move.
Stock market's hanging in there this morning after bonds had a very passive response to a real nice GDP. Of course, there's a problem in tech and comm services as Meta's down. Let's get into the numbers. Talk some more details here about Mark Zuckerberg. Shares lower by about 5%. James Dimmer here with me in Philadelphia, founder and chief investment officer of Main Street Research. Loves talking specific names with James. Good to see you again. Good to see you, Oliver. I do love talking about this stuff. This stock too.
All right, VIX still at the highs. All right, so yields are problematic. We know that. So as long as the yields stay up here, they were at 496, 497 this morning, 4.98%. So we need to see this fade. We still haven't accumulated a fade. We're just sitting here at the highs, consolidating. Looking for distribution up here. If you locked in 5.5% or around that level on your short-term 3-month CDs, you probably got the best level, I'm thinking. Some of you think that the yield's going to be much higher. That's possible. No debate there.
And it ended up reporting 40% profit margins. Those margins have expanded. And at the same time, and I think this is really important for investors, the ad revenue has accelerated dramatically. And one of the reasons that Meta talked about this in the conference call is they're using AI to really lure in more retailers for advertising. And it looks like it's working. So this big
all right, so we're going to test the low again. 415, that was the level that Money Magic was looking at yesterday. We got it today. Nice job, Money.
We got to clean up shop here, dial back how much we're spending. Then at the same time, there is kind of a broader implication. It seems a lot of these.
Yeah, I think, Scott, I think the max low 159 to 160.
Is this new phase for these companies prioritizing profit instead of big top line growth? Can it get them to record prices?
I think you're right. Zuckerberg was the grown-up in the room. He cut costs way before anybody else, and that's why the stock really took off earlier than a lot of these other companies have. But the market is obviously expanding. One of the most important parts of this, but you can't just grow by cutting expense. What you really have to do, you have to also cut expense and also have some accelerated growth from the other revenue. And I think that yesterday's report, again, I think investors are just not understanding this correctly. That ad revenue is accelerating. They're using AI to get more. And think about it this way: a third of the world logs on to one of their platforms every day.
Yeah, it's amazing.
It's amazing.
I mean, it's amazing. I kind of think about them almost as like maybe the new telecoms of the era. Like, does Facebook become like a dividend?
All right, so the 10-year yield up at the highs. I'm thinking distribution. We haven't followed through. It is a bullish trend. We seem extended, but a lot of people are looking for above 5%. Some are looking for 6%. My 2 cents is that the time to get into yields is when we broke above this 4%, 4.1%, right around this area. after we broke out of this base around June, July, and riding that up.
It's not. In fact, they're growing. And if you look at PE versus growth, one of those metrics I love, they're growing way higher than their less than 20 multiple.
Many believe that rising yields have less to do with economic growth and more to do with inflation and with the uncertainty of what the Fed's going to do, and all that boils down to, so the bond market obviously dwarfs the size of the S&P the equity market by about twice. It's about twice the size, a little bit more than twice the size. So it does have an importance.
There's always option premium in Meta just because of the movements that we've seen, even though we saw that bow crush post earnings with this sell-off. Stock's still up, nearly 140% so far this year. But I looked at a strategy here to James's point. If you still want to own it, this strategy might work in that type of environment where, hey, let's sell an out of the money put here, where it still gives me a little cushion to the downside, but it's a neutral to bullish type strategy. So I looked at a cash secured put here in Meta Platforms, and I went out to the November monthly cycle, so just 3 weeks till expiration. And this is one of those strategies you can do repeatedly.
More downside. All right, we're going to come back and retest.
Time frame. You've got a lot of different option series to choose from, but I chose the November 17th monthly cycle, 22 days till expiration, and just selling an out of the money put. In this case, I used the 275 strike put. You can collect roughly about $6.50 credit on that. I think it's closer to $7 right now. The stock's currently trading, basically about 283 at this point. But if you collect the $6.50 credit on it, that takes your break even down to 268.50 to the downside on this one. That's about 5.5% below the current share price in there. So while you're taking that bullish stance, you're willing to own the shares if it goes below 275 at expiration, where you have to purchase the shares. And if it doesn't go below 275 and still trading above that, you get to keep that hefty option premium of $6.50 that you're collecting on this one. So this might be the way.
Tesla still no bounce.
If you think that it's going to rebound or at least consolidate after this sell-off today.
Yeah, I like the technical choices. Strikes.
All right, 10-year yield. S&P still drifting a bit lower. Searching out buyers. We don't have that many blocks trading today. Again, we got 3 on the IWM, 2 on SPY, and 3 on the Qs.
The big difference between Meta's chart and Amazon's chart is Meta was just putting in almost back to the highs, but Amazon still has those lower highs. So we could argue that even after its big bump this year, it's still trending lower. Why do you think that is?
I think investors are a little worried here. It's the highest multiple stock in the group of the fabulous 7 or the magnificent 7, and I think that's what makes investors a bit nervous. And this AWS growth, the cloud portion of their business, I think investors are concerned about Microsoft, these other companies coming in, and that's why I'm very curious to see what those results are.
All right, VIX set the highs, 2106.
You don't have quite the same level of enthusiastic optimism for Amazon as Meta.
Well, there's a lot more going on with cost cutting at Meta, which really caused those margin concerns.
Okay, more downside. Coming back in and testing the pre-market lows. SPY testing pre-market lows.
That's pretty significant. Otherwise, investors may be disappointed.
Microsoft showed a little return to accelerating cloud growth. I guess that's kind of the bar now for Amazon in a way to do something similar.
Yeah, I think that Amazon's got a big bar to, relative to the Microsoft story, to try to achieve, and investors are going to be expecting that.
Okay, great. Well, thoughts, James. Tom's got another trade for us. Amazon, before the report, Tom, how are we looking right now?
Well, option market's pricing in about a plus or minus 7% move in the shares post earnings. And we're seeing a real big differential between implied volatility levels and the different options series. So I think a strategy that takes advantage of a move, because we've seen a pullback in some stocks
10 a.m.
years, even though there are good reports. But this type of strategy takes advantage of, hey, if it moves that one standard deviation move higher or lower, you can take advantage of that because you're taking advantage of the implied volatility levels in the different option series. So going out to the November 3rd weekly series, so a real short-term earnings positioning here. And I'm going to buy a double calendar position where I'm going to buy the 112 strike put that's out of the money to the downside. And then on the upside, buy the 130 strike call. And then I'm going to sell those same options in the near term October 27th weekly series that expires in just one day. If you're selling the 112 put and selling the 130 put in that option series, you're paying roughly about $1.10 debit for this double calendar position that takes advantage of a move towards at or near either strike. But you can see here from the risk profile, even if it doesn't go right at or near those strikes, you still have a nice wide range to remain profitable between about 103 on the downside and about 144 on the upside. And so in essence, you're buying on this one in the November 3rd weekly cycle, those options on the call and put side, you're buying about a 75% implied volatility on aggregate. And then in the near term, in the October 27th weekly series, you're selling about 160% implied volatility level. So there's that differential between the implied volatilities that you're buying, which are lower, and what you're selling. You're taking advantage of that higher implied volatility in the near-term options. And time decay or theta works in your favor also because those ones that you sold decay at a faster pace.
All right, testing the low. We continue to show weakness. Looking for a bounce.
Yeah, I like that. As we're just discussing here, some openness to maybe some volatility in this one as they've got some proving to do on that valuation. Thanks for the trade, Tom. James Cameron, thanks a lot for the thoughts as always. Pleasure. Appreciate it very much. James Cameron, Main Street Research. Of course, on Tom White in Chicago. Coming up, let's talk some more old school tech and potential comebacks. We saw IBM holding up. Intel's on deck, and the market's given them a little bit more favor lately, but still has a lot of proving to do. Stick around, we're in hour 2 when we come back.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us.
Okay, so US 10-year. Okay, that's hanging out at 4.9%, 4.91%. So if yields have been the issue and yields continue to move lower, we'd be looking for a bounce. So I'm looking for a bounce at this point if yields continue to make lower highs and lower lows. Right now, just consolidating around 4.91% off the high. Looking for a bounce in the S&P.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest.
S&P still looking like it could be making bear flags, so no obvious bounce, no obvious volume yet. The FANG stocks. Okay, nice little gap up bounce on Netflix. Still, consolidating on Netflix. I was looking at something else. Consolidating for the last 5 trading days, right along this level between 400 and 415 or so. Got positive or bullish momentum. It just no follow through yet. ARM Holdings pushing a bit higher.
Amazon coming up, of course, is the next big one. Trading at $119 right now. Amazon's down 2% going into the report this afternoon. We've also got Intel coming up, and it's actually kind of a fun stock at this point, given that it's up on the year and has been making some inroads, but at the cost of capex and spending that the market generally has still deemed as a catch-up trade to its peers. But it does become a fun story about trying to figure out where there might be some value in companies that didn't take part to the same degree as others in the big tech rally the last year. We're going to be talking about the quality factor, a very, very important discussion in a year where quality has been doing great, living up to expectations.
Okay, Broadcom. That's had a couple of good days. Broadcom. Let's see what the.
So far, that has generally lived up to the truth and expectations. We're going to be talking some more about the future of advisors with Schwab's head of advisor services. We'll be catching up with Bernie Clark here. And then
Today we're off a bit.
A couple other earnings responses.
So right now I'm just watching for these dips to start getting bought. Tick cumulative is turning. We're 1-to-1 down volume now. I'm looking for a turn. Tesla starting to turn. FANG stocks. Microsoft giving back some today. Microsoft. Google's off another 350. Microsoft's off 6. Tesla's off 3. All the FANG stocks are lower except for Netflix. Netflix is flat. Slight profit on Netflix.
The mega cap tech trade isn't working at the moment, and it was really what was working in the first 3 quarters of this year. You look at sort of the market breadth today. You see 287 of the S&P 500 names higher. You see 43 of the NASDAQ names, NASDAQ 100 names higher. You wouldn't necessarily think that the numbers were that bad.
Tesla's starting to turn. Watch Tesla. Starting a lot of volume on Tesla.
But let's say a pretty steady downtrend for the last few weeks, if not few months, particularly the NASDAQ, as some of these names from Apple to Meta to Microsoft have started to falter a little bit. And today Meta is carrying that weight on its shoulders.
All right, watching Tesla. A lot of volume this morning. Looks like shorts covering. We're off 3.5. S&P, no follow through. I don't know if they're looking for another flush first. We're below 315. SPY 315. All right. 10-year. Man, 10 years being a pain in the butt. 10-year. 20-year. 5.27%. And the 30-year.
In the right direction to offset the big cap moves. Banks are positive on the day.
30-year is 5.07.
I mean, what do you look for here, Alex, over the next couple of days? Because there was a lot of drama getting built up into this, and it kind of seems like we're stalling out a little bit this morning. Is that just because we got GDP out of the way?
It's certainly possible, Oliver. I mean, I think the mega cap tech earnings are going to dominate the actual price movement over the next few days, as they have the last few days, from Alphabet disappointment to Meta, as we talked about. But we're still watching data. You mentioned GDP. I'm watching pending home sales as well that just came out. And while we talked about new home sales yesterday, Oliver, pending home sales, while modestly better than expected, really not a record-breaking performance. Let's say it's just off record lows, to be honest, as we look back at the survey from the National Association of Realtors in this space. What they see is a modest 1.1% increase month over month to 72.6. What they also mention is the fact that 71.8, which is what we had last month, as well as the depths of the COVID uncertainty, are the lowest points on record going back to 2000. The chief economist of the...
Yeah, Corey, NIMO was minus 44 yesterday. Minus 44, minus 46, something like that. I see minus 50. That looks like... that might have been Friday.
price. So when you hear that, if you're a prospective home buyer, nothing's good.
With a lot of people looking for a crash or a big drop lower, I'm anticipating the opposite, but I don't see the evidence yet. S&P is trying to bounce. We're off 0.6%, 24 handles now. Futures down 26, looking for the bounce. Momentum indicators are shifting to more bullish. Tick cumulative, change in direction on the 60-minute. Anybody's guess. It's just pretty risky right now, so we want to see more evidence. All right, Tesla just moved above VWAP. Tesla moving above VWAP. Okay, see if this follows through. Volume on Tesla continues.
Completely concerning, might be softened by a positive Amazon print. But of course, Amazon can go the way of Meta and go the way of Alphabet as well, and add insult to injury.
All right, we're getting a little bit more interesting here. Kind of starting to pick up some momentum to the downside again. NASDAQ now down about 170 points, which is back to where we were early hours of the morning. Dollar also, by the way, caught a pretty nice little bid there in the last half hour. So maybe some
Apple reports next week.
Russell.
What, on Thursday, I believe? FANGs. Mostly weak. Nothing to do at the moment. A lot of discussion about, well, they led this entire move higher. So if they can't follow through, that's going to put the market more at risk. But there's a lot of I was listening to some conversation which made sense. Let's take a look at a couple of things. Let's look at XLB materials. Okay, so something to note. All right, let's go 1 year, 2 months so I can see October. All right, so some sectors are already starting to, move back towards lows. Materials isn't here yet. XLV, no, that's okay. The October low is only a few, maybe 15, 20% below. That's XLV. XLY, consumer discretionary. A lot of people talking about the S&P, revisiting October lows. Consumer discretionary is still fading. XRT, retail. October lows, not too far off the October lows, retail. XLC, communications, have been trending. We finally broke yesterday, broke that trend. Now that Meta is out. Okay, looks like Meta, you're going to have to give Meta a few days before you do. I wouldn't be doing anything with Meta at the moment. I'd be waiting for buyers to show up. That'll be obvious when a base forms and we don't make any new lows. Like yesterday, we were talking about Google. That Stephanie Link bought some Google at here, 125, 120, in the 120s. Now it's moving lower. So she'll probably keep buying. She's probably scaling in. Apple is at the 200-day. Does it bounce? Earnings next week. IBM reported. Doji for now, so that's looking pretty good. Nike, we talked about Nike over the last few days. Nike didn't make it through. It got rejected. All right, so there's a lot going on here. Back at the end of September, Nike was almost back to the October low. XLF, financials. Okay. What I'm looking at is where are we in reference to the October low? A lot of people talking about revisiting the October low. So that's the only reason I'm doing this. XLI. Still holding up fairly well. XLP, consumer staples already made it to the October low. So think about that for a second. All right, we've already had the bear market. We hit the lows in October, and consumer staples have come all the way back. Looking a lot better in terms of risk reward. Okay, so we've already gotten back to this level. What's XLU had quite a thumping as well. XLU made it below the October low. So what do you think XLU is going to do? I like XLU. I like the idea. Okay, it's at the high right now of the day. XLU looking pretty good.
Neutral bias. I'm gonna really play it with the iron condor. I'm gonna sell the 40 call, simultaneously buying a 41 call, selling a 25 put, simultaneously buying a 24 put.
All right, so XLU with a nice reversal, breaking above the 21 day, 50 days overhead.
And then a higher break even of 40.09, which is very close to 40.07.
Okay, so look at XLU referencing.
I just don't see a lot of movement outside of this range, as I mentioned, and I think that will continue.
Okay, so two spreads on this, and a stock that, I mean, has been choppy, but at least since the summer has been pretty range bound, hoping basically it stays there. So a big move in either direction then would hurt the trade. Or
all right, so this looks pretty good. XLU for the follow through.
Either way, I think right now I'm just looking for an opportunity on either direction. I think the stopping points would be
what do I want to do here? Okay, so I'm just sitting here watching the markets. Are we going to bounce? I think we're going to bounce. NYSE just went green 1-on-1, 1-to-1 up volume. Tick cumulative is trying its hardest to cross over. Still no crossover. We got 1.5-to-1 down volume on the NASDAQ. Some tech stocks look okay. This is what it looked like about a half an hour ago. Here's what it looks like now. I'm going to update this. Okay, a little bit more red in the cyclicals, Amazon, Microsoft, Apple, NVIDIA down. But all of these over here, consumer staples, utilities, materials, this is the area to watch. These are doing well. All right, so it's 10:20 on the East Coast, the best coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. A little weak. The market's a little weak, but looking for a bounce.
Young lady who was mid-30s, couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom.
Consumer staples look good. Financials.
Children, including myself. And so once the client knew that she was hurt, we were able to help them. Your clients don't care how much you know until they know how much you care.
Okay, so let me see. XLU. All right, so XLU. Let me look at this.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
It's up 2%. And look at this hammer on XLU for the month. Look at the weekly. We've just looked at the weekly. Look at the weekly. It's up 3.77%. You think utilities are going to continue to drop off? I got a feeling. I can't shake it. I know that yields probably move a bit higher. Maybe there's a higher probability they move a bit higher, but I also think there's a pretty decent probability they could pull back. Now, at the moment, it feels, and it's from what I understand, yields are moving higher, not because of a bullish or a robust economy, but more about inflation and about the indecision in the face of what is the Fed going to do? And, the dollar hanging out. Where's the dollar anyway? Let's take a look at the dollar. So yields more than likely going to stay strong until they don't. And because the yields moved higher, a lot of investors, value investors that buy XLU and utilities for their dividends and their yields jumped out of that trade and bought short-term treasury yields, short-term treasury bills and bonds for that yield. Corey was saying he locked in a year CD at 5.8%. So that's great. 5.8%. Safe. Principal is safe and you're making 5.8%. That's really cool. American Tower with a big beat. Okay, so thank you, Corey. American Tower. Wow, that looks really good. Yeah, I like that. I know Scott B, not Scott Z, Scott B. I think you have AMT, right? Nice look to it, AMT.
Smoother ride for investors, and that's actually ultimately our goal.
Do you think that has been tied to interest rates in a way as a catalyst to creating awareness among investors that they?
Okay, SPY, S&P, still no follow through yet.
It has, although it's been so focused and concentrated that it's been a bit of a divergence in some levels of quality. Like one of the ways that we look at quality will be to look, S&P does some quality rankings where they rank companies on sort of a letter grade basis based on consistency of earnings and dividend payments. And if you look from that perspective, A plus, A minus kinds of companies on an overall level have underperformed slightly lower quality businesses this year, with the exception of those really large sort of outperformance companies like NVIDIA and some of those. But those tend to be more momentum plays than they are sort of that quality look, especially if you look at what happened to some of those, the Magnificent Seven we're also used to. If you look at what they did in 2022, they were all down dramatically.
Yeah.
So being up in 23 is really more of a rebound than maybe a big shift. I think we're seeing more quality come into play more recently as there's more recognition that interest rates are going to be probably higher for longer. Inflation's proving to be a lot stickier than originally thought. Obviously some of the other geopolitical concerns. I think there's a subtle shift moving towards quality, which has been reflected as the markets have begun to regress after a huge first 6-7 months.
A product question for you, given where we are, given that advisors are right now trying to figure out how to navigate that environment product-wise from an equity standpoint. With the mutual fund that you run as a stock picker, how do you compete with the kind of just set it and forget it ETFs that go, all right, we've got a quantitative quality factor, we'll go and we don't even need to think about it?
Yeah, I think one of the things we've noticed over time, certainly there are some, qual ETFs, as you noted. The difficulty there can be is that in order to load on the factor heavy enough, the one thing you may see is you give up actually some of the downside protection that an active stock picking type portfolio like ours might provide. You may or you may get the converse where you load heavy enough to make sure the downside protection for quality is there, but then you end up giving up some of the upside because you over diversify from an indexed ETF perspective.
So you kind of end up getting a little index kind of market cap drag.
Okay, looking for a bounce. All right, if the shorts start to cover and money comes in and starts buying this low, what we were looking for yesterday, we were looking for today, monetization of puts to help propel us higher. That's the way it'll start anyway. Okay, so we would S&P, SPX, sorry. Okay, 41.75. Looking for a move back above VWAP. We just continue to make these lower lows and lower highs, so that needs to change, obviously.
It does make a difference, but you have to be patient through those full economic cycles.
Let's talk some of the stocks that you're watching right now. One that just reported KLA-10 core yesterday, and kind of the broad chipmaker conversation is so integral right now.
Yeah.
Stock picking perspective, from a market perspective, really the pillar that was holding up the market because of NVIDIA. And then some of those suppliers like a KLA-10 core have now gone a little stagnant as we're trying to figure out what happens next.
Yeah, but they're cyclical to begin with. I mean, I think that the entire semiconductor industry, we've known that. Everybody knows that it's a very, well, I shouldn't say everybody, but general knowledge would show that it's a pretty cyclical industry. It's going to go through ups and downs. Because of the capital-intensive nature of the industry, you have to put a lot of capital in place before you may see the returns. Clearly, we are in a I'd say we're in a new cycle for that industry as chip demand continues to increase. But a company like KLA maybe is a little bit of a different position than, say, a Texas Instruments or somebody like that, because
Which just got blasted on earnings.
right, and it's with KLA, 20 to 25% of that business is actually a servicing model.
All right, so we got a little bit of short covering. Every time we see one of these little green candles,
Yeah, it's absolutely services the recurring piece of it, service and maintenance.
we need to see a follow through. All right, so we got a little green candle here on a 2-minute chart, 1-minute chart, whatever you're following. Do we get a follow through? All right, so it's the follow through I'm interested in. The first green candle is just shorts covering. You know that, or can assume that at the lows. If we get any kind of follow through, that's what they're watching for. If I'm short, that's what I'm watching for. Is there any follow through? If it is, then I'm going to take more off. As it continues to rise, then I'm going to take more off. And puts will start to monetize. The dealers can close their short puts and start to look for a bounce in the underlying. So that's what's starting to happen right now. Okay, so good work.
For us, we'd like to choose sort of the best of the best in these areas. Now, we look at applied materials. We've looked at ASML, actually, we have a global strategy. ASML is a new addition on that strategy. So there's ways to look at all of the entire makeup of the companies in these spaces. Our desire, with a focus on 25 to 30 or 25 to 40 companies, try to find the best of the best in each of those industry verticals. Because obviously, from a sector perspective, it's a much broader definition. We really look at it more on an industry diversification perspective, and then try to make sure we're in the number one or number two player in those industries.
To the point, one other stock I want to make sure we hit that you like is Pepsi.
Yeah.
Are they the best of the class, or is the class going away with all the diet pills?
Yeah, the GLP-1 debate
Market
has
is
been
really freaked out
I
about that.
think that I'm not sure I'm the only one that's going to say this. I think the market, the stock market has always played a bit of a draconian scenario game when these sorts of situations happen.
Well said. I like that.
And I think that's what's happening here a little bit too. There's a lot of information that still needs to come out, and a lot of time that needs to pass before we see just how much impact you'll see from weight loss drugs, how many people are actually on them, how many people stay on them, how affordable they are. There's a lot of pieces there that haven't really been put into play. In the meantime, Pepsi can be a easy snack opportunity, and they've had 6 straight quarters of double-digit price increases. It means they're responding to the inflationary aspects of what's happening in a pretty constructive way without eroding their volumes too much. Very steady. Maybe a bit of a buy opportunity just because of the oversensitivity to the Ozempic GLP-1 theory.
I like the way you put it. The market's draconian tendencies to kind of try and price out those.
All right, so if you're thinking long,
Absolutely.
there's a couple of things I'm thinking. Into noon, what I'm thinking is, can we get up into this area? If so, if we can get above VWAP and 41.75, I'm thinking about some credit spreads, put credit spreads on the S&P, selling something close to the 4,200 and buying like 5 points above that, 42.05s or 42.10s for credit. Tomorrow's expiration. So I'm thinking about a credit spread, but we need to get a little bit more follow through.
You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure
Tesla testing. Tesla testing the previous low right here at 168. Wow. Oh, that's Apple. Sorry. I need to shift gears here. Tesla did bounce. We had some volume coming in. Tesla could get some. This is what I'm looking for on the S&P. I look for, shorts to cover and then follow through buying, volume picking up. You see this volume picking up here? That's what I'm looking for. Now, still too early to tell what they're going to do here, but it looks to be maybe a flat VWAP. If that's the case, then we could look for maybe 213 upside, 206 downside, just chop in a range. But I'm looking for this kind of action on the S&P. We don't see that yet. S&P, nice little follow through, shorts cover, but doesn't make it very far. And the block volume is still pretty low. We're still trading 1-to-1 up volume. I'm looking for the evidence. I'm looking for the weight of the evidence. Right now, I don't see it. They're not trading. I don't see it in blocks. Almost feels like they want to flush it again. Some stocks like AMT, this looks really good. Corey, thank you for bringing that up. Utilities / real estate, REITs. That looks pretty good. XLU looking for a follow through and a break above 61.
Great to see you and great to be here in Philadelphia.
Absolutely. Thanks for joining us. Thanks for having us here. What's the big kind of talk of the town this year versus when we spoke last year at this event?
It's a different year. You know that well.
Yeah.
We talk about it all the time, and advisors are those guides within these difficult markets. They actually do quite well when things turn difficult. Clients need that kind of help. Really, comes along with it. But we've also seen the landscape change around investing an awful lot, right? Higher for longer. You started the segment by saying that. It changes how people will think about their portfolios. It reintroduces, to some degree, I think you might agree, the portfolio is a bigger part of the conversation. Whereas for many, many years, it was a little bit quiet, right?
Absolutely.
All right, bang stocks. Until we get these to motor higher, that's going to be difficult. We got a couple. Meta's starting to find buyers. Meta shorts covering above VWAP. Shorts appear to be covering. It's above VWAP. Meta. Check out Meta. To be very clear, I'm very cautious at the moment. All right, I'm just watching. We need to see more. We need to see some shorts cover and more of these FANG stocks turning up like this. Look at Tesla. Okay. Tesla, higher highs, higher lows. Volume is still coming in. But every time we push it a little bit, we get a little bit of profit taking. So they're quick to take profits. Snowflake coming off the low, trying to get above VWAP. Google, Stephanie Link buying some Google yesterday, a gap down another. It's down 3.5 right now. Netflix still consolidating. Nvidia, okay, downward sloping VWAP. So this is a bearish sentiment for now. Okay. Since midday yesterday, Bitcoin's been fading a bit. Okay. yesterday around, let's see, around 12 o'clock, we hit a high on Bitcoin. And what I mentioned was maybe take some little profits off here because we, for the past 2 weeks, we've accelerated upside, and maybe take a little profits off. And let's see if we can hold it up here. If we hold it up here and start to create a base, then we'll have something to work off of. Bitcoin, I still think there's a lot. I mean, I don't think that's going to change. Once these spot Bitcoin ETFs get approved, SEC lets them, structure the instruments, the assets. Once the SEC allows that, and we see money flow starting to come in, I think the money flow itself is going to create a lot of optimism in Bitcoin. For now, though, you've had a nice run up for 2 weeks. Maybe take a little profits off and sit on that cash. Maybe take that cash, some of the cash, and put it into a 3-month CD at 5.5 or 5.4%, something like that. Apple still drifting lower. Apple's off 3, below 168. Meta still turning. Tesla, let me keep an eye on Tesla. Tesla, can't do it by yourself, Tesla. We need a few more. Microsoft needs to turn. Microsoft trying to turn after a big day yesterday, giving back a lot of its gains. Microsoft back to the breakout zone, consolidated here prior to earnings. Now, this could be distribution up here. All right, so just keep that in mind. If you follow the thought process, okay, over here on the far left, you got distribution. Why is it distribution? Because the next phase is the markdown. That's when prices drop below the 10 EMA. We continue to drop during the bear market, and then we start to move sideways. That's accumulation. That's where institutions start to come in. Then phase 2 starts. The 10 EMA turns up and to the right. Right now, we are in an indecision phase or consolidation phase. After phase 2 is the markup. Prices stay above the 10 EMA. Every time it pulls back over the long run, it continues to find support. Right now, we're moving sideways. Same thing with TRBCX. I talked about ad nauseum. This is getting very close to me just pulling the trigger and taking half of my position off that we started back here in December. Okay, we're still up 34%. Okay, we were up 45%. And that's when we hit the high there in July, and we're just chopping around for now. So I hate to take it off right here. I'm looking for a bounce. But let's say we do bounce and I take it off today or at the close today, because I'll get filled at the close. Let's say I take it off today and we bounce. Well, that's okay. I'll wait for it to confirm by breaking above 145.20, 146. If it does, then I can always get back in. Yeah, I'm giving up a few percent there. That's okay. I want to see the confirmation first. It looks like it's building on the right side of this pattern, but I don't want to give up some of the gains that have already accumulated since December. Some of you have taken this back in December when we first got into it, and it's done very well. So that's Microsoft. Okay, so Microsoft. Oops. Let's look at Tesla. Tesla. Okay. Tesla's below the 10 EMA. So if this doesn't bounce, this could be headed back to a lower level, but it is below the 10 EMA. So you have to be cautious and be very conscious of risk management. You don't want to buy the highs and just hold on to this in hopes that it's going to reverse. All right, Snowflake. Let's look at Snowflake. These are the top 10 stocks or the 10 stocks from the FANG index, New York FANG index, these top 10, these top stocks, about 10% weighting in all of them. You can see what Meta is. Okay, starting to get more of a bounce. All right, so Snowflake. All right, watching for the bounce here. Let me get back to the S&P. S&P. Okay, nice short covering here. That's just short covering. Just short covering for now. I'm sure there's some new money in there too, but we need to get above VWAP. VWAP's flattening out. Still increased risk that we could move lower. So if you're waiting for a reason to get long, I'd be looking for a move above 41.68, 41.70, and then 75. Momentum has changed direction on the 60 minute. So I'm watching that momentum on the 60 minute. Let me show you what I'm looking at here. Okay. 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 All right. Just need to do a little markup there just so I can show you what I'm thinking, what I'm seeing anyway. Okay, here we go. All right, so we're looking for a bounce. Nothing yet. Just a little short covering. Okay, so look at the bottom middle panel. You see that those yellow histogram bars? Now, there's no guarantee we don't start to produce red bars again. But the momentum is shifting ever so slightly. It's on a 60-minute time frame. So right next to it, you can see tick cumulative. It's red, but it's trying to cross over. You can see the fast signal, the beige colored line, is trying to cross up through that red line. If it does, we'll get one more bullish signal. Up in the top, you can see that horizontal white line is right below up-down volume, and we're 1-to-1 right now. 1-to-1 up on the NYSE, 1-to-1 down on the NASDAQ. Okay, NASDAQ just went 1-to-1 up, so there's some buying going on here. Real time, I'm seeing buying going on. I'm seeing that NASDAQ just went green. Tick cumulative. If it keeps up, it's probably going to cross over. Let me just check on the 30-minute. It might have already crossed. Okay, nope, it hasn't crossed on the 30-minute. What about the 15-minute? 15-minute. 15-minute is crossing as we speak. All right, so we need to see more of this. We need to see more than just short covering. If you're thinking about longs, I'd rather be confident and see confirmation than take a trade too early and have this roll over on us, okay? Tesla looking a lot better. Tesla looking much, much better. Whoops. Oopsie. Tesla looking a lot better. Tesla, okay, so Tesla, VWAP is no longer flat. It appears that Tesla is starting to turn up and to the right. Now, this is still early, but it looks like Tesla might be an early win. Okay, Meta looking pretty good. Google. All right, all the fangs are starting to turn. Fangs. All right, the fangs, most of these are turning bullish. Okay, looking good. Okay, even Apple's starting to turn. Apple's starting to turn. Mhm. Okay, looking much better now. Okay, so we got a nice turn. This is what I'm looking at. Okay.
Amazon tonight, of course, I think is going to be the big determining factor for the rest of the group. Let's switch gears. Let's talk boys.
Okay, Amazon, nice little bounce on Amazon. Meta's starting to go. Tesla. All right, look at that VWAP turning up on Tesla. Okay, volume coming in. Look at the volume on Tesla. Volume, Tesla volume again. All right. So far, so good. Tesla, yeah, looking better. Okay, there's still potential for weakness. We saw that yesterday. We bounced and then we faded. We bounced and faded. Okay, we need to break the downtrend that we've seen over the last few days. Let's take a look at a different chart. All right, let's take a look at SPY. All right. So SPY, what I like to look for, not that you have to, but what I like to look for is a break in a downtrend. So right now, we've got a lot of work to do. The 20 EMA on this 60-minute time frame is up here at 420. Okay, let me just zoom out here. So connect the highs, connect the lows. Can we make it back to the midpoint? There's the 20 EMA. The 20 EMA on the daily is right there at 428. Okay. So far, so good. Okay, I got volume coming. This is 60-minute S&P 500 cash. Okay, NIMO is at minus 19, Corey. NIMO. All right, VIX dropping pretty fast here. VIX dropping off. All right, GTO used to always say, send it to Davy Jones' locker. All right, let's send VIX to Davy Jones' locker. Okay, let me go check the 10-year. 10-year, US 10-year, US 10. Okay, so that's making lower lows and lower highs. So long as it keeps doing this, we should see a fire build under the S&P. S&P pushing back to where it once belonged. Get back, Jojo. All right, so all right, let's take a look real quick. Let's take a quick look. Let's just shift gears. Let me go check a look at the Chinese stocks. I see a few of them bouncing, so there might be some trades here. Okay, higher lows. Let's just sort these by performance. Okay, Tour XPEB. XPEV is what caught my attention. XPEV, a higher low. Need a higher high. XPEB. Just looking at the Chinese stocks. Okay, sorted by performance. Futu. Okay, that looks all right. 10-cent music. 10-cent music looks pretty good. TME. JD. Oh, high tech. High tech.
GDP number was hot, and I thought that was the one that really worried me. If that came in, and it was above all the expectations that were out there.
All right, so nice reversal.
Durable goods through the roof again, right? Like it's just really showing massive strength in a lot of these economic numbers out there, and it's just so counterintuitive to what the Fed's telling us they want to see. So pretty happy actually to see some strength in some of these sectors, given that news is out there. I think we have to start asking ourselves, where is good news again, right? If these interest rates stay high and the economy continues to be robust, at some point that has to be okay, right? That has to be good news again. And we're not there yet, don't get me wrong, but if the economy can remain stable through this higher cycle,
All right, VIX dropping off, the 10-year dropping off, and looks like we'll get the dollar to drop off. All right, JD.com. Well, JD really got beat up, huh? GD. New Oriental Education are breaking out to new highs. EDU. You think about EDU, with all the things that have been going on in China, the young people, they've got to get educated, especially if you're primary school or whatever. And with all the flooding and all the bad things going on for the Chinese people, you'd think some of these tutoring stocks would do well. Billy, Baozun, Vips. Okay, so most of these are up. Most of these are up on the day. All right, enough of that. 10-year yield, we need to continue lower highs, lower lows. We need to break above. S&P needs to break above now. Needs to get above these pivots. SPY. Pre-market right in this area, 417, right before the open, 417. Right in this area is where we ran into resistance. Pre-market. And then we sold into into the opening bell. So we're right at resistance right now, SPY. So we break above this level, we'll fill the gap, it looks like. Maybe head for 420 in that area. Palantir, trying to change direction here. Palantir, upward sloping VWAP. We did dip. Need to see a follow through. Palantir. Okay, Palantir. It's a so-so chart, but if you're in Palantir, watching the 50-day right here, if it does start to move higher and volume picks up, that might be a good area to make a note of. 1550. If it does follow through, you can put your stop underneath 1550 or 16. Maybe, what's today? Thursday, tomorrow, Friday. By the way, Friday, I won't be here tomorrow. I will be in the trading room. I just won't be broadcasting. I need to take my daughter to Duke University, and we're going to go check out the registrar's office and all those things, all that good stuff. Can't believe. I mean, it just seems like she was just a baby, you know, how fast these things. And I have an older daughter that's in her upper 30s, right? I think she's how old? She's 37. 37. So speaking of the 30-year-olds in the room, okay, if you're in the 30s and you're thinking to yourself, well, the markets are going to crash. Well, maybe. Maybe the markets move higher. What would make you think? What would make me think the market's going to move higher? Well, this one chart tells me a lot. Okay, we're getting into some resistance right here. I'm going to just shift gears for 1 second. I'll come back to this chart. I want to keep an eye on this. Okay, keep an eye on that. All right, here is the price multiple on multiple expansion and contraction on the S&P 500. All during the 80s into the 90s, 2000, we had periods of expansion and contraction. Expansion and contraction. Why is that? And we're currently contracting a little bit, by the way. We're at 23. Why do we go through periods of contraction and expansion? Well, the baby boomers went through, the biggest wave of the baby boomers, and then the second wave of the baby boomers. I think there might have been 3 waves, right? Debatable. Anyway, the baby boomers went through a process. The parents, they buy a house. Maybe they built a house. Maybe they bought a new Ford Fairlane, 1957, 1960s, a Ford or a Chevy or whatever. So they bought a new car, and companies made money. They make money, multiples expand because investors see, the company making profits. So as the company makes profits, the multiples expand. And at some point, it gets a little bit too far up there. And, we maybe go for a couple of years before we buy something else. I'm talking about substantial stuff. You go into a new house, you buy new furniture, you buy a washing machine and dryer. That was a big deal back then, right? But you go through the same process. Now it's, flat screen TVs and computers and whatever, The millennials have left their parents' house. They went through college. Now they're buying stuff, My oldest daughter, got rid of the car that I gave her, right? Gets rid of the car. She buys something. She gets married. She has kids. What does she do when she has kids? She buys furniture. She buys clothes. Those companies, multiples expand. And we go through this process. The millennials are larger than the boomers. So if you're thinking the markets are going to crash, maybe it will. I don't know. I don't have a crystal ball. But what I can tell you is that there is a reason why the markets can continue to move higher. Is it greater than the force that's pushing us down right now? We're going to go through cycles. You can see through, the 80s, for 20, 30 years, we went through these cycles. We'll go through the same thing. We're only on cycle 2, cycle peak number 2. Looking for cycle peak number 3. Maybe that's in 2024, 2025, 2026. But the markets are going to go through this period of expansion. All right. So I apologize. I've been talking about this and you're not seeing what we're going through. So the boomers, cycles, contraction and expansion, contraction and expansion. The millennials, you guys are on wave 2, working on wave 3. So you're going to buy stuff. You're going to get married, some of you. Some of you are going to have kids. Maybe you're buying mobile homes. Maybe you're going to travel the country instead of being locked down to one location. I don't know what you guys thinking about, but we're going to go through the same process. So that's what we're thinking about. Okay. So S&P, I'm just sitting here. Meanwhile, VIX is starting to bounce a little bit. Okay. We just got rejected. I don't expect this to be an easy task. Tesla, a little fade. Yesterday did the same thing. Tesla got to the highs a couple of times and couldn't follow through. So we're looking for something similar or something different. We'd like to see a higher high, and we got to take out 220. Yesterday we got rejected in the 220, 222 zone. All right, so this is a process, obviously. You know, we've made it down to the lows. We're in some support areas. Let's go take a look at the indices. Gamma. Okay, here are the S&P 500. All right, so this level is building. 4,000 is building. A lot of puts down there at 4,000. This is supportive. You know, you might think puts, oh, that's bad. But puts are actually supportive. We want to see market structure underneath where we are right now. We want to see that market structure holding 4,100, 4,150. We're trading 4,170 on the cash right now. 4,150 is a pretty big area. SPY hit 415 and trying to get back above. 4,175 overhead and then 4,200. Okay, so we have overhead resistance levels. All of these puts in here, if they start to monetize, we could see the markets push above this current level that we're banging around at 4,170. Right here, 4,170, 4,175. There's a lot of puts right in here. You can see those right there. So back to VWAP. Okay, so look at VWAP. VWAP is flattening out. Doesn't look like we're going to go directional. Right now, it just looks like flat. Okay, up-down volume is 1 to 1, so that's what you would expect. All right, tick cumulative has crossed over on the 15-minute. Tick cumulative is green. All right, until we start to see block volume coming in, the institutions are basically saying they're not interested. Okay, so see how far you guys can sell it, and then we'll come in and scoop it up. The momentum on the futures has been turning. Doesn't mean we can't flush again, but on the 60-minute time frame, the momentum has shifted from bearish to neutral, and now we're looking for it to cross over the 0 line. I'm looking at TTM. Okay, VIX is turning. VIX is cruising higher. All right, Tesla did what it did yesterday. It didn't follow through. Tesla didn't follow through. We had a nice bounce, but no follow through. Back to VWAP. All right, so it looks like Tesla is just going to create a flat VWAP the rest of the day at this point, unless volume comes in again. We've got stochastic RSI oversold. Tesla looking for a bounce back above VWAP. It needs to take out 214. It got rejected yesterday at that 220 zone. Tesla above 220 would be bullish for a follow through. But right now, it's just a flat VWAP. No momentum. A lot of stocks look very similar. All right, SPY testing the low again. Dollar General higher. All right, Dollar General looks good. I like it. All right, we're making a new, the SPY was a bit lower pre-market. We just tested the low there. All right, we're just sitting here at the low. Some stocks in the consumer staples like Dollar General, seeing a nice follow through. Dollar General.
downside, not a whole lot until we get to this 118 level. That was another gap area that we established back a while ago in February here. So not a lot until we get to that point to the downside.
Okay, thank you for that. Scott, what do you think? I mean, using the same words suggestion. Final thoughts there.
I agree with Grant on all of those technicals, but like I said, that congestion area has been about.
All right, still watching for a bounce. Tesla push above you. I'm looking for the volume to pick up again. If it doesn't, looks like we'll sit here on VWAP for now. Momentum and day traders appear to be active today. You can see the volume comes in, runs up a few points, and then the sellers come in. More volume than yesterday. Bitcoin still fading a bit from the highs. We tagged 35,000. Probably going to consolidate in this area. You know, a flag or some sort of base up here. Okay, let's take a look at ARM Holdings. You know, I'm interested in ARM. Okay, the market's still showing the consumer staples, utilities, materials, and real estate as the strongest sectors. And we got a mix in industrials, but they look pretty good. And some financials look pretty good. ARM Holdings after the IPO looked like it was going to follow through, pull back in a little bit. Speaking of pulling back, TLT consolidating. All right, it's right back to 83.50-ish. So let me just check the covered calls. You might want to buy those back and close the position for a profit. We talked about that yesterday. Let me just check. TLT. Okay, so you're up another buck, and TLT. I would just go ahead and close the position now. TLT.
Yeah, this is a rough one, Nicole. I have loved Shopify. I mean, this has been a darling stock for quite a while, but all of the technicals here are just so awful, and it really looks like it wants to make a move down.
All right, TLT, I'm out with a profit. Those covered calls are up another buck today. Profits with TLT back to 83.50. It made it as high as 85. Profit's a profit. It's not following through like I thought it might. Okay, when Ackman mentioned on Monday covering his short position, this followed through, did very well. Some of you sold on at the 85 level. Okay, S&P still looking pretty weak. Okay, S&P is still weak. Dragging the bulls through the mud. Mudslingers. All right, so this momentum that we've been watching on the 60-minute for a change in direction, the yellow moving from red to yellow, still looks a little iffy. All right, so sometimes when we get these bounces in the S&P, sometimes when we get these bounces, if institutions are, interested in selling, they'll let the markets bounce a bit before they sell a little more. And so far, that's what it looks like to me. No follow through, just shorts covering. Okay, we're making a new low, testing the low that we put in the last hour. $41.70 next level on the futures. That was the morning low. Looks like, Vantier, is that what you're looking at? Okay, so right there, 7 o'clock, we were right at 70 on the futures, 41.70. Futures hit 41.70. What was that low right there? That's at 335, 330 candle. Is that what you're looking at? 330 was 41.71. Yep. Okay, TLT. TLT looks like it's on the move. TLT rising. Okay, we just took out some stops that we're going to go making a lower low. Markets look pretty weak, so the thoughts are that we're going to continue this. All right, Tesla, need a bounce. S&P. All right, so we just chopping around 1-to-1 up down volume. IBM looks good. Pushing through the 50-day. IBM, nice gap up. Pushing through the 50-day. Okay, IBM. Walmart. Dollar Tree. Target. All right, so if you're trading Bitcoin and you heeded the signals that we saw back in September, on September 11th we had that reversal in Bitcoin. Some of you took it. We waited till a couple of weeks later. This reversal right here, this red and green candle, this switch in direction, and then we pushed higher. We didn't break out until October. And since then have been moving higher. So what I was telling you yesterday is we're probably gonna consolidate here. I don't think we're gonna pull back too much, but some people are taking profits here because we're starting to pause. We hit 35,000, nice round number. I would do the same. I would do the same. My kids, I'm just gonna keep them. I'm gonna keep adding $100 increments. I won't add until we dip a little bit next week. Next week, I'll probably add again to their Bitcoin on the Coinbase account. All right. Tesla, just a choppy VWAP. No follow through. All right, so Bitcoin's probably just going to consolidate here. That's what it looks like at this point. Bitcoin. Still in a descending pattern, so they appear to be letting this. I'm just assuming they're letting this bounce, and as it bounces, more selling comes in. If you're only thinking long, we need to see, at a minimum, we need to get above the 20 EMA on the 60-minute and have the 20 EMA up and to the right like it was here in the middle of October. From the 8th, we started to move higher above the 20 EMA on the 60-minute. That was more bullish. Right now, if you're buying long, your counter trend, most likely going to get rejected. So if you're thinking long, I would wait. There's no hurry. You want to wait until the trend is in your favor. Right now, it's not. It's in the bear's favor. Bears to lose for now. Knee.
what rates were going to do. And so today, we see that a lot of that money has to be refinanced. You look at the investment grade and high yield debt markets. Yeah. There's roughly $4 trillion that's going to be refinanced over the next 5 or 6 years. And so again, we think people are going to start to look at the converts market for a better deal than what they may have gotten from the corporate market over the last 15 years.
Matt Kaufman, great to see you at Calamo.
Cassava Sciences. There was some news on cassava.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a year. Other guys were charging $400-500. He just didn't want to do that. Proud of the price he was charging. My dad instilled in me always to keep it before.
All right, looks like a bear flag. That looks like they're not done. They're not done. S&P. All right, so they're not done. The weakness is not complete. The bear flag looks like it's going to roll over again.
Wrap up the trading day with me, Oliver Renner, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network. Welcome back to Trading 360 at the Colvetta Meetings, live in Philadelphia. Thank you for being with us live from the Schwab Impact Conference. And we're taking a look at our disruptor. Today it's Adobe, a pair of upgrades. We focus on the AI tools as well. George Phillips is with us, senior markets correspondent here on Schwab Network. To tell us more about this one. George, good to see you.
That's performed rather well considering the market correction that we're in right now. But their revenue streams are really consistent considering their adoption of the creative publishing business. Their digital media marketing business has been expanding, but at the same time, their creative cloud workflow productivity tools that are integrated with artificial intelligence have actually shown some promise going forward into fiscal 2024. If you consider some of the upgrades today, we've got Oppenheimer. They've upgraded the stock as well as D.A. Davidson with a $660 and $640 price target. And both these analyst firms actually see a couple of things going for the company. One is that the revenue streams associated with its traditional creative publishing software are very consistent, like I mentioned just a moment ago. But at the same time, they actually see a positive contribution margin from Adobe's Firefly artificial intelligence integrated with their Creative Cloud software suites. And that's important because we've seen a lot of these AI companies move up, especially the software ones, move up quite aggressively, especially since May, but have fallen back considerably. But Adobe's actually held up quite well because it is extremely profitable business. It has solid free cash flow growth, as well as the fact that they're actually buying back shares. And then
lastly, I think some of the major mega caps, someone threw NVIDIA out there because we know that there's some geopolitical issues associated with some of their sales in China. You know, Apple also, Nicole, is facing issues potentially for sales and technology, as well as Meta platforms at Google because of privacy issues. But Adobe seems to be one of these large mega caps that gets left alone from a regulatory and political standpoint, and I think that also bodes well for the stock.
Yeah, I'm thinking the same thing. Money.
Yeah, so looking at the price action on the stock, Nicole, there's an area of support right around the $500 area, which corresponds to some levels back in August and September. But the market right now, because we're in a volatility situation where we're elevated above 20 on the VIX, we're going to sell premium. So we're basically going to sell a credit combo. We're looking to hold that level of 500, but also be restrained to the year-to-date highs below the 570. So we're going to be placing the December iron condor. We're going to go down to the 470, 460 put spread. So we're selling the 470, buying the 460 put. And then simultaneously, we're going to sell the 570, 580 call spread. And altogether, the premium is really rich in this position at around $4.50 a share or $450 contracting credit. So the whole objective, ideally, is we're selling high, that $4.50. We'd like to see that premium erode to zero between now and expiration of 50 days, and that will happen as long as the stock stays within the boundaries, which is $100 range, between 470 on the downside and 570 on the upside.
Oh, it's good range. All right. George Sillis, thank you for the example trade today on Adobe, our disruptor today.
All right.
You saw the Barbie movie. Well, it's helping some of the toy stocks, Mattel in particular. We'll take a look at both Mattel and Hasbro. Our panel is ready to discuss this group next on Trading 360.
And we would experience turbulence, I would watch the flight attendants. They're not nervous and I'm not nervous. I'm a flight attendant in that situation. The relief that comes over people once they know that God might help them through. I definitely feel privileged to be in that position.
All right, nice little bounce so far.
Anytime, anywhere, any device for free. Schwab Network.
Trading the trending names every day. It's fast money. Ready for you, ready to go. I'm Kevin Hickman. Catch me on Fast Money. Weekdays at noon on the Schwab Network. Cut the cord off.
All right, looking to hold in this area.
It's Market on Close. Join me, Oliver Rennet, for biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Anytime, anywhere.
Okay, the stocks that are doing well today. Stocks doing well today. IBM on the Dow Jones up 4.5%, 4.8%. Merck having a nice day. Merck. Verizon day 3, consolidating in this area, looking for a push through this level. It needs to get above the 200 day. All right, just shorts covering. That's all it appears to be at the moment. All right, still showing weakness. Okay, getting a nice little lift at the moment off the lows. Just shorts covering again. Just shorts covering. Remember the 60 minute. 60 minute does not look that great. Looking for puts to monetize. Still considered weak, obviously. Need to see shorts cover and new money come in. Haven't seen it yet. Blocks, I got a few blocks. We bought double. IWM seeing 165, 1.59 million shares trading hands. $165.
do have a contingent of younger folks that are watching it for whatever reason. That being said, but I agree with you. It's not a Disney movie. It's not Star Wars. It's not. It is geared towards an older person. That being said, Amanda, you look at the macro picture. Your thoughts, because for example, today cash broke down 10%, and the question is, would people should people step in and buy these stocks? But the macro picture of consumer spending, your thoughts?
Looking at the macro picture of consumer spending, reiterating some of the factors that I mentioned prior, there is still ongoing uncertainty, continuing spending fatigue. For as folks like us in the industry, we're tracking month over month consumer price index, seeing those changes, seeing that pricing is decelerating month over month. So as a consumer, you're feeling the prolonged effects of inflation, and so with consumer spending based on that feeling, that impact, and as we look ahead, we need to see sales continue to increase moderately, but that's not necessarily reflecting the impact of those elevated prices. And while we'll see the boost in nominal spending, when adjusted for inflation, it will reflect a different story.
Tesla trying to find a low here. Find buyers. Nothing yet. Apple descending VWAP. Bearish look to it today again. Earnings next week. All right, we're starting to see some more volume coming in. All right, so we got a flat VWAP. Flat VWAP. So the most I'm anticipating is a move back to VWAP. If we get above VWAP, then the most I would be expecting is a move back to perhaps the high at 4184. Momentum is flat. We got a squeeze on the short time frames. Okay. Squeeze on the S&P. Okay, we got a squeeze down here at the low. RSI is starting to rise, so that's telling you to look for a move to the upside. Tick cumulative agrees, and up volume could be better, but that agrees as well. Okay. All right, we got a squeeze on the S&P. RSI is pointing up. MACD and stochastics rising, telling you to look for upside. 60 minutes trying to cross over the zero line. Momentum is trying to cross from negative to positive. And NIMO. NIMO is minus 22, minus 22. We're right on anchored VWAP. Okay, so far we're right on anchored VWAP. From October 13th. Okay, we're squeezing. Okay, no follow through yet.
Low tick alert -800.
Stocks are mostly lower as the slide in the NASDAQ 100 continues. The sell-off in big tech deepened after another round of disappointing earnings sent the stock market toward the lowest levels that we've seen since May. Now let's take a look at four major indices, which are just at the session lows of the S&P 500 benchmark, down about 0.75%. Dow Jones Industrial Average about 125 points. NASDAQ 100 leading to the downside, down 1.4%, and the Russell 2000. The small caps, the only major indice positive by 0.7%, still down about 5.6% so far in 2023, but getting a nice little bump today. Much needed bump today. Let me break down the market action. Let's bring in my co-host, Kevin Hicks. Kevin, data, earnings. I mean, we had it all this morning. Yeah, and this market is just choppy. It doesn't seem like there's any depth behind any of the moves right now. It seems like liquidity is really not there.
Oh, it's 12 o'clock already. Wow, that was fast. That was fast.
Or over. Now, show us the growth, not just last quarter's growth. Give us the growth outlook that we want to hear, or we're taking some multiple points off that stock. And you're seeing that really across the board. You're even seeing it away from tech. So I think that is the real risk for investors going into these next couple of weeks of reports. There are some big ones still out there. Obviously, Amazon tomorrow. I'm thinking about NVIDIA. Will anything they say be enough? To keep the stock where it's already gotten to. So I think it's a really tough earnings season, not because of the earnings themselves, but because of that reaction.
I think those are really good points that you make. By the way, I should let all of you know that we've just scored an interview with Brad Gerstner, an exclusive with Brad Gerstner. He's going to come on in a few minutes to talk about Meta and the reaction, and reminding all of us really that it was a year ago, almost to the day, where he wrote that letter to Mark Zuckerberg, the open letter calling for more efficiency. So he's going to join us. We're going to talk about all of that. We'll share more of that with you in just a moment when Brad Gerstner's with you. We can talk really about where this tech trade is going overall as well. Shan, Josh makes good points. Blowout reports in many cases, and the stocks are not following through. I said yesterday that the worst nightmare for the bulls is you have rates backing up yet again and mega caps selling off substantially, even on pretty good earnings reports. You got a problem with that?
Those coincident factors are certainly a challenge.
Yeah.
If you think about what we're facing, and I think the cost cutting that Josh was talking about is really important because it goes beyond the ability to insulate the business for 2 or 3 quarters. It goes to what happens in 24 and 25 so that we can recapture the margin that has been lost over the last couple of years. And I think that it does require growth, but it also requires mix. You have to be in the right place at the right time. And I think what we're seeing is that if you look at Microsoft in terms of cloud, they're getting a bump from AI. You look at Alphabet, they're not getting that same boost. And so we're talking about optimizing spend. I think when we look at what's happening in the environment, if we didn't have rates where they are today, I think we're going to be seeing a little bit of a different reaction to some of these tech earnings. But again, this is what we anticipated.
All right, no follow through. Squeeze, but nothing here. IWM is getting a lot of the action as far as blocks are concerned. IWM. Maybe by next week, maybe tomorrow, maybe we'll get a better idea of what we can see on IWM. This is still in a descending pattern. 921.50 are all below the 200 day. So we have to look at the weekly. You can see what the weekly has in store, 159, 160.
Now it's the Magnificent Four after Meta has a really good report. We're talking about the stocks, okay? Stock goes down. We could be talking now about the Magnificent Three because now we have to take Apple off the list. In other words, you can't take
Low ticker minus 800.
all of the things that are out in the market right now.
Okay, I take your point, absolutely, and I think though that it's actually beyond the Magnificent 7, 5, 3, 2, 1 blast off, or whatever you want to say it's going to be, because all stocks really are performing badly right now. This is a heavy take, folks. The sentiment out there stinks, and if you ask me why that is, it's what Scott said. It's interest rates. Now we can talk about the Middle East historically. Geopolitical military confrontations do not cause the stock market to go down in this sort of direction and with this sort of magnitude. And I don't think it's the looming threat of a government shutdown or even the circus in the House of Representatives. I think this is squarely on interest rates. Interest rates being as high as they are is too much for earnings, no matter how good they are to power through. So where that leads us to is, how long are they going to be this high? Are they going higher? And for that, it still, in my opinion, rests on the Fed, and the Fed rests on what's going on with inflation. Tomorrow's PCE matters to me. I know it's an old, I know I'm tired of saying that, guys. Folks, I'm really tired of saying it. Shane and I had a little sidebar.
You can't be dismissive. It sounds like you're a little dismissive of the macro, which, you know, if Meta's CFO is talking about uncertainty regarding the macro, then we need to pay attention to the macros, despite the fact where you think
All right, we continue to show weakness.
having an impact.
I am so glad you brought this up, and I had a robust discussion inside my firm today with my analyst community, and they said the same thing, right? The macroeconomic data, like last week's retail sales or this week's weekly jobs.
I'm talking about Middle East, geopolitics, and the uneasiness to open up and spend a lot of money with a lot of uncertainty out there.
There is a discrepancy between what the data is saying and what the companies are saying, all right? And I certainly did not miss what Meta said last night. I certainly did not miss it, okay? There's two explanations for this. One, the data is lagging. We know that the big macro aggregate data is lagging.
All right, we continue to move lower.
And the volatility that is likely to be temporary. However, in this environment where you've got Middle East hostilities,
Low ticker minus 800.
what's still going on, where you've got a circus in Washington, D.C., it is highly unwise for CFOs or CEOs to come out and be ebullient on the demand environment.
Okay, VIX at 2140. 22 was a recent high, 22 and change. Or 23, right? $23.
Hang on, Scotty. I don't disagree with you. That's why I also look at weekly jobless claims, and I'm telling you.
All right, the yields continue to move lower. So the weakness persists, but yields are pulling back. VIX is higher. Let's see what the dollar looks like. Dollar.
We just had GDP today, 4.9%. The Atlanta Fed expected 5.4, so it's above analysts, kind of right in the middle. But that's a backward-looking number. We're expecting 2% in quarter four. And not only that, I think the culturally, we've seen an evolution of how money is being spent. All summer long, all year long, corporations are spending money. There's events, there's people going out to happy hours, there's conferences. There's a lot of money that's being spent tied to services and underpinning services. I think a lot of these experiences, travel starts to change as people hunker down for the holidays. Not only to mention, retail sales has been very poor, November, December, each of the last 2 years. As this shift takes place, because people aren't spending money in the holidays like they have, they're now hunkering down with family. And I think we'll see slowing growth, maybe below 2% in the Fed. We'll really like that. And that 10-year gets to 4%.
We start the show, and I know big tech is on everybody's mind. A central question as to whether the market has a bigger problem or not is whether people buy the dip. You heard Stephanie Link yesterday telling us she bought Alphabet on the pullback. She's been telling you that she's been trimming Meta into the print. Now we get the results. The stock's down. Steph joins us now, of course, with Hightower, the chief investment strategist there, CNBC contributor and a committee member. So, Steph, first thought to my mind was like, I know Link. She's probably buying Meta today. She's probably buying it on the dip because that's how she rolls. Are you doing that?
Yeah, well, I am very tempted. I'm just going to let it settle for a couple of days, but this is definitely a better buy than a sell for sure. And look, the quarter was outstanding. It was offset by the cautious commentary about the geopolitics and also very high expectations. Stock was up 141% into the print. but they just beat earnings. They grew revenues 23%. Operating margins were the best in 2 years. So you have year of efficiency and you have growth. By the way, I mean, really.
All right, the dollar is at 106.80. The 10-year is dropping off. The VIX is higher. So we got mixed signals, but if we can just get the VIX to drop off along with the dollar, yields are backing off. Yields are off 10 basis points and drifting lower.
That's the reason why I'm more of a buyer than a seller. But I understand that the stock is crowded. I think all the FANG stocks are crowded. That's what the reactions are telling me. But this is not a fundamental problem. And if anybody wants to chip away at the guidance was fine. Revenues were a little bit wider because of the uncertainties macro. I think that's very prudent. It's still going to grow double digits for next year. And the things that they can control, which is expenses and CapEx, that was lowered. Both were lowered. And that's exactly what we wanted to see. So you have a strong product cycle story, many different products. You overlay that with AI, and you have a stock trading at 14 times, as well as a company that is committed to keeping the cost pressures down.
I hear you.
Yeah, it's better buy than sell.
I hear you. It all makes perfect sense. The problem with all of that is that it might not matter. Because if you have a different kind of market now, where everything you said is true, and Microsoft had a great report, and the stocks are still going down, that's telling of a different kind of market. Well,
For now. For now, Scott. For now, absolutely. But fundamentals will eventually matter. And the fundamentals of this stock, Meta, was so much better than it was better than Alphabet, but I bought Alphabet because I thought that was absolutely ridiculous because 80% of their business is advertising, not cloud, and it acted like it was the reverse. And so Meta, I think, there are no blemishes whatsoever on this quarter or the guide. It was just a cautious commentary. So it will matter at some point. But again, it's up 141% on the year. And that's why you got to let some of the froth out. Let all the panic selling be done with, but I'll be back in if the stock falls materially from here.
Yeah, you let us know, Steph. I appreciate you coming on and talking about this. We had to hear from you today, just given your history with Meta. It's Stephanie Link of Hightower. I mentioned we do have Brad Gerstner joining us. He is here now, the Altimeter founder and CEO. It's good to catch up with you. Another person I think we had to hear from.
Low tick alert minus 800.
People as well, as I hold this in my hand here. A year ago on October 24th is when you wrote that now famous letter to Mark Zuckerberg, in which you said, quote, "I'm sharing an open letter strongly encouraging Meta to streamline and focus its path forward. Too many people, too many ideas, too little urgency. That lack of focus," you write, "and fitness is obscured when growth is easy, but deadly when growth slows and technology changes. You lost the confidence of investors. Have they gained the confidence back? Have you?"
Absolutely. As I've said throughout the year, Scott, I can't believe that was only 12 months ago. And thanks for having me on. Remember, it was last December, a couple months after we wrote the letter, that Mark first declared it the year of efficiency, discipline, and rigor. And has he delivered? Imagine a year ago thinking that they could re-accelerate the top line of the business while doubling free cash flow from 18 billion to 35 billion. And at the same time, let's talk about efficiency. He and Elon Musk stand atop the heap of efficiency. They've reduced headcount 24% year over year, from 85,000 to 65,000 employees. Find me another large company in Silicon Valley other than those two that can demonstrate accelerating top lines while also reducing headcount and getting more fit. So we give Mark an A. There's work yet to be done. I think we have goodness yet ahead. I think the year of efficiency is going to be brought forward to Reality Labs in 2024 and 2025, where they will either have to demonstrate return on the investments they're making, or I suspect that Susan Lee and Mark Zuckerberg will also begin to trim there. So for us, although we see a pullback in the market today, a year forward, reflecting on that last year, there's no doubt that they deserve an A. And Susan Lee, in her first year as CFO, has done just an outstanding job.
I'm gonna ask you to be modest for a moment and say, what role do you think your letter ultimately played from getting from there to here? All the credit here goes to Mark Zuckerberg, Susan Lee, and the team. But I do think that the idea of fitness and efficiency, right? We were one of several calls, really to usher that in Silicon Valley.
All right, VIX peaking a little bit here. VIX at the peak. 10-year yield, looking for that to continue lower. What's the 20-year doing? 20-year also dropping off. Okay. The 30-year still showing weakness.
In the organization. The age of excess ended well over a year ago. And I give a lot of credit to Mark Zuckerberg for leading the way. Efficiency is now the lexicon of Silicon Valley. And he deserves a lot of credit for that letter he wrote in March to make that happen. Yeah. So Meta's your biggest position now. What does your overall exposure look like as we have this conversation today? Well, Scott, as you know, because I think I was on your program, at the start of the year, we had a very contrarian positioning. Remember, the Mike Wilson consensus around a hard landing had everybody in a very nervous positioning. We were 93% net long at the start of the year. So that's very long for our hedge fund. Over the course of the year, and more recently over the course of the last 8 weeks, we had to manage around new realities. A 10-year approaching 5%. And of course, the tragic war in the Middle East. Our net exposure today is about 48%. So we put on more hedges over the course of this period of time. We've reduced some of our exposure in the long book by selling calls.
Okay, VIX still moving higher. This is just 2158 recent.
Right? These technology names. Remember, Meta today is trading at about 15 times earnings. Compare that to Walmart. Or compare that to Nike, that are trading at 23 and 20.
Yeah, the 10-year continues to drop off. Yeah.
It doesn't make any sense. And over the course of the next couple of years, we're going to continue to see this dispersion where companies like Meta, companies like Google and Microsoft outperform those companies that simply don't have that durable growth and margin expansion.
Let me ask for your guidance for our viewers on where you think in the more near term that these stocks are going to trade and what the message is to you of these markets, that despite everything you said about Meta and what others have said about Microsoft and on, that these stocks are trading really poorly, even in the face of good earnings for the most part. What's the message in that you need to take from it?
Well, I hope the message that Chairman Powell and the Fed take is that enough is enough. We've got a war in the Middle East. We've got deteriorating, consumer behavior, whether you look at business tickets that are being booked on airlines, whether you look at consumer credit card delinquencies, car loan delinquencies, now corporate debt starting to turn over. We have 20% credit card loans, 10% car loans, 8% mortgages. The economy doesn't need any more of this.
All right, we continue to drift lower.
And so the market is voting today. The market's voting that there's almost no chance we have a rate hike in November or December. And there's an 85% chance that we'll see a rate cut by June of next year. Even the Fed itself projects 2 to 3 rate cuts next year. So I think we're at the end of the rate hiking cycle, though the market has yet to price that in, right? The 10-year is still at 4.9. We just got a super hot GDP print today. So as a market manager, you have to take into account these risks. The future is
low ticker -800.
But the most out of consensus view today is that we can have a softer landing, that we can still have economic growth next year, that we can still have great performance out of these companies, while at the same time seeing inflation come down and rates come down. And just think about
extreme low ticker
with a resolution to the inhumane crises going on in either the Ukraine or in the Middle East. So yes, those are unknowable. But I think there's at least as much chance that can occur as that we're going to see rates much higher from here.
Can we agree with the comment that, yes, over the long term, these are the companies that you want to be in. They have the growth rates that are going to be at the forefront of where, investors want to, get alpha in the market. But can we also say, okay, I agree with all that, but tech can still be overextended and these mega cap stocks can still be too rich from a valuation standpoint? How would you assess that?
Okay, 10-year, all of these yields continue to move lower. VIX is screaming higher.
It was over the course of the last 2 years. It's trading below 25 times earnings. That's at the same multiple as Nike and Walmart, and it's generating 50% earnings growth, and it's the beginning of the AI super cycle. Meta, which just posted, 100% gain year over year in free cash flow, is trading at 15 times or 16 times earnings compared to 23 or 25 for those companies. Now, I'm not picking on those companies. I'm just saying that valuation disparity makes little sense to me when you have companies that are going.
All right, we're starting to build some red histogram bars on the 60-minute chart now. We had yellow bars coming into the last hour. Now we're starting to build red again. So tick cumulatives turn back down. Seeing a little bit more selling. 1-to-1 down volume still prevails.
But I don't think you can say this is frothy. I don't think you can say these are overextended. In fact, we've seen multiple compression in technology this year, not multiple expansion. The stocks have gone up a lot because the pricing we came into the year with, the expectations we came into the year with, proved to be dramatically wrong. Both Facebook and NVIDIA ended up earning far more this year and growing far faster than the consensus earnings expectations.
Josh has a question for you, Brad. Josh, go ahead.
Hey, Brad, getting away from shorter-term earnings concerns, just strategically speaking, is Reality Labs make or break for Meta's longer-term shareholders? Meaning, they have been under the thumb of Apple vis-a-vis the App Store. A third of all of Facebook's profits and Instagram's profits are getting kicked upstairs to Cupertino. If Meta gets the next technology supercycle right on the device side, and they actually own the hardware opportunity, that's a very different future than the one in which
S&P's down over 1% on the day.
becomes the de facto standard, and then Meta is just one app trying to elbow its way into that. Like it's almost like a fork in the road. Do you feel it's that important? And if so, how high of a probability would you assign that Meta getting the hardware opportunity right?
No, Josh, I don't think it's a fork in the road. I don't think it's that important at all, which is why I wrote in the letter a year ago that he should double down on AI and that he should quarantine the bet on Reality Labs to $5 billion a year. Listen, Mark Zuckerberg is more of a visionary than me when it comes to whether or not these new platforms will dominate the future. But Meta's success doesn't depend on it at all. I encourage everybody to, on WhatsApp, 2 billion people using WhatsApp every month. And now they've launched a chat GPT equivalent where I can have an AI chat directly in my WhatsApp on things like what the best hotel is on the west side of New York. And I can ask them if there's availability or what the price is. They've given me a personal assistant in my pocket. That is here today. That is monetizable today. Much like people said that Reels couldn't catch up with TikTok, it has. They said Reels couldn't monetize, it has. I think that what they're doing in AI to compete for the top of the funnel by giving us all a personal assistant, that I'm highly confident in. It's a massive new and expanding TAM for them. It allows them to challenge Google at the top of the funnel, just like ChatGPT is. And this new platform I view as a call option on the future. And I encourage the management of the company to continue to bring their efficiency, discipline, and rigor to Reality Labs, right? And make sure that the investments that we're making are quarantined. We're earning a return on those. And this year, we didn't see much of a pullback in terms of this spend. But I think over the next 1 or 2 years, if we don't see monetization out of Reality Labs, hopefully we're going to see more efficiency.
I want to ask you before I let you run, Microsoft and Alphabet, did the results this week underscore the positions that you've taken on both? How are you
All right, SPY.
Moved by what you heard from both?
Inverted
Both of these names, again, incredible.
hammer on the daily.
Terrific growth. In the case of Microsoft,
Yields continue to drift lower.
in Azure, it's incredible. They have over 17,000
10-year, US 10-year dropping off more than even more than anticipated for the day. All right, so we're starting to bounce a little bit.
With expanding margins. So I think what Satya, Amy are doing at Microsoft is incredible. It's the future of AI. They're going to win, continue to win the enterprise. And they own, as everybody remembers, half of OpenAI, which we now see valuations over $80 billion there. So they're well positioned against the future. In the case of Google, as you remember, I've come on the show and I've said that Google to me is not about the cloud. Google is about search. It represents over 100% of their profits. The future of the company is dependent on the future of search. Today, Google is trading at a valuation that I think it makes it look very interesting, very compelling. We don't own it today. The risk to the top of the funnel at Google is that Meta AI, ChatGPT, and others compete for those consumers in answering the question. Scott, I was in New York a couple weeks ago at the Javits Center talking to 1,000 people, and I asked the audience, how many people have used ChatGPT in the last 2 days? Half the room raises their hand. I said, how many people use that instead of Google? The same half of the room raised their hand. That's not a threat that, is immovable by Google, but it is a threat that they must deal with. If they're going to maintain their dominance,
Bear flag still.
top of the funnel for answering consumer questions, then they have to make sure that they have something functionally equivalent or better.
So these moves lower, we know that dealers need to sell futures. That's showing the weakness. They need to sell futures if it continues to move lower. 4150, we lost that. 4100 is the next level, and 4130 is right here. 4130, 4125. Not a lot of calls down here.
-800.
We do have a number of upgrades as well. Software stock, Bill Baruch bought more earlier in the week. We're going to talk about that. Calls of the day. Amazon, the setup is next.
All right, let's take a look. I keep looking for the markets to bounce because yields, which were the driving force, at least that's what most considered, as yields move lower, as yields were moving higher, the markets move lower. Now that the yields are moving lower, we're not seeing the reflexive bounce in the indices. So still watching for that to happen. Yields continue to drop off. Let's take a look at okay, we've been looking for a big day like we saw on Monday, but to move below the 21-day eventually. Looks like distribution up here could be the head of a head and shoulders pattern. Left shoulder over here, 4.88%, and the left shoulder and the head at 5%, and a move back down to say 4.5% for the neckline. That lines up with the 50-day. Too early to tell, but yields are hanging tough. So it's tough. The bears are definitely winning it until that changes at a minimum. Let's go take a look at a few other things. Okay, advanced decline percent. It doesn't look as bad as you would expect with the markets down where they are. This is actually looking pretty good. Just the NASDAQ pulling back. Those top 10 stocks, these top 10 stocks that we follow, okay, that's having an impact. With those lower, we're looking for the NASDAQ in particular to move lower. But the S&P, big caps, mid caps, and small caps are doing okay. They're moving higher. That's interesting. Still 1-to-1 down volume and tick cumulative trying to turn up. Still weak.
Josh, AWS growth has decelerated for 6 straight quarters. Growth was 12.2% last quarter. To give some perspective to viewers, it was 39% at the end of 2021. So I don't know how much optimism there is, but there's enough to hope that there's at least a rebound in AWS growth, and maybe all the hopes are pinned there.
So this is a stock that really hasn't done anything in a couple of years, Judge.
So that looks okay.
For the reasons that you've cited, there's been a growth slowdown. There's also been a profitability challenge for the company, and of course, for
NAMO, higher highs, higher lows. The black line is what I'm looking at. NIMO. All right, looks like shorts covering now. NIMO making higher highs, higher lows. The black line again is what I'm looking at. With the yields moving lower, you would think this is going to bounce.
Is the state of web services, AWS. Like that's, to me, that's the number one stat that's going to decide whether or not we get a rally out of this stock after they report or a sell-off. Amazon Web Services are only supposed to have grown 12% to $23 billion. It's a much more important business to Amazon than it is even for Alphabet. Understand that Amazon Web Services is 17% of revenue for Amazon, but it's 3/4 of the operating profit. So 7.7 billion in operating profit last quarter, like 75% of it's coming from AWS. So that's why I think that's the make or break stat that everyone's going to be paying the most attention to. Mm-hmm. That growth rate better look solid. They better have good things to say about next quarter too. If they don't, keep in mind, this company has added 400 billion in market cap year to date. Like it's up a lot year to date, 40% or so. It's not going to keep that if they don't have good things to say about next quarter.
Jimmy, I mean, look at Azure, right? You get a reacceleration of growth in the cloud, as we were saying for Microsoft. Maybe the stock reaction though is a bad omen for what might happen with Amazon, even with a good AWS number. I'm not sure whether you can read one to the next, but it's not necessarily great.
I think the interesting
Looks like a bear flag.
It seems to me like this discussion about Microsoft versus Google on the web services side versus Amazon, it sort of seems to be ignoring the idea that the pie should be growing. There seems to be this relative, hey, Microsoft had better growth rates than Google, so we're going to buy Microsoft, we're going to sell Alphabet. I don't think that's the right case. I think that the idea that the next 10 years, this decade we're in, is a digital transformational decade, I think Brad Gerstner would agree with us, and I think that pie is going to grow. So, if Amazon Web Services is 12%, on the surface, that's a disappointing number, like 23% for Google Cloud Services was. But first off, we're talking about a quarter, all right? We're talking about a quarter where people are feeling a little,
But the problem is you've been talking for 6 straight quarters.
I'm so glad you brought this up, because you know what? It is 6 straight quarters. Now, I'm going to just give you a little room here, all right? We haven't talked about the retail side of Amazon. You mentioned it, right? It was 6 quarters ago. It was an April earnings announcement when Amazon started the last 18 months of this lousy environment. When they said holiday spending season doesn't look too good going forward. I mean, that was in April. So,
All right, the 10-year continues its path lower for now. That's fine, but the daily needs to drop below. Needs to drop below 4.8%.
beholden in the equity markets. What they say about the consumer matters to the stock market overall.
I understand,
It
but
doesn't matter to
but
Amazon. I got you.
but I understand if they don't say the right thing about AWS, the stock market's not going to look pretty.
Okay. So Amazon's not going to look pretty, and by extension, the stock market's not going to look
My
pretty.
point.
I think that the point about Jim's making a point about spend increasing on cloud. And the challenge is right now is that, yes, according to the Philly Fed, for instance, 18% of companies are going to cut software spending this year, 35% expect to grow it. However, they're not spending it on cloud. They're spending on cyber, they're spending in other ways. And so I think the challenge here is that, why Microsoft is likely to come out just like Brad was talking about. And in terms of the retail, I mean, Jimmy, they better come out with a big number because consumer spending was enormous in that GDP print today. So, I mean, I would say that's sort of a base case table stakes right now on the retail side. I would really be looking at, does regional distribution centers actually cut costs for retail? That's the takeaway.
So let's do a couple of calls if we can, at least one. Adobe, I turn to you, Bill Baruch, who was upgraded to outperform Oppenheimer. I turn to you because you bought more on Monday. Target goes to
NVIDIA looking pretty weak. NVIDIA looking pretty weak.
Adobe, I mean, it's bringing our top five now after adding to it. I think the big thing here with it is Firefly and as well as how they're actually implementing AI and bringing AI to the users and the network that they've created, locking these people in. They have 20 million subscribers anticipated. So I think as we see AI become a bigger part of their business, the more data they have is going to continue to help them expand that. I expect a solid report as we go look farther out from them, but under the radar as the market's selling off and continue to kind of leverage.
Let's squeeze another one in. Live Nation.
All right, the yields, we need to see those yields continue to move lower. Need those yields lower.
Yeah. So Live Nation, this happens every few years. There's concerns around the regulatory environment. Of course, there's controversy about whether or not
Another bear flag.
should be bundled with the venue management and the touring management, and that is what makes Live Nation, I think, such a powerful company. So there were rumors all year that there was going to be a Department of Justice investigation, and then it was confirmed, and they kind of did it the same day that they reported earnings, which I'm sure was a total coincidence. Either way, this company has had nothing but great results. The stock price got knocked down. I think that smoke is going to be around for a while, but people are going to get past it. And I do think this belongs at 100 or higher. You talk about a company that's in the sweet spot of what consumers actually want to spend money on and is just really, really good at what they do. And that's Live Nation. And I think this is a very cheap share price for a business that's as dominant and as profitable as they are.
Let's take a quick break. We'll come back. Mike Santoni joins us with his midday word. Comes back after this.
All right. It is Thursday, the 26th, 12:38 p.m. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a very bearish day. We're down 1.2%, 50 handles plus on the futures. Buys down 5. Bulls sitting it out, looks like. Bears are winning. The 10-year, though, is dropping, so I'm expecting to see some sort of reversal at some point. All right, we continue to show weakness. Tesla continues lower. All these FANG stocks are dragging the markets lower. Despite the 10-year yield backing off, all of these FANG stocks are not helping. NVIDIA's off $17. Meta's off $14. Broadcom's off $30. Microsoft's off $13. I would just sit it out and wait. Wait until they start to come in. Wait until the institutions start to buy. It'll be obvious.
The governor said another 13 were injured and 3 remain in critical condition. Authorities have issued an arrest warrant for the suspect, charging him with 8 counts of murder thus far. The shooter remains on the run. The LL Bean flagship store in Maine is also closing its doors as authorities continue that manhunt. A spokesperson for the company said its factories and offices are also closed out of an abundance of caution. The outdoor goods retailer is one of Maine's largest employers, and it's based about 20 miles from Lewiston. And Congressman Jamal Bowman pleaded guilty to falsely pulling a fire alarm at an office building on Capitol Hill last month as Congress rushed to avoid a government shutdown. Under the plea deal, Bowman will pay $1,000 fine and write an apology letter to the Capitol Police.
Oh, isn't that nice?
Prosecutors have agreed to dismiss the charge in 3 months as long as Bowman does not break any other laws during that time. Halftime report will be back in 2 minutes.
Man. $1,000 fine for pulling a fire alarm during Congress session. That's pretty impressive. That's all you got. A slap on the wrist. Interesting. Interesting how that plays out. Positions. Looking for a little bounce. Nothing yet. The 10-year continues to drop off. What's TLT doing? TLT was looking stronger. It's hanging out at the highs. TLT back to 84. So with yields pulling back, you'd think TLT will continue. TLT. Okay, so it's making a higher low. Maybe this can get going and the yields back off finally. All right, the 10-year. All right, so the 20-year is what we'd be playing against, the US 20-year. If you're buying or you're holding on to, if you're holding on to TLT, continues lower.
You keep kind of clicking through these supposed areas. It took us almost a month to get up through 4,100 to the upside in April and May. So you sort of, if you don't have buyers show up, where they liked them 6 months ago, we broke out, then it's going to raise prices. On the other hand, Brett is positive today, and they've been talking about the small caps. It really is just the mega cap story today. So the question is that one of these final surrender moves that people feel like, okay, we can't hide that the economy's good until further notice, and can the rest of the market have at least a little bit of a bid? That's where we are.
Let's see the resolve of their alleged buyers. I mean, that's what it's all going to come down to. Those who have said, don't worry, if these stocks get sold off hard, the buyers are going to come in and snap them up. Well, it remains to be seen at what level they do that.
It does. And again, you have to keep in mind that even though these are really sharp moves and things like Meta and Alphabet,
All right, yield's pulling back a bit more. This is the 20-year yield. So if you're trading TLT, you want this to be moving lower. The last time we traded this was what, Monday? Monday we did the 83 buy right. We bought the 83 and we sold the cover call that brought us our cost basis of 79. Looks like TLT wants to go again. Same trade as Monday.
Let's see what do you feel about Amazon coming in overtime tonight and the impact, not so specifically to what they might report, but the impact that it might have.
I mean, if you show me every line of Meta's numbers last night, I would have said you would have probably had an excuse to buy this group today. But I think, you're stretched that much more to the downside in the very short term ahead of Amazon. I just wonder how much it has in the way of a read-through or coattails, because Amazon is kind of its own beast for as big as it is.
Yeah, we'll see. And we'll see it together. I'll see you at closing bell. A couple hours. That's Mike Santoli. Coming up, a pop for one housing-related play after its earnings. Rare that we've said that over the last couple of days. Josh owns it, which is why we'll talk about it next.
All right, bonds are moving higher. So I just did that. I had sold the 84 call. I sold the 84. Excuse me. I bought 84 shares at 84, and I sold the 85 for December for $2.40. Filled. So that brings my cost basis down to, was that 81.60, and it looks like bonds are going to go. Looks like bonds want to go. Okay, so S&P still dropping. Bonds are moving higher. So Mondo, I think you're short, right? Mondo's sticking with the short. Pretty good rationale. Why are you looking for a bounce? Just let it keep dropping. Okay. So TLT, I bought right at 84 and I sold the 85 December, and I'm just got my cost basis down to 81.60. All right. Again, it's just 200 shares. If we continue higher, then, and we got the 10-year and the 20-year, if we get yields to start moving lower, looking for TLT to break higher. If it does, I might add to it.
ballooned today, but we're going to give you a stock that's up. There it is, AO Smith. It's up near 6%. Because Josh Brown owns it, and they just had earnings. Josh, your take.
Look, this is a very unique situation. This is a dividend aristocrat. It's a small cap, 10 billion in market cap or so. Almost nobody knows they even exist, but they've been around since the post-Civil War period. And what they do, very simply, water heaters and boilers. About 70% of the business is just replacement. If you own a home, you know you have to keep doing that. With one hand tied behind their back in a horrible housing market right now, they were able to beat the street by 11 cents. They guided higher on revenue for the rest of the year. They guided higher on earnings. This is a company paying that dividend and growing it, as well as a stock buyback, shrinking the float by 17% over the last decade. So I really think that if you're looking at small caps, and you should be, given how beaten down they are, you want to be selective. This is the type of name, my personal opinion, that should be on people's radar. They should learn it, understand why it should work over time.
I appreciate that. I also want to turn to you, Bill Baruch, because you own Morgan Stanley. Yeah, announcing their succession today, Ted Pitt for James Gorman. Yeah, pick is the pick, and that's, I think that removes some uncertainty. The stock has become unraveled after earnings reports, though. So maybe this can help bring a little bit of calm to what we've been seeing. I mean, investment banking missed, the wealth management revenues missed. I think there could be more of an anomaly there, as I do think that the wealth management juggernaut is going to be sort of paying to be where it is. And we're also seeing a steepening yield curve. I expect over the next 6 to 9 months. I think that's going to help as well with net interest.
I'm glad you make that point, because I wanted to bring that up. You know, we've been talking about an inverted yield curve for so long. Also, the risks of rising rates, possible credit issues, but a re-steepening of the curve is good for net interest income, which is at least a bright spot to hang something on for a sector that hasn't done anything.
All right, TLT.
If you look at all of the big banks and even some of the regionals, very inconsistent in terms of, has NII bottomed. And I think that's the challenge. But if you look at the bigger banks, the benefit they have is that they have card growth. And so that really helps them in terms of, potential fee income. So I think one of the things is that if we look at the yield curve potentially steepening, there are going to be continued some winners and losers. And you do need to look at the underlying credit, because there's a lot of dispersion there.
All right, so let's take another quick break. We'll come back and do final trades on the other side.
All right, JP Morgan sitting on the 200-day for the past 3 or 4 days. JP Morgan sitting on the 200-day. PACW. What's Morgan Stanley doing? Morgan Stanley's got beaten up. XLU. Okay, a little fade from the high. XLU. All right, so we continue to show weakness despite yields backing off. All right, so we're at the lows, looking for a little consolidation at the low. Dollar hanging on to the highs. 10-year yield dropping. Just 10-year yield is still, looks like distribution at the highs, unless we break higher. VIX at the highs, 2184. Ten-year at the low of the day, of the morning session. Dollar hanging out at 106.87. Okay, let's see. I just sold some covered calls on my shares and ARM. Looking for ARM to push higher at some point, but I sold some covered calls while it sits down here basing. For 45.25.
IEO still think energy is the place to be looking. 10 times estimates, and you've got about 14% earnings growth expected.
Overdone. Plain and simple, overdone. I mean, the ad revenue beat, but obviously it's the cloud here, and I think they're 1 quarter behind Microsoft.
All right, ARM Holdings. I have shares already, right around $50. Just a little a hair underneath 50. 498 average. I sold the January 50 call for 475. That brings my cost basis down to 45.25. All right, that's below the low that we saw recently. Now, if this does continue to pull back, I'll just buy back the covered calls. But I'm looking for this to push higher. I won't let it go against me. All right, we continue to show weakness in the markets.
Low ticker minus 800.
Thank you very much, Scott, and welcome to the exchange. I'm Kelly Evans. Here's what's ahead. The latest data show the economy remains resilient, and so does the consumer. If that trend holds, and that's a big if, our economist sees 2 things happening in the market and at the Fed.
All right, VIX at the highs, VIX at near 22 now.
Provides a good entry point, but there is one particular way to play it to be a little more safe about it. He tells us what that is and what else he's buying right now, and we'll check back in with one office real estate player. The stock a bright spot in today's trading session on the back of earnings. The name, the CEO, and what makes the company so far resilient to higher rates. Let's start with the market. Dom Chu has our numbers. It's kind of best to worst over there, Dom.
Yeah, it is, Kelly. And to your point right now, as we're kind of looking at this whole thing, I've just been keeping an eye on this because if you look at the S&P 500, that down roughly 54 to 55 does represent session lows at this point. Even at the highs of the day, we were only down about 3 points. That gives you an idea of how we've been tilting so far today. So it has been negative. A lot of earnings headlines, specifically in tech and communication services, has been driving that downside. Now, the Dow Industrials also session lows off 0.75%, 245 points to the downside, 32,790. For those listening on Sirius XM channel 112, the S&P 500 is 4132 at those levels. The NASDAQ composite, really the underperformer because of that tech weakness, down 2%, 265 points, 12,556. I will also mention each of these three major indices is below that longer-term trend, 200-day moving average. We'll talk more about that.
All right, looking for a bounce. Looking for a bounce.
Place to keep a close eye on right now as well. If you want to look at some of the downside,
TLT is starting to rally. TLT is rallying. 10-year, 20-year, starting to drop again. Okay.
ETF that tracks many of those major chip makers is again below its 200-day moving average or longer-term trend line. So something to keep an eye on there as well. As for some of the stocks individually that are driving the downside action, of course, earnings moves from Alphabet building on yesterday's losses as well. Even Microsoft, which had a sharply up day yesterday from a good earnings report, is down about 3.5% in today's trade. And of course, Meta Platforms weaker on the heels of its better than expected earnings report. And then all eyes on Amazon this afternoon, given what we've seen in this technology trade develop. So with earnings report coming out from Amazon, that could be something to watch as well. And to top it all off, Ellie, if this isn't something weird, so much we've been talking about this notion that bonds and stocks have been selling off at the same time, the death of the 60-40 portfolio. Well, on a day that we've now hit the session low in the stock market, we have hit session highs in the bond
High
market.
to color plus 800.
All right, looks like we might be getting a short covering rally out of this. Puts monetize.
So it almost feels strange, right, Kelly? Almost fundamental that people would be taking risk out of the stock market and then buying treasury bonds on the heels of it. It hasn't been happening recently, so that could be something to watch.
Even as it ticks down again, 4876 down. Thank you very much. Let's get to that strong third quarter GDP number. The real economy grew nearly 5% annualized, and that's the strongest pace since 2021 in the third quarter. We also learned today that big ticket durable goods orders rebounded. They also surged nearly 5% in September, while new jobless claims remain near historic lows. Despite all that, my next guest doesn't think the Fed will hike rates again this year. Joining me now is Lorena Arici. She's chief economist at T. Rowe Price. And CNBC senior economics reporter Steve Leisman is also with us. Welcome to you both. Steve, I'm just going to start with, I'm just going to rain on this parade before I even let it start for just one quick second. I guess jobless claims are a little more high frequency, but everything else is a little back. Well, I don't know, maybe durable goods orders is forward looking. You tell me.
You can look into this report. You can see some stuff that might create weakness in the current quarter, which is the fourth quarter. Inventories were a big contribution to the final number. That's probably going to come off a little bit this quarter. Government spending was another part of it. And then you got to step back and say, okay, for a year or two, we have been misforecasting, is that the right word? Badly forecasting the consumer and getting it wrong and wrong and wrong. And the question becomes now, will the consumer finally, and given the headwinds out there of higher interest rates, give it up? I guess I have my doubts because the economists have been wrong for a very long time. We really don't know what the level of savings is because I was thinking that, Kelly, a year ago, you must remember people were on this show saying consumers have no more savings left from the pandemic. Well, maybe they do, maybe they don't, but they sure seem to be spending. I think you have some interest income that's accruing. I think you finally have real wage gains out there. So I think those things are enough to keep the consumer going. So, yeah, I see the economy stepping down, but I don't see it going to zero. And I think it's able to handle some of these headwinds that are coming.
Lorena, I feel like you would agree based on what I've seen for your own forecast. So what does that mean for the Fed and the next couple of moves here?
So this is interesting because we are seeing this resilience of the economy. And by the way, I think a lot of what's supporting the consumer is the labor market. Aggregate incomes are strong and real disposable incomes are also improving now that inflation has decelerated. And then it seems almost contradictory that the Fed would lean against its forward guidance that would hike one more time this year. I think this has already
TLT, big pop in TLT. All right, cool. Now, if this gets, if TLT gets ripping, I will roll the calls up for our credit if volatility picks up. Those calls are still going for 245, 246. All right, looks good.
since September could be doing the job for them, so that does not necessitate another hike. So
Okay, thank you, Corey.
As we've seen, a couple of people are now thinking, Marina, that maybe this move has run its course. If yields don't keep going higher from here, maybe even come down a little bit.
All right, let's see if we can't get something going.
So I think it's very key that the increase in yields we've seen so far is sustainable. I think this is the key. We don't necessarily, the Fed doesn't necessarily need to see further yield increases from here, but any pullback in yields, a meaningful one that brings us back to August levels, I think would be an indication that perhaps they need to deliver that extra hike if the economy remains as resilient as we've seen. And at this point, I have no reason, looking at the data, to believe that the labor market is going to crack anytime soon.
Steve, what were you going to say to that?
Come on, S&P, let's go. Get the look at TLT. Look at TLT. Nice pop in TLT. All right, so we got in right here at 84. And once again, we got a nice little pop. Look at the volume that came in right after we did. Volume came in right after we took a trade. Looking for this to follow through. I don't want to get too pumped.
It's not crazy to be in a world right now of higher interest rates. While that does exercise some restraint, I think the Fed may step back and say, yeah, it's exercising some restraint, but not entirely clear that it's unwarranted given where the economy is right now. So I think things do step down here, but it's not a crazy place to be right now with 5% yields on the 10-year.
Blorina?
So I think another element that we haven't discussed so far is the lags through which monetary policy tightening and higher yields are playing out in the real economy. Key here is the duration extension that we've seen both for households and for firms. A large portion of U.S. households and firms locked in lower interest rates before the Fed started hiking. And so that means that, of course, the increases in rates that we've seen so far, which are substantial, are going to bite, but this is going to happen with a longer lag. So I think the Fed here is a risk manager, and what they're trying to do here is say, okay, we will give the economy some more time for these long lags to play out, but then they're not precluding the possibility that if this resilience continues in 2024, they either can deliver fewer cuts than the summary of economic projections currently has in place, or they could resume hiking depending on what's happening with wage inflation in particular.
Yeah. Steve, I guess I'm looking to financial markets and just wondering, again, if this discussion is too backwards looking and relying too much on the data strength we've seen in the past couple of quarters, because the forward-looking momentum.
All right, TLT looks good.
Signals we're getting from markets, it just doesn't seem quite as encouraging.
Yeah, I think people are really
All right, Bitcoin
to a positive story.
below that psychological 34,000 level. Bitcoin below the 35,000 level that we hit on, what was it, Tuesday?
If you look back at the forecast, it's been wrong for a long time, Kelly. And I don't know when that, if you give it up and suddenly you're like, okay, now I'm optimistic if that ends up being the last straw and the wrong move to make at that time. But I think the earnings numbers have kind of held in there, given certainly the surge in yield. Stock prices are down, but they've held in there relative to where they might be. And like Lorena said, you have the wage gains. You also, by the way, I don't know if Lorena wants to correct me on this. I believe households are net lenders to the economy. They are not net borrowers. And so I was looking here.
That's really
at,
interesting.
let me just get my glasses on. I apologize here, but I have
All right, so Joe K, some interesting things to say. Thank you, David. Thank you.
I'm just wondering, maybe all the seniors who are collecting those coupons now are booking those cruises, and maybe you can't get a room in the cruise right now.
Yeah, Lorena, I'm also thinking about the irony that it's U.S. households who are receiving the largesse from the federal government that threatens to bankrupt it. But again, I'm trying not to be too doom and gloom here. So I'll give you the last word.
So I think this is important. The household balance sheet story here is key. So we spent over a decade deleveraging here in the U.S. post-GFC. So to Steve's point, net assets of households relative to their liabilities are at historical highs. So the balance sheet looks healthy. We have a demographic effect where baby boomers have a ton of savings and they don't have to pay mortgages at 8% interest rates.
Merck,
We're seeing that show
new high today.
in both goods spending for the consumer as well as services. Both components have been stronger than most people expected for this year.
Just real quick, I wonder, Kelly, rather than spending time to figure out why things will be bad, maybe we should be spending some time figuring out why things haven't been as bad as we thought they were going to be.
All right, here's Merck. Merck looks really good. Checking out Merck. Check out let's go to the 60-minute chart. You can see what I'm looking at here. Merck, nice break higher. Okay, Merck. Here's Merck on the daily time frame. Looks really good. All right, so you got a descending channel or a wedge. Let me see if I have a chart marked up already for a Merck. Merck. No, I don't. MRK. No. Okay. Well, let me just change this to a daily chart. All right. So Merck, potential breakout in the making, potential trend change. Okay. Okay, I'm going to take the wick here only because it lines up nicely with that body of that candle and this wick here. Okay, that's where I'm going to take the trend line. So we need to get above 108. That would be the 200-day. All right, so I'll take wicks here too. Okay, so it looks pretty good. And we got RSI rising. That looks good. Stochastics rising and MACD rising. Volume looks good. All right, so Merck looks pretty good. Not a bad setup. I wouldn't buy it here at the high of the day. I would wait for some consolidation. So make a note of it. If it consolidates between 106 and 108, or it continues tomorrow, might be something you want to do. Maybe a buy right on this one. Let's see what the options are going for. January. Yeah, that wouldn't be bad. A buy right, that would bring your cost basis down to about 105.50. 105, right around 105. No, 104 actually. 104 if you did a buy right for the 110 call. That's pretty good. Actually, that's a really nice trade there. All right, so let's see. Merck rises. Q3 profit beats and tops estimates. Okay, that looks really good. Merck looks really good.
When we pick the fancy names and the winners, but in a bear market, I want to be more defensive protect client capital and then strike hard when the Fed gives the all clear, and I preserve capital to make those excess gains later. That's the strategy.
And I mentioned tech, I mentioned defense, which is an area you've been kind of hiding all year long. I also just want you to explain why financials here, when everyone, like you said, if you're feeling bearish, I get the valuation case, but are we so sure here that they're cheap enough based on what could be happening?
Well, I really think it depends what financial you're looking for, and the XLF actually, large, high quality, the best of the best. Berkshire Hathaway's actually in there. It's the largest holding. You have JP Morgan, you have Visa, MasterCard, you have non-banks. So as an asset allocator, on the value side, you can't avoid financials. So we look for quality, broad diversification. We want to stay out of those community and regional banks that are going to struggle with net interest margin and loan losses. So that's why we migrate to the large cap ETF sector.
Quick last word, a lot of people are getting more interested in bonds, and you would steer them towards investment grade with a yield of 6% or higher. Why?
Well, if you can take the volatility out of a portfolio, again, it depends on the investor, but if they want anything resembling a balanced portfolio, they live in a high-tech state.
All right, so this is Merck. I just want to check real quick. All right, so that's Merck, looking pretty good here. Merck.
And interestingly enough, after the Fed rate hike, the 3-year average return on
Volume looks good.
is only a percentage point or two behind the average return in a 3-year stock portfolio. So you can get capital gains plus a 6% interest rate, plus or minus. I think most investors will be well served to consider that in that balanced portfolio risk area.
All right, Mark Avalon, thanks for your time today. We appreciate it.
Good to be here.
With Potomac Wealth Advisors. Coming up, our triple header executive exchange. First up, the CEO of Raymond James joins us fresh off earnings to recap the quarter and give us his read on the health of the banks. Then the largest nat gas producer in the country, EQT, surprising the street with a profit in Q3. CEO Toby Grace weighs in on that and the flurry of deals we've seen in the energy space. And Empire State Realty Trust CEO Tony Malkin has a pulse check on office real estate in New York City. Looking forward to that. As we head to break, here's a look at the markets, which are only about 20 points off, about 50 points off session lows for the Dow, I should say. The S&P down 1% right now. The Nasdaq, the worst performer. The 10-year yield drifting back up to 486. We're back after this.
This is The Exchange on CNBC.
Okay, Merck looking pretty good. All right, Merck, let's see. Merck rises as Q3 profit tops estimates. Merck. I like this company. Merck, Q3 results beat analyst estimates. Surprisingly strong demand for the COVID-19 treatment, primarily in Japan. Sales of Monupiravir. Why do doctors have to have these weird names? Pharmaceutical companies. The COVID-19 antiviral pill sold under the brand name Lagevrio. It jumped 47% to $640 million in the quarter. Interesting. Very interesting. Very interesting. All right, so no follow through on SPY, eh? Okay, no follow through. Let's look at yields, US 10-year. Okay, continues this droppage. Okay, all I'm assuming at this point, if I'm allowed to assume, is price will stay inside of this box, basically. Okay, so I'm thinking until otherwise noted, you got the high. You got, oops, you got the high. And you got the lows here. And we're just consolidating. We're bouncing around inside of this level, okay? Since the beginning of October, mid-October, October 17th, we ran up. We pierced 5%, came back in. We keep coming back in. So TLT is working right now. TLT is working the opposite of this. 20-year is moving higher. I just did another buy right on TLT. That brings my cost basis down to, was it 82? No, 81.60. I'm looking at safety trades, if you will.
Before I ask about those opportunities, I just want to mention we spoke with Stifel's Ron Kashevsky yesterday, and they also have had a nice string of wealth management gains, which is in stark contrast to what we heard from Morgan Stanley a couple of weeks back. What explains that divergence?
Well, it's just, I think the recruiting success on the platforms is that we've had just steady across our independent employee and our RIA platforms, just strong recruiting. We've had it kind of forever. It's been our growth story, growing to 3 to 4% in advisors, growing organically, recruiting them one by one. And most importantly in our model is, less than 1% regretted attrition since I've been here and well before me. So having a model
ticker minus
where
800.
they come and own their clients, they can go if they want to, we'll help them. But they choose to stay because they feel we have a high support environment, that we put clients first, we treat them as clients. And our investment in technology, where we really believe that on the wealth platform for advisors, we have the leading technology, just not by industry awards, but as advisors come and kick the tires here and check it out, they tell us that from the other firms.
What can you tell us about capital markets? Because we sit over here and go, okay, we know it's been a pretty tough period there lately. Maybe things start to pick up on the debt side. There's probably a lot of different levers you can try to pull in a rate environment that maybe you've been through, but maybe a lot of your more junior team members never have.
Yeah, if you've been around long enough, you've gone through these cycles, just like whether 09 or earlier, you go through periods in the market. And this is typical when economics start to change, is that you have buyers that say, okay, with the debt cost and cost of capital, if debt costs rise, companies aren't worth as much. And sellers usually are much slower to react. So you see that in the markets. And even for us, as we look at opportunities, when debt, we could lock in debt at, low single digits, and it's up significantly if we wanted to finance something, it changes the return on the investment if you look long term. So until prices adjust a little bit, if this is the reality in the midterm to longer term at these rates, which aren't record rates, but people are used to free capital almost with free debt for a while there. So that takes a while to happen. So it has to go through. Once people settle in on both sides, then you'll see activity pick up. The question's when, and that's the question. We can't answer. They like to talk about green shoots when we saw a little bit more activity. And our activity was up this last quarter reported, but we don't see anything growing really fast, right? There's some activity, but certainly not the levels that we would expect in normal environment.
So your experience directly brings to bear for the firm at a time like this, when you're thinking through how to be nimble and opportunistic, and kind of looking at the period and knowing there's going to be some opportunities, as you hinted at before. Just walk us through what that means.
I think part of it is just the message to think long term. During the mini banking crisis, in March last year, a lot of people said, oh, rates aren't going up, and they locked in and panicked, and that put them in a precarious position. We just don't make those bets. We let our balance sheets float, and people said, what happens if rates go up? And I go, well, we'll make more money. What happens if rates go down? We'll make less money, but we'll make money in either environment. And so keeping flexible and thinking long term, if people are overpaying short term, they'll just ride it out. Economic reality comes back. And I think that's why through all these cycles, this year we had over 22% return on non-tangible equity, taking out non-tangible equity. And even in 09, our worst year, we had a 7.9% ROE and made money every quarter. And taking that long-term view, not taking bets, the opportunities come back. You tell people, hey, been through tough times before, whether the bankers or in the fixed income business, it's tough for them. Right. But the markets will come back. So hang in there, stay close to your clients, try to help them, even though there's no business, to see if you can help them out remember.
That's a great point, especially about 09. Real quickly, then, would you be looking at any acquisitions at a time when we have seen a flurry of recent activity?
We're always open to that. If, we're very particular that they have to be a cultural fit. Strategically, they have to make sense. We have to be able to integrate them. We believe they need to be part of the Raymond James family. We treat new people to the family just like people who've been here a long time. And then they have to be at the right price. So I think there are more opportunities. I'm not sure the price adjustments are all there from our side, but sure, if firms that are great fits, we're always ready. And we have capital. It's just all those four factors have to line up.
That's interesting. You think they're not cheap enough yet? If I'm reading between the lines.
Yeah, I think if you look at it, where interest rates are happening with cash sorting, and you're going to have a midterm squeeze on margins. Who knows when the Fed is done? It values that cash asset differently. Somebody's balance sheet, just like a credit investment, financial stocks. And if you look, that's here to stay. That's the value. But sometimes people are thinking it's going to pop right back. Which, honestly, when rates were zero, our industry overturned. And when rates go up, maybe we get squeezed and under. And you have to say, okay, long term, what's a reasonable spread and rate? And that's what the value is to us. So you just have to wait till all those factors align and the good fit and the people fit in, and we can offer strategic advantages to our technology and other services.
Well, we will be watching and waiting to see if you guys do make a move. And in the meantime, Paul, it's great to have you here, especially on a day in a market stretch lately like this. Thank you so much for your time.
Thank you, Tony.
Paul Riley, CEO of Raymond James. Coming up, shares of this company plunged after it terminated merger talks with another big name in the space. Think you know what it is? Tweet me at Kelly CNBC, and we're going to reveal it after the break. And as we head to break, take a look at the sectors as real estate is the top sector of only 3 in the green today. It's up 2%. Consumer discretionary, tech, communication services all remain laggards with the NASDAQ down below the 200-day. And the chip makers, Meta and our parent company Comcast, are each weighing on those grades. The exchange is back after this.
Okay, we'll continue to show weakness.
Minus 800. Extreme low. Take alert.
All right, so my thinking is a lot more conservative while we continue to look for a reversal. Why am I looking for a reversal? We're not going to turn on the dime. A couple of people noticing the same thing. Joe K, Jason over at Three Peaks, looking for this area to hold. We'll see, but it's going to be a process. We're still showing weakness, so we could have more downside.
Elsewhere, shares of Align Technology, the maker of Invisalign, are having their worst day since 2019. Look at that chart. And their lowest level of this year for sure, after posting an earnings miss and getting much lower guidance, down 25% today. Mizuho highlighting how difficult a macro backdrop this could be for the name, saying with mortgage rates tripling, that leaves no money for teeth or terriers in a world of caution for the animal health stocks as well. And again, I'd say there's a post-pandemic unwind if we've ever seen one. Over to Tyler Matheson now for a CNBC News update. Tyler?
Saying several federal agencies are helping in the search for a suspected mass shooter. Garland said the FBI, ATF, and U.S. Marshals are all on the ground in Maine now. Manhunt's still underway for a 40-year-old.
Why do people have to be psychos? You know, it makes it so much worse for people who own guns. You know, for these psychos to go. It's just I don't understand the world we live in. I guess I never will. By the way, Rick, if you're listening, I watched Bill Burr's recent live at Red Rock in Colorado. His new show. It's funny as hell as usual.
Coming up, EQT CEO Toby Rice joins us, fresh off reporting surprise profit in the third quarter. What's driving the results, and could we see yet more consolidation in the energy space after Chevron and Exxon's big deals this month? The exchange is back after this.
Okay. Wow, I can't believe the day is flying by. A reminder again, I won't be here tomorrow talking on the mic. I'll be remote. I'll be in North Carolina at the Research Triangle. Duke University, we have a tour tomorrow with my daughter. And I will be in the chat room. I will be monitoring potential trades and open trades. I just won't be live on the mic. I haven't had a day off during the week, and I can't even remember the last time. So,
If you look at it, it was current dollar personal income increased 199.5 billion, but that was much less than 239 billion a quarter ago. Personal income decelerated. Disposable personal income decreased 1% in the third quarter as compared to the second quarter. Big, huge drop in disposable personal income, and savings
rate
dropped from 1.04 trillion to 769 million. So what does that mean? Personal income's going down, disposable income's going down, savings accounts going down.
Right.
That's the deflationary part of this 4.9%. So what it tells you is we might be 4.9% right now. It ain't going to stay there.
No, not at all. But then if you look at personal consumption, climbed to 4%, and that was hotter than expected.
Yeah.
So people are still out there spending, maybe depleting those savings accounts, right? And taking advantage of that robust jobs
It
market.
doesn't bode well for the future, though.
Yeah.
With those numbers.
Yep, for sure. And, if you take a look at the GDP numbers, a lot of this stuff, we knew coming in that this number was going to be a 4 handle on GDP. It did meet those whisper numbers that you mentioned on the futures show this morning at 4.9% annualized basis there. But one of the stocks is taking a hit today. That's Meta Platforms.
They won't be necessarily pulling their AWS funding so quickly as perhaps a consumer might. So I think that it's
Okay, Mark continues on.
once we get these results. But again, to me, their dominance has just persisted. I mean, they enter a space, they enter like pharmacy, pet food, whatever they do it very, very well. So what I'm curious your thoughts on this, because I've been saying this all day. I must have talked Meta Platforms like 8 times today, so I'm well versed in Meta's earnings. But they reported a really strong quarter. I mean, they beat on pretty much every metric. They did mention some weakness due to some of these geopolitical tensions on their earnings call. The CFO did. We saw their shares sell as a result. So, I mean, could Amazon just post a perfect quarter and then we see another day of selling? To me, it's like the most frustrating thing when the fundamental story does not match the price.
Well, I will say the fact that the stock's $9 lower than where it was just 2 seconds ago helps alleviate that. The problem is those other names sold off because the story wasn't good.
All right, Mark's still going.
It's going to be good enough. What will lead to a rally? And then even if they deliver that, how far does the rally go? It does feel that we're at this point of tension where there's almost like bears and bulls pulling in both directions. And even in the case of Meta, I mean, this severely underperformed the market's expectation in terms of options pricing and volatility. 713, even on the close yesterday was a $25 market maker move. So you got half the move on what seems like a catastrophic downwards 4.5% move in Meta. Now, Alphabet certainly outperformed the move to the downside that it was expecting. But I look at a strategy, Jenny, that simply tries to play it down the middle, doesn't try to assess the landscape. There's a really good chance that there's parts of this story that are good and parts of it that are disappointing, as we've seen with many of these other names that it competes against. And so I look at a strategy that seeks to benefit from that uncertainty and benefit from the fact that maybe it's a lukewarm report and maybe we don't get a huge reaction. Selling an iron condor tomorrow's expiration, so it's risk defined in the event that it is a massive move one way or another. But we went kind of tight here in terms of the selection of the strikes. Did $3 wide strikes on both sides, but collecting $1.25 in terms of the credit. So a little bit more than we typically would look at here. Total risk on the trade, 175. Total max reward, 125. Selling the 112, 128. Strangle buying $3 wide wings. October 27th expiration is tomorrow. Iron Condor, it's a neutral strategy. And of course, we know what it looks like in the risk profile, Jenny. Kind of like a plateau with risk in both directions. You can see that up there on the screen. With this one, we're looking for less. Just do less, kind of come in around this 120 mark would be okay. Up to 125 would be all right. But because it expires tomorrow, you really do find that this is a fairly binary trade. It's either going to, it's going to be out of the money, and there's a good chance that it expires worthless, at least that would be the hope. Or these are going to be tested, and it's going to make tomorrow's trading a little bit more dicey and a little bit more interesting.
But of course, with this example strategy, this doesn't protect you from outsized moves in other directions, which seems to be, I mean, again, it's not like Meta is selling off because that like Alphabet did, but we are continuing to see moves that don't necessarily follow perhaps what the earnings are showing. At least I am still flabbergasted with some of the movement we're seeing today, but we are seeing some hits in the overall market. I think that's attributing to that. So we'll be waiting on all things Amazon. I can't wait to see what they report as far as AWS goes. But we'll leave it there for promo. Now coming up next, we will look at Tesla, which is also moving to the downside today, but making some news. BP signing a pretty massive deal for Tesla's charging network. Kevin Green will have more on that story for us coming up next.
Young lady who's mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through. At the end of the day, my mom
Okay.
including myself. And so once the client knew that she was hurt, we were able to help her.
The client won't care.
Can't believe how fast the day has gone. At some point, we're going to turn. Is it today or tomorrow? I don't know. But a lot of people, a lot of smarter people than me are talking about some traction here. Joe K and Jason and HCPG and a few other people.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
All right, that's all I'm going to do for today. Merck and TLT for now.
Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
All right, nice reversal underway so far. Apologize, I've just been stuck here looking at the hourly chart on TLT. Okay, this continues higher. All right, so I did a buy right on TLT. I bought right at just below 84 and sold the January 85 call. January 85 call. Oh, excuse me, December 85 call. And collected 275 for that. That brings my cost basis down to 81.60. So I like to do that on stocks that are starting to break out and or assets, in this case, a bond, knowing that there's potential. There's no guarantee, but there's potential for TLT to continue this higher low, higher high. Okay. The reason why I'm thinking that is because I keep thinking this is the opposite of what the 10-year the 20-year yield looks like. The 20-year yield looks like this. Looks like the reverse. It looks like it's high at the highs and it's consolidating. This is just taking TLT and reversing it. Looking for this to gather some strength. This morning, I took off the rest of my position. I took some off on Tuesday for a profit. It was about $1.50 plus $1 on the options. So, 250, and I had 200 shares. So doing the same thing, 200 shares, looking for at least $1.50, $2 on the shares, and maybe I'll roll these calls up. I don't know. It's too early to tell. Merck, same thing. Merck did a buy right on Merck, looking for a continuation. If it doesn't continue, I'll wait for a little dip and maybe buy those covered calls back, reassess, or I could roll calls up for credit. I don't know. We haven't decided yet. Merck looks pretty good though. My cost basis on Merck is 106, 103, 103.70. And stock's trading at 106.85. So looking for a break higher. Probably going to consolidate right here. Starting to see a turn. Bitcoin is holding at 33,870. Anticipating Bitcoin will continue to consolidate like this.
a candy bar, maybe get a Gatorade, whatever it may be. It's all lost revenue if you're never there. And so getting these charging stations there is going to be good for those, independent small business owners that are, own those convenience stores that are associated with the gas stations as well.
Exactly. That's why it's a win-win, Alex. It's going to be able to attract customers, maybe existing customers.
NVIDIA is turning.
Be able to provide the foot traffic into the convenience stores, which provide higher margins when it comes to their product. Just think about it like
Volume.
the low end of this range here. There's 130,000 retail gas stations here in the United States. That's the lower end. I saw estimates up to 150,000. So think about that potential there for the independent owners that are out there, as you were talking about, or those that actually command a pretty significant network of gas stations. I mean, the opportunities could be endless, and just think about the infrastructure spend that is going to be out there, the CapEx spend that Tesla could be able to benefit. Not only just Tesla, but some of the other car automakers that are out there that's going to be able to sell their cars a little bit easier, as the consumer is going to have a little bit more peace of mind that they're going to be able to charge all across the United States. So I think this is once again a really great opportunity here. Very small. It's very it's in its infancy stages. A very small sliver of Tesla's portfolio.
All right, so the deal with Merck. So let's take a look at XLV. Okay, starting to bounce right here. What's IHE, the pharmaceutical sector, doing? IHE, that's at the low. So Merck is doing it alone. That's hard to believe. AbbVie, that's hanging out. AstraZeneca. Okay, what about Gilead? Okay, Gilead's above the 200. Let me go take a look at the pharmaceutical stocks that we follow. Pharma, where are you? Pharma. Pharmaceuticals, there we are. Okay. The list, pharmaceutical list. Okay, so Merck, BioNTech, Ironwood Pharmaceuticals, just sitting there. Okay. Pfizer, turning off the low. These look okay. LGND. Corcept. Higher lows. So Merck is kind of standing out by itself right now. I like when all stocks in the group are moving together. Don't have that yet. Let's see what Jazz looks like. Jazz still consolidating. Lagon, that's still trending lower. GlaxoSmithKline, been trending. Got rejected. Johnson & Johnson. Nope. Okay, so Merck is standing by its own right now. Merck.
Ready for you, ready to go. I'm Kevin Hickey. Catch me on Fast Market, weekdays at noon on the Schwab Network.
I already marked this up once on a different list. Okay, so that looks good.
Market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern.
Volume.
Anytime, anywhere on any device.
MACD and stochastics turning up. That looks good. All right, cool.
No politics, no noise. From bell to bell and beyond. Anytime,
Merck.
anywhere, on any device for free. Schwab Network.
Okay, so TLT continuation. All right, this is working really well. TLT going.
Under 30 times, we take a look at Southwest Airlines that continues to plunge, although it's not down as much as it was earlier. It is still down about 4/5 of 1% on the session here. Jenny trades down to 23.42. So a stock that, just a couple of years
Guys, you need to chill in the trading room. All right, we've got a lot of good people in the trading room. Let's keep it civil, please. Appreciate it. I know we can get on each other's nerves, especially on a down day.
They did not look very promising, and I was trying to follow some of the CEO's remarks, which seemed to be optimistic, but it's like, can you prove any optimism when your results don't match that?
Well, I mean, if you look at the price actually speaks for itself, Jenny and Alex. I mean, it's been down significantly. Just look at a 3-year chart. It's actually trading at or below the pandemic lows. That's actually something to keep in mind here for Southwest investors. But they're demonstrating, if you just look at their earnings per share profile, they came in around 38 cents a share at adjusted profits. Now that was down about 12 cents compared to last year for the same quarter, 50 cents. But they did miss the estimates by about a penny. While at the same time, sales were higher by about 5.5% at $6.5 billion. But at the same time, if you look at the revenue per available seat mile, that was actually down by 6.8%. So it looks like to me, despite their increase in sales by over 5%, they're actually not making as much money on a per seat basis. The other thing is the load factor. They reported 80.7%. That's actually quite low. Generally speaking, they have a load factor somewhere in the range of 85 to 88%. And so with that said, I think that we're actually seeing some margin compression for Southwest, which in and of itself, the stock has been under some major pressure since July. But all the airlines also, coincidentally, have been down since that time as well.
George, this has been a sector that's been complicated to investors for a long time. Warren Buffett famously sort of struggling to come to terms with this industry. He's talked about it being sort of the worst sort of business, one that grows very fast when it's growing, but requires so much money to sustain that growth. And then in the end, it seems sometimes never even turning any money around for it. When you start thinking about Southwest, it seemed, at least, over the last decade, to have been the one that sort of hacked the system, the one that had figured out a way to do it a little different than its competitors and was being rewarded for it. But the last year and a half just have not gone its way either, and it's like inevitably all these airlines just disappoint when it comes time.
Well, yeah, I mean, I think, in order to go back to what Jenny said earlier, I mean, Southwest doesn't have the international exposure like United American Delta does. I think the international travel, that was a big, fad for international travel, particularly traveling to Europe this last summer, which has helped sustain some of those other larger carriers, American aside, because we know that company has a lot of debt, as we talk about quite often on this show. So I think if you look at Southwest, there may be some of the domestic exposure is presenting a challenge. Maybe some of the capacity is a challenge, because if you actually look at the utilization, the load factor, it's very low, and that gives me an idea if they've got maybe too much capacity and not enough demand. And I think that might speak to the concentration they have in the United States versus international. It seems like international flights are a little bit more constrained in terms of capacity.
Okay, we got a nice reversal so far. The TLT continues.
At least might be underperforming its respective larger peers in that regard. But what I also think here, larger picture is that,
TLT on the move. This looks pretty good, TLT. All right, I'm probably going to double up my position on TLT probably next week if this continues. TLT, the 20-year bond. If we continue to see strength in TLT, I will most likely double up my position. I have 200 shares. I'll probably add 2. And I don't know, maybe sell some cover calls at a higher strike. Always subtracting from my cost basis so that I can bring my cost basis lower than where I'm actually buying and giving myself a bit more cushion. I'm more conservative. I'm thinking I'm dealing with consumer staples, stocks like DG, Dollar General, healthcare, TLT. I like what I'm seeing on Dollar General. I like to see this follow through next week. Dollar General. Okay, TLT. This is looking really sharp. TLT is motoring higher. Okay, TLT.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me always put people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day.
All right.
SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. Tea Bounce Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week, on SchwabNetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon and welcome to the Watch List. I'm Nicole Petalini.
All right, we got a nice change in direction, SPY. Nice bounce there on the S&P.
Some stock picks as well. Our panel taking a look at social media stocks. So we'll look at names like Meta and Pinterest, Snap, and Google. In the meantime, take a look here at the markets. In fact, we're moving further into correction territory when we saw the NASDAQ down today, down 1.7%. It's well over 10% off the high, 14,100. 46. The S&P also moves into correction territory, by the way, down 38 at 41.48. The Dow losing 169 points at 32,866, and the Russell up a quarter of 1%. Taking a look at the futures products right now, we're seeing the dollar and sitting right at 106.51. That's cleaning slightly. Gold at 19 cents for an ounce of $2. Oil pulls back $2, 83.37, and Bitcoin down 2.5%. Communication services, technology, energy, excuse me, and consumer discretionary are under pressure. In the meantime, Kevin Green, senior markets correspondent, is with us at this moment. Good morning to you.
Good morning and good afternoon, Nicole. We are seeing a lot of volatility in the market, but you may have found a little bit of a bottom here in the near term. So we can actually look at a 1 minute, 1 day chart here of the S&P 500 and look at some of the price action that we are seeing in the market. We did start off a little bit strongly, if you wanted to say the least here, but we did see a little bit of a pullback after we got some higher than expected data when it came to GDP. And we actually had some initial guidance claims that were actually favorable for the market, to say the least here. And actually, after we got that information, we did see the market kind of try to digest it and then move back to the downside here. Now we are trying to test this 4130 level, a very key area of support. It's around the 68% retracement level from the S&P 500 if you're looking from low to high. So a lot of traders are really focusing on this area right now. We can continue to see buyers coming in. We tested again, buyers continue to come in. So right now, that's where we are floating. We could see some resistance at around 4150, but once again, trying to really digest some of this data that we are getting, with this hot data, and the market's really trying to see if and or when the Fed may take additional actions or if they are going to cut rates anytime soon. We can also see this reaction within the yield market, seeing a little bit of a pullback. And this is actually really good to see if you are a bull in this marketplace. We were testing these highs at around that 5% level, but now we are pulling back, and right now we're at around 4.84 on that 10-year Treasury future. And we also had a 7-year Treasury auction here, Nicole. It's not a very popular auction, but we did see a really good auction, to say the least. A 2.6 bid to cover ratio. Only about 11% of the overall offering was taken down by dealers, which is really good. That's why we also saw yield moving to the downside. A rare reaction to a 7-year auction, but really good if you are a bull in this market.
Right, thank you for that. Kevin Green, good to see you. Appreciate it. Now let's take a look at the bigger picture. Denver.
Okay, TLT, a little profit taking here at the highs.
Thanks for being here.
Thanks so much for having me, Nicole.
So it's sort of tough to start out a show and say this one's in correction territory and that one's in correction territory. But at the same time, I know traders always like a little pullback because it provides some opportunity and gets rid of some of the frothiness. What's your feeling about the market at this point?
You know, we just recently published a research report titled "There's Always Something to Worry About in the Markets." And I think in many ways our economic models, our market models have been negative really for the last 12 months or so, dating back all the way to the growth pullback and correction last summer. What's interesting is most of those models have been wrong over the last 12 months. Right. We saw the Magnificent Seven and other technology and discretionary names move the market higher. What we've been grappling with today is really this disconnect between what those models are telling us in terms of things like leading economic indicators being incredibly negative over the last year, although then reconciling that with a GDP print of 4.9%, right, and a Fed now forecast of over 5%. So we're really seeing a disconnect in what's happening out in the real economy versus what some of these tried and true
Coinbase,
so that's been a
bit lower.
Yeah. When you check Fed funds futures, for example, I mean, we really don't see the likelihood of a rate hike coming in October, November.
Bitcoin.
Even for December, it's at like 20% or so. So at this point,
Okay, Wells Fargo continues to ramp higher. Wells Fargo. Okay, what's going on with Wells Fargo?
Yeah, so I think we're trying to think about what could go right and then what could go wrong, and obviously make sure that we're positioning
Wells Fargo on the move.
both cases. I think in terms of what could go right for the market is something that, again, with all this negative news, especially of late, it's easy to forget about. What could go right is could consumers can continue to spend. I mean, we saw that the GDP print was really fueled by more than 4% growth in consumer spending. We have seen the labor market be much firmer than anticipated. We've seen job openings increasing slightly. We've seen voluntary leaves slow down a bit. But really, with the labor market so strong, continuing to support consumer spending, it's possible that the
Wells Fargo on the move.
to be strong as we see. What will do well in that environment? Certainly cyclicals that, from a valuation perspective, look much more attractive than consumer discretionary or technology names. Interestingly, when we look at equity valuations, which is another part of our model, which looks deeply negative, if you look under the hood a little bit and look at forward-looking PEs across sectors, we see value in energy, in financials, where earnings yields are well in advance of the 10-year treasury yield. Contrast that with consumer discretionary, contrast that with technology, where you're really not getting paid to take that risk.
And when you look at energy and financials, you also have dividend payers. Sometimes you get paid to wait, right? That's another strategy.
That's right. Yeah, you think about rising interest rates. Certainly it affects your bond portfolio and the duration risk that you're taking there. I think sometimes we forget about the duration that's built into our equity portfolio as well. It's something that we've been doing over the last year is really rebalancing out of those Magnificent Seven names, those growth stocks.
Wells Fargo continues to ramp higher. Wells Fargo.
Assets, right? They require that growth in order to generate returns, and shifting more into value-oriented sectors with higher dividend yields and much lower duration in the equity portfolio.
Yeah. At this point now, when you're obviously having to navigate through a very tough time. Are there other things that you watch, whether it's small caps or international?
Yeah, so when we think about what could go right, if the consumer continues to do well, if we continue to see GDP growth in the high fours, certainly those names that are more cyclical, more oriented, higher beta names, small caps come to mind. US value comes to mind. If we look at the spread between growth and value here in the US year to date, performed by about 20%, even given
Apple got earnings next week. Apple.
Just been such a dispersion between growth and value stocks. So we're seeing lower valuations there. Those names will give us higher beta if the economy continues to do well. So we like large cap value. We like small cap. We think what's attractive at this point. Valuations themselves, though, aren't a catalyst. So while they look cheap relative to large cap stocks, we still would need that GDP growth to really make it happen.
When you think about all the economic prints that have been coming in, obviously we've had the earnings and of this week, a very busy week. We'll still have Amazon today. But when you look at the numbers that have come in thus far, all right, is anything jumping out at you? I mean, we did get GDP, you've had durable goods, you've had so many of these, kind of home sales, you have a lot of these prints. The jobs reports have been revised, and you're seeing that the job market is still very tight. Your thoughts on any of the economic prints?
Yeah, a couple things stood out to me. One, maybe lesser followed than the Magnificent Seven, but the J.B. Hunt earnings spoke to some concerns about consumer spending heading into the holiday season.
Yeah.
And so I certainly think that's something that we're all going to be watching, which is to see have things such as the resumption of spending on student loans. Is that starting to take some fuel out of consumer spending? What does the holiday season look like? What does traffic look like?
So far, we've got a decent amount of shorts, most likely covering. I'd like to see more puts monetizing, in which case we would most likely see the S&P continue towards VWAP, but it's still having problems. Dollar General.
Venture capital secondaries down 50 to 60%. That's where we're starting to see these higher yields really starting to bite into capital costs and capital expenses. So we think there will continue to be this dichotomy between the haves and the have-nots in terms of high-quality names that aren't as effective.
Denver, great to see you.
Thank you so much for having me.
Thank you so much, Denver. Cowan Family Office. Thanks for being here. All right, coming up next, of course, earnings season rolls on. We'll have Amazon today after the bell. We're watching names like Meta, for example. We're watching small caps, too. We'll get into that group a little more coming up next.
All right, now we're starting to motor. Get your motor running. Head on down the highway. Look for adventure, whatever comes your way. Nice.
I definitely feel it to be in that position.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here on the New York Stock Exchange, Trading 360, only on Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
All right, nice follow through. S&P is starting to gather some support. More coming through. So whenever I say, anticipate this is shorts covering, when you see these initial candles, consider that short covering. But once we start to see more bullish candles, number one, that puts are monetizing. Number two, there is some new money coming in there as we start to reverse. Some early adopters or early traders. The longer this bullish reversal lasts, the more green candles we see, the more confident that we can be going into tomorrow. For now, just shorts covering, and it looks like, see the volume's not really that big, not ramping up that much. I would like to see more volume.
Hi, ticker plus 800.
You get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting. Bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to the watch list. We are live in Philadelphia, live at the Charles Schwab Impact Conference 2023. Jam-packed, a lot of discussions on finance and leaders, and it's been really in the meantime, wanted to take a look at some more movers in the market right now. Western Digital stock is down at this moment, down more than 10%, after reports of the company's scrap merger talks with Kioxia after the two firms were unable to come to a deal. Despite this, when they reiterated its outperform rating, stock maintains its $60 price target. Whirlpool stock tumbled to its lowest level in 2020 after putting in a social fiscal year guidance. Shares lost more than 20% this month and 25% year to date. Merck is an earnings winner, jumping today after crushing earnings estimates for the third quarter and raising guidance for the rest of the fiscal year. Sales of Merck's capsule drug Keytruda brought in more than $6 billion in sales in the quarter. Shares are up nearly 10% from the last year. UPS stock dropped to its lowest level in nearly 3 years today after the company missed earnings estimates for the quarter and cut guidance. Revenue fell 13% year over year as macro concerns continue to weigh on all packaged segments here in the U.S. and abroad. In the meantime, taking a look at Bitcoin, which hit the recent highs this year, costing $35,000, is since pulled back some $34,040. All right, so for more on the markets, the big picture, Brian Bendick's with us, President MJP Well, if you're glad you're here, Brian. Thank you so much for being here. So, you said in your notes.
All right. So, to just reiterate, I'm a lot more conservative as we trade lower and lower. The trades that I am taking are more defensive, and I'm always selling premium to give me even a larger margin of error for TLT, for example, or Merck, selling covered calls for at least $2 or $3. That brings my cost basis down $2 or $3 per 100 shares. So that helps me out a great deal. If the position doesn't follow through, I take the covered calls off for a profit, close the position, and then reassess it, wait until it starts working again. So I'm a lot more conservative. We have to see a turn first. This is not helping. US 20-year at the lows. We want to see this continue lower. Okay. So still having issues with yields. Need to see this moving lower. Okay, so we hit the highs. We hit the highs on the 20-year. Around the same time everything else peaked out. Okay, so we peaked out on October 23rd. What's that, Monday? Monday we peaked. And we want to see yields continue to move lower if you're bullish equities.
Into supply chains being insourced back home and just re-looking at the distribution channels and how companies are trying to manage costs. I think there's a lot of investment that's still going to happen in the industrial space moving forward.
Right, and small caps and healthcare also were on your radar. But before we expand into all of that, you have had some names that you talked about. Maybe you can give us some dates. Ferguson, Deere.
Yeah, these are all names that I would say I still like all three of those. And again, it's because we're looking at valuation, Nicole, kind of focusing on where we think the puck's going to go from a demand perspective. You don't have to buy into the highest price stocks and mega cap tech to get exposure to a trend of innovation like Cisco's doing, and they acquired making software acquisition of Splunk. It's quite interesting. Deere is going to have a demand cycle that needs to happen in agriculture to retool equipment. And they're also thinking about innovation. And then finally, we take a look at Ferguson, for example. It's a little bit on a global play, a recession-proof type of business with annuity income and revenue and profits coming from HVAC. Something that's dependable and predictable. So again, you don't have to get too complicated in this environment to find value, I still think.
Yeah, as you talked about healthcare, United Health is a name
Yes.
that jumps out. Is it possible long-term play?
Absolutely. So if we think about the healthcare space, you just spoke a little bit about Merck as a great example earlier. I mean, there is progressive improvements of innovation and therapies coming out of big pharma, but then you also have insurance companies like United Health that have a durable base of an aging demographic in the U.S. with a stable business and predictable cash flows. Those are some of the names that I would say that, look, when you see the market pulling back, maybe you nibble on some other areas of opportunity, but also don't forget that 490 companies in the S&P really haven't participated this year, and some of these names we're talking about, they're in that list.
Well, what about Micron? Where does that fit? Because obviously we've seen some of the semis doing so well. You talked about NVIDIA.
Once again, I know I've said this a number of times, but for those of you that'll be in the trading room tomorrow looking for a live broadcast, I won't be here. I won't be behind the mic tomorrow. I will be in the trading room, but I won't be behind the mic because I'm going to be on the road again. I'm going to be on the road again. And first time I've taken a day off during the trading week. It's a good day to do it too, by the way. Friday is generally not that much going on. So I'll be in Durham, North Carolina, visiting Duke University with my daughter. Okay, so we'll see you guys on Monday. So after today's wrap up at the close, I'll just be in the trading room tomorrow, but I won't be broadcasting. So pass the word if anybody isn't here and they happen to show up tomorrow. Just let them know where I am. I'll be in the room, so if I see any messages, I'll just let them know as well. Looking forward to it. I'm psyched. I'm pumped for her. She's really excited. Feels good to see your kids excited about something, you know? There's just so much negativity in the world. And I try to let them know, you know, you got to get off these phones. You got to stop looking at what's going on. You know, just be a kid. Turn the phone off, you know? I know that's, you know, empty words, but man, sometimes I just wish the internet would just go kaput. You know, it'd take a while for us to get back to, you know, a way to trade the markets like we did back in, you know, the 80s without the internet. When did Al Gore create the internet? I forget. Remember AOL and Netscape and all those guys? Netscape. uh,
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums. Unlimited ATM-free rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace Ounce Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Reynolds.
Welcome back to the watch list. I'm Nicole Catalidi. So it's done now. We have Michael Johnson in. Mike Johnson is now the new Speaker of the House. It took a lot of tries and a lot of speakers, but now this is, at least you have this part of it in place. In the meantime, November 17th is the next time we have to approve the deal or else you'll get a government shutdown. And we've seen that in the past, so some time ago, but diverted it on the last round. So at this point now, I'd like to have a conversation about this. Joining me right now, Michael Townsend's with me, Managing Director, Legislative Regulatory Affairs at Charles Schwab. Thank you so much for being with us. We say finally because with all the geopolitical turmoil going on, and the possibility of a government shutdown. We really needed a Speaker of the House, right? This seems to be, people like the idea that he actually negotiated with the Democrats, and was this a good choice?
We'll see if it's a good choice.
Politics.
Yeah, we'll see if it's a good choice. I think it's a choice, and that is progress in itself.
Yes.
It was clear that there was a growing frustration with the fact that they couldn't do anything. 22 days we didn't have a speaker, and they couldn't do the most basic of legislative, anything. So I think that just kind of wore people down, and it got to a point where here was someone who, frankly, hadn't made a lot of enemies.
Right.
And some of the others had made enemies along the way, and I think they were like, "This is somebody we can, we can try."
Yeah.
And so he's got a big task in front of him.
Right, and so we, made it through on the last round. Sort of averted that government shutdown. Now you have November 17th is the next date. What was the last one? 2016, 2019, something like that.
2018 into 2019,
Okay.
or December to January.
The question is, too, is if we are to have government, what happens to the markets, the economy? That could flow the economy, too. What likely scenarios do you see?
What?
Yeah, well, first of all,
What's up?
I think the chance of a shutdown.
I don't have any treats. They're downstairs. I don't have any treats.
I think there's a sense that it's going to be really hard for a new speaker who doesn't really have a team and
downstairs.
doesn't really have big staff to,
Treats are downstairs.
in the next 3 weeks. So he's already talking about pushing it out to January or possibly even April to delay, just get more time. But, historically, the markets have not cared much about government shutdowns. S&P 500 has actually gone up in the last 5 government shutdowns, which probably tells you something about how much the market thinks of Washington. But, I do think if it happens in November, not good timing for right before the holiday shopping season, could be an economic impact. But I'm starting to think it's more likely to push off to early 2024.
Yeah, we've had Janet Yellen out talking about, she's been talking about long-term yields, and those will, it's possible long-term yields will come down. No one knows for sure. Fiscal sustainability is critical. We know that they are going to be meeting, Speaker of the House will be meeting with President Biden and the administration. And she also noted that Biden has proposed this deficit reduction plan as well. So, and that fiscal plans are really important, right? In monetary policy, fiscal policy, they've all got to work together.
Yep.
Right? What are your thoughts on some of these headlines that are crossing? And do we see the soft landing?
First on the fiscal side, there are 2 competing things going on here, right? On one hand, you're talking about spending cuts, deficit reduction. On the other hand, the president just proposed $105 billion in emergency spending for Ukraine, for Israel, for border security. Then he just proposed an additional $50+ billion in emergency spending for disasters here in the U.S. and for childcare and other domestic priorities. So, at the same time that you're having, at least starting to have a serious conversation about getting the deficit under control, you're talking about moving emergency spending, which is going to increase the deficit. So I think that's going to be a real challenge for both the president and the new speaker to try to negotiate.
There is so much going on because now the new speaker has to, fully understand and get involved in Israel, Ukraine, border security. We're trying to rein in our deficits, but the kids are not paying for all of this at the same time.
All right, so we got an hour and a half to go.
Right, I believe we could just erase all of those, spending more. I mean, I'm not saying what's good or bad, but what it does do is add to the bill.
Absolutely. Right? And, part of what we're talking about, even when Republicans are really pushing on the Hill for spending cuts, they're talking about $120 billion in spending. Our deficit is $1.7 trillion. About a tiny fraction of moving the ball in that direction a little bit. But, that's what makes this so hard. Everybody on Capitol Hill has programs that they love, they don't want to see cut, they champion, and that makes, voting for anything really, really difficult.
Do you see any meaningful action that could happen between now and the end of the year, now and the next election?
I think it gets harder and harder as you get, past the end of the year. I think it's going to be difficult between now and the end of the year just because of the new speaker and, he doesn't have relationships on the Hill really with the Senate especially. And I think that's enough. Continue into a presidential election year where it is traditionally very hard to get big legislation. So I think we're going to spin in our wheels a little bit for a while here.
Yeah. And look, the Fed doesn't like to make moves too.
All right, so we continue to drop off yields. All right, so we can still bounce, and we're not going to go straight down. It certainly looks better.
And now really the focus is on when do rate cuts start. Right. And you see that as a moving target. Is it, May, June, July?
2 cuts, not 4 cuts. Right.
And fewer cuts maybe than we thought a couple months ago. So I think, obviously we're going to be in this higher for longer sort of stage for a while.
And look, the chairman and, Fed Chair Jay Powell, they're not supposed to cave to the president. But if you start to cut, will there be more liquidity and people will feel better and will the economy pick up just in time for an election?
And then they say historically they don't cut much around an election, or they don't try to move rates too much around elections. So it's a pretty narrow window they're leaving it themselves.
Yeah. The ECB kept rates unchanged today. Where does the international picture fit into our economy? Not the geopolitical risk as much. In fact, Janet Yellen said what's going on in Israel and Gaza that hasn't had meaningful impact around the world. So that was something like that was her language. When we think about our economy and our bottom line.
High tick alert plus 800.
Are there black swan events that you're waiting on or things like that?
It feels like we're seeing black swan events. Yeah, certainly 22 days without a speaker was a black swan event in my experience. So, but what I'm really interested, I think, in geopolitically is the U.S.-China dynamic. Because you're seeing on the one hand, U.S. taking steps like discouraging or prohibiting investment by private funds in certain sectors in China, right? So
extreme high tick alert.
At the same time, you're seeing diplomatically a lot of senior U.S. officials have been going to China, really, I think, priming the pump for a meeting between President Biden and President Xi of China later this year. So you've got this kind of, fist and road.
All right, got a nice rally going.
How that plays out into next year, I think, is really interesting.
We still have, we look at the growth that we're seeing, less so in China, but Japan, India, you're seeing faster growth. Inflation is present in Europe.
They say Japan is the most exciting market in the world right now, and that hasn't been said for about 2 decades.
Yeah,
so.
Exactly. I mean, what about
20-year looks like it's rolling over again. Okay. TLT should be rocking and rolling. TLT flag looking for a break higher.
Extreme high tick alert.
And really, I think a lot of people overthink what happens in Washington and its relation to the markets, particularly when you head into an election year. Passions get very high. But I tell people, elections don't move the markets. They usually have some reaction, but typically there's a huge gap between an election and actual policy happening that could affect things. So don't get over emotional around the next year, around the election. That's not going to be a huge factor in the market.
And a lot of these headlines are knee-jerk reactions. And within 5 days, we're back to sort of where we were, right? Like, where were the government shutdowns?
Absolutely. And that's what's happened to us. Government shutdowns have happened. There's usually a little bit of a reaction, then the markets move on.
Yeah. Michael Townsend, great to see you. Thank you so much for this discussion.
Cassava, nice follow through.
Thank you. Michael Townsend and Charles Schwab.
Cassava, nice follow through, Grover.
Look at the home builder stocks and get ready. We'll have social media stocks as well coming up.
Born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
All right, Cassava Sciences, it's higher again today after yesterday, following through.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets.
Cassava Sciences continuation on the breakout.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Lynn.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Pedalides, live at the Schwab Impact Conference. Markets have been under pressure for the most part. Correction territory. In fact, we're in the thick of earnings season, a slew of economic prints as well. In the meantime, take a look right now. Across the board, you have red on the screen with the exception of the small caps. Russell's up to 0.5%. But the S&P 4158, everybody's watching one crucial support level after the next when it comes to the S&P. The Nasdaq down 1.3% at 14,190. Again, more than 10% off of its recent highs. And the Dow down 84 points as we speak. For some of the biggest stories in the markets, we welcome in Jenny Horn, markets correspondent here on Schwab Network, and the very latest when it comes to the UAW and Ford.
So Ford, I mean, this is really great news, Nicole. We're not necessarily seeing that reaction in shares in real time. We're down about 0.6%, but I attribute that to the overall market weakness, not necessarily what was a huge win for the UAW as well as Ford. Those employees have been out of work now for 6 weeks. So, well, I do think this was not exactly what the UAW first proposed. It is definitely a step in the right direction. They did reach this agreement. The agreement does include this 25% pay increase and will cumulatively raise the top wage to more than $40 an hour, including a 68% increase for starting wages at $28 an hour. Also does include the reinstatement of some of these cost of living adjustments, a 3-year path to top wages, and the right to strike over plant closures. We have to wait for this to be officially approved once we do get the UAW leaders to vote on the deal. So this is tentative. But now the question is, then what does Ford's earnings look like? And I will say that this seems like a huge hurdle for these UAW employees, but it is expected to have a pretty sizable material impact on Ford's not only to be reported quarter, but also now the long term. GM earlier this week withdrew its EV target, so that is something that the street is expecting of Ford here. We've seen some weakness in shares, but again, I feel like the short term pain is for almost long term gain because finally we do have some of these plants reopening and we have people returning to work, which is something that's so needed when you have 57,000 UAW employees as Ford.
Right, understood. And then a name like Amazon, which is up over 40% year to date, but has since pulled back in the last few months. Today is the day. We'll hear from Amazon after the close. What are folks focused on?
I feel like right now the only thing that seems to matter is cloud, because we heard from Alphabet with posting strong results, but some cloud weakness or not accelerating at the pace the street would have hoped for. And we saw Alphabet suffer its worst day in almost a year. Then we saw Microsoft, which accelerated its cloud growth again. That was a huge win for the stock. So now Amazon will settle the score. Their AWS segment is lucrative, has slowed its growth In the recent quarters, it fell to around 12.2% growth. In the June quarter, now expecting to see around those 12.9% growth. This is significant. This marks the first sequential increase in growth since 2021. So, while the e-commerce business is obviously huge, they do also have their Prime Video. We have the NFL streaming on that today. None of that seems to matter. It's all about cloud. So we're watching those AWS figures to see if they can improve.
Yeah, understood. Jenny Horn, thank you so much. Good to see you. Really appreciate it. Thank you. All right, let's get to our next topic, a focus on ETFs. Joining me right now, Shauna O'Hara, President, Pacer ETF Distributors. Thank you for being here.
It's nice to be here in person and see you face to face for once.
And yes, exactly. And it's been a great conference. We've had a lot of conversations.
High tickler plus 800.
It became so popular at one point. People love the idea of having multiple stocks, less fees. They have thematic investing. How do you think people are viewing ETFs these days?
It's kind of an interesting trend going on. For every dollar that's been coming out of traditional mutual funds, it seems like there's been a dollar going into ETFs. So I think from the investor's perspective, the wrapper itself probably has a greater appeal. You think about the transparency, you think about the tradability, you mentioned cost, but perhaps the biggest issue would be the tax efficiency. So for years and years and years, the only way to get a pooled investment would be to buy a mutual fund. And at the end of the year, the portfolio manager had to settle the books if they sold stuff at a gain, sold stuff at a loss. They have to distribute whatever was left after that. ETFs have the ability to sort of rebalance without taxation. And I think it puts the investor in a better control position as to when they pay their tax. I think that's probably...
All right, Cassava, for those of you who took Sava.
Some different topics here. I mean, when we think about energy, for example, energy was the forgotten sector for a decade. Those poor energy investors were waiting forever while the bull market was running. But the last couple of years have been pretty exciting when it came to energy. You get dividends, pay while you wait. We've since pulled back. But energy, you still think there is value there, right? For ETF, tell us why.
We're overweight energy in all of our value-based ETFs. We use free cash flow and free cash flow. The biggest change in the energy sector has been a change from a focus on creating new production to a focus on being good stewards of capital. So what you've seen is, and you saw just Exxon and Pioneer.
All right, I sold those shares of Cassava, and I took the proceeds and bought some at-the-money January calls. Okay.
They've actually pulled back on that CapEx. And so as the oil prices have risen, in combination with that, you've seen sort of it's a bad word to say, but a gusher, to use my energy analogy, right? A gusher of free cash flow in this sector. And so the last couple of years, having that big position we've had in our energy has been a great ballast against the market. It helped us be positive last year, for example, in our large cap study versus down for the broad market. And those stocks are trading at such cheap valuations. And the biggest thing to me is I don't think we've solved this short-term supply-demand issue, right? So we drained the Strategic Petroleum Reserve. The tanks at Cushing are almost bone high. There's still big demand out there. And until we solve that problem, I think the energy stocks are well-positioned going forward.
Look, they need to replenish that, that's for sure. You've had a lot of action, to your point, when it comes to mergers and acquisitions. You have Exxon doing a deal, Chevron doing a deal, and today ConocoPhillips in the headlines. Does that help an ETF, or does it make it exciting to be in the group? I mean, there's still talk of more mergers to come as they try, to your point, they use the money to get companies that have acreage close to theirs. They can, grow through the acquisition, right?
Yeah, and proven reserves that are sitting dormant. So, I think you're going to see more and more mergers and acquisition. When you have such an excess of free cash flow, right? Yeah. You can really only do four things with it. You can pay dividends, which they have. You can buy back stock, which they have. You can do R&D or CapEx to a certain extent. And then you can buy somebody. And so they have so much money right now that I think you're going to see consolidation continue because it's much better if I'm an energy producer to buy somebody else who already has the infrastructure in place than to go out and look for new oil and new supply by building over
It's an exciting group. I didn't mean to turn this into an energy segment, but it's been an exciting group, especially in the last couple of weeks. Because you have geopolitical tensions jumping up, you have 3 deals. It's been a busy group. I'm going to skip over home builders and healthcare for a moment and get to commercial real estate. Tell that area?
To me, commercial real estate right now is probably uninvestable as a category. At some point, it will become a bargain, if you will.
Yeah.
You have to understand what's going on there, Nicole, is you have about $1.5 trillion worth of commercial mortgages that are going to roll over in the next 12 to 18 months.
All right.
They're going to roll over at higher rates.
Yeah.
They're going to roll over on buildings that are only 60% occupied. So the asset itself is going to have to get marked down in value. And so it'll be difficult for these commercial real estate properties to get the financing they want, to get the multiples that they want on their locations. So I think there's going to be a massive repricing. And so for now, it's, to me, it's a place you should be staying away from. Doesn't mean all real estate is bad. You have data centers and things like that that are attractive. But on the commercial side, we need to go through a sort of a washing out of some of this. And then after that's over, there'll be really a great opportunity to buy properties at much lower prices.
What about names like Pfizer and Moderna? You like those, right?
We own Pfizer. We own healthcare as an overweight. We own names like McKesson, which is a supplier. But Pfizer's kind of an interesting name. We've owned it, made a lot of money on it, and it cycles out. It's back in the portfolio. Its stock price is obviously way down here to date, so it's relatively cheap compared to where it used to be. And so, you know, they're trying to package the traditional flu vaccine with the COVID vaccine. And they say they're working on a pill form of the Ozempic or Wegovy. And so that's been a big driver in healthcare. So I think, you know, they got a good product pipeline. They're a well-positioned company. They're a lot cheaper than they used to be, and they still have tremendous free cash flow.
Yeah. Even in a high mortgage rate environment, home builders you like, international as well?
Yeah, so the home builder thing's kind of like counterintuitive, right? Nobody wants to sell their house if they own it because they've got a 3% mortgage.
Right.
I don't want to trade up to a bigger house with a higher mortgage. So all that supply is sort of coming off the market. And so for people who want to buy new houses, the only real game to play is to buy a new house. And so we own that. That's what the home builders like going on. International to me is like a tremendous opportunity in terms of valuation. It's been difficult to invest internationally because those economies just don't grow like ours.
Yeah.
But if you use a screen like free cash flow and free cash flow yield to weed out only the names you want, you wind up with much better earnings growth by doing that internationally than the broad indexes. And so we're starting to see big flows into international and global. They trade at massive, massive discounts to what they historically would. And their dividend yields are very, very high today comparatively.
Right, right. Sean O'Hara, Pacer ETF distributors. Great to see you.
Good to see you.
So much. All right, coming up next, we're looking at those social media stocks, names like Meta, Pinterest, Snap, Google. What do you need to know? Our panel is ready.
Yeah, as far as Bitcoin is concerned, folks, I'm not trading all these altcoins or anything like that. I'm just trading Bitcoin. Okay. Sorry. I'm just trading Bitcoin. All right, in my account. So I'm looking for Bitcoin to go, you know? Wish it was one for one. I wish it was one for one. You know, this moves, 8,000 points? You know, can you imagine? If you were, you know, for every 100 shares, you got one for one. You know, Jerry, show me the money. All right, SPY continues to move higher. So this is looking good. All right, so what we need to see is, there goes Cassava. Cassava is going.
Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Slot Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Swap Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device.
All right.
Missed out on today's market headlines? Get caught up and catch the rest at swapnetwork.com. Available anytime, anywhere, on any device for free. Welcome back to the watch list. We're taking a look at some of the hot stocks that have reported this week. Meta Platforms, the very latest of the Magnificent Seven to come out with its report. The company we talked all about the year of efficiency. Remember that a couple of quarters ago. So much discussed when it comes to names like Meta, Pinterest, Snap. Find out why one of our guests like Pinterest more than Snap. Let's see which ones are the favorites and why. Doug Ashcroft's with us. Managing Partner, Exponential Investment Partners, and Tinto, Managing Director at Exponential. Thank you both for being here. So, what did you think of the Meta numbers overall? Doug, I'll start with you. I mean, it seemed like they were pretty good, even if the stock is dropping.
Yeah, we thought they were great. I mean, 150+% earnings growth, 23% revenue growth. I mean, that's pretty impressive for a company that's been around as long as they have. And, they're still the dominant social media company with 3 billion monthly users. And they're really the leader. I mean,
Okay, nice follow through, nice volume.
really nothing to dislike here. I just think the market sentiment is so bad right now when it comes to tech. And NASDAQ's now in a correction. So I think it's just really market sentiment more than their actual numbers that cause the drop. And we still think this is a great company to own, and we expect big things from them in the future. So we really didn't see anything to dislike at all in their earnings.
Here on Alphabet as well. But Clint, what did you think about when you think about Meta, when you think about all the other names? What stood out to you? What are some of the takeaways of this week?
Yeah, it's another lesson in attributes of trying to chase strength. This stock was up 270% off of the lows. Meta or Google, which we'll talk about, was a 70% move. So it's not surprising at all for me to see these stocks pull back. In fact, from a broader market perspective, to see the small caps up today and some of the more interest rate sensitive stocks up today, while the mega caps pull back, is probably the best thing the bulls could have going for them into the end of the year. But the numbers were solid.
High tech alert plus 800.
All right, high tech alert. All right, we're starting to rally nicely here.
They're on pace to basically earn $17 next year. That's 16 times forward earnings. We're not talking about extravagant multiples here. But at the end of the day, they softballed their guidance. And anybody chasing a momentum play like this, they have to get out whenever that transpires. So that's not surprising at all. The question is, where does this money go after it leaves these hot names? And I really would like to see it go into other areas that have really been beaten up here.
Yeah, understood. Doug, I know you said you'd like to take advantage of a dip in Alphabet. Google said, look, you like Pinterest a little more than Snap. For Meta.
All right, we got a hammer building on the S&P now.
Not necessarily to jump in on a name like that, but you do like Alphabet Google, right? Tell us more about that.
Yeah, we think Alphabet is really the stock to go with out of the group. It's got the most attractive valuation right now. And the size of the sell-off after their earnings yesterday, the sell-off during the day, they were down 9.5%, which is the 5th largest market cap single-day destruction for a U.S. company. And it's about the market cap of Nike that they shed. So this is just an extreme overreaction to, again, very strong numbers. And we think this is a great entry point. They're just giving you a great
Can't touch this. No. Can't touch this. Hammer time. Oh, cool. Cool.
Reported that one with some lackluster guidance. Quinn, you noted that. You said you're a big Meta fan. And Pinterest is one you're interested in. Tell me about that.
Yeah, so this is interesting because Pinterest, they got earnings coming up on Monday. 20 cents is the expectation. I think the whisper is 24
plus 800.
on $743 million. But Pinterest doesn't have any debt. They're trading at a 20 times valuation.
Yeah, Grover, if it does flip, I've been waiting for a trend to reverse and follow through. If it does, I'll be taking bull put spreads. Okay, I'll be looking for credit bull put spreads next week. I won't do it today. I was thinking about it today, and use the low of the day. And sell some puts just below today's low, but I'm gonna wait. I'm gonna wait until next week. I think better odds next week.
We just think Google's probably our top name. It's got the right valuation. You're buying it on this weakness after strong earnings, and we would stick with that one. And let's see what Amazon does tonight. That could be an interesting influencer to how the market trades.
Do, 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 do.
Thank you both for being with us today and taking a look at those names. Really appreciate it. And thank you, friends, for being with me here live from the Charles Schwab Impact Conference 2023 at the Philly Conference Center. Really enjoyed our conversation and time together. I'll catch you tomorrow back at the New York Stock Exchange. I'm Nicole Petalides. Keep it right here. Oliver Reddick, Market on Close, next.
I was born on the south side of Chicago. It's been a long road, but now I'm working for them. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
I'm Nicole Petalides, the ICU of Stock Exchange on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from
up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
High ticker plus 800.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com.
Extreme high ticker.
Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. afternoon and welcome to Market on Close. I'm Oliver Rag. We are here still in Philadelphia.
Extreme high to
Live
alert.
show from the Schwab Impact Conference. It's been a great couple days. Had a lot of good conversations. We still have a lot ahead in the next 90 minutes, and I'm not just saying that it's packed. Got a bunch of guests joining us talking about a myriad list of topics, popular strategies that folks have been discussing here over the last few days. We're closing out with Mario Cobelli's latest stock picks at the end of the show. And we've got markets trying to find some stability. It's a really interesting session today as we get ready for inflation tomorrow. Looking at where stocks are now, there's plenty of red, but there's actually one pretty bright spot of green too.
All right, watch Cassava.
Lowly small caps, the worst performing index of the past year, suddenly deciding to outperform today. Okay.
High to alert plus
Meta
800.
didn't exactly deliver what bulls were hoping for in the mega cap world, but it's reclaimed some lost ground. And over the last, call it hour or so, the dollar, which was higher earlier this morning, oftentimes a harbinger of risk off, is cooling down a little bit and backing off the highs of the day. So let's see if bulls maybe can manage a little ramp into the close. Meta's definitely helping as we are near the highs of the session now since the bell rang for Meta. Here's the catch, is that some technical levels are ready to go. Now, because we're not going to be doing my technical cord segment, but wanted to give you a quick reminder and update on what we changed last
Got a nice hammer building, hammer time.
which was the red light for stocks, which was a pretty big deal. Still the red light on bonds. It's interesting today that we are getting a big after a real nice GDP print, but perhaps the bonds
Merc,
are taking a little nap before inflation tomorrow. That'll
murky
decide
Merc.
factor on whether or not we end this week with the 10-year above.
Wells Fargo's still going. Damn it, Janet. I was gonna buy it before it got through 39.50. I just keep looking at it. Shitsky. It's still got to get above the moving averages and stuff. Wells Fargo. Nice pop on Wells Fargo. 3-candle reversal. Looking good. But it's up 100% of its ATR now. So looking good.
Perhaps there's some hope that maybe the macro pressure around our economic data can see some relief. It's a good sign for sure. The bonds responded to that GDP trend pretty calmly, but again, we still have a big hurdle tomorrow with inflation. But the technical levels are not looking good for bulls. Let's go through some of the movers here. A few highlights that I want to put out there. Number one, the underperforming sector and factor and style today is everything related to growth, whether it's mega cap post earnings or just generally some of the higher beta speculative stuff. Equities are being led on the downside by growth. The SPYG ETF goes down about 80 bips. Again, it was worse earlier today. If you look at what's working, the min-vol category alongside the small caps, as far as factors go, vol minimization funds, USMB, SPLV, those are doing okay today. And your companies in there that have generally some of those higher quality, less downside type of exposure that is the goal of such min-vol reducing funds.
Yeah, we got. Let's look at this. Let's look at IWM. Yeah, that's a good idea. IWM.
The risk off move generally today is pretty powerful because even Bitcoin took a hit, but it's been such an outperformer that we're still at 34,000. BTC, of course, waiting on any news from the ETF world. We haven't gotten any updates. Unfortunately, got no secret inside intel figures here. Everybody's doing the same, just looking, waiting, and hoping, basically. The big question will be what Bitcoin does after the ETF. The hype and the speculation and the pump, that is, of course, crypto's number one skill set is hype. Let's see what it does when we actually get the announcement. A little bit of peeling back to some of that euphoria in the crypto world today.
All right, nice reversal so far.
TLT was talking today with some bond managers about persistence of flows into the Treasury fund. And TLT is, of course, leading that. Every time it drops, the money just keeps coming in. So maybe it's bad money chasing, good money chasing bad, stubbornness, whatever it may be. There tends to still be a hope, it seems, judging by flows, that perhaps we will top out around 5%.
All right, Coinbase. We're trying to get Bitcoin back up to the highs. I do have Coinbase. I will say that. I do have Coinbase shares. I'm looking at Coinbase further out in time when these ETFs.
Let's bring in Tom White joining me from Chicago. A couple stocks we're going to talk about here, Tom, but just firstly, I mean, the market really interesting today because Meta was this big problem. GDP could have been a problem, but bonds are pretty calm. The dollar's chilling out a little bit. This could have been a lot worse today.
It definitely could, Al. I think, one of the reasons you mentioned yields, them falling today about 14 basis points lower on the 10-year than it was at the height of the session, just below 5%. But we had a 7-year yield bond auction today, note auction today that came in pretty hot, better than the 2 and the 5-year auctions that we had on the previous 2 days. Bid to cover was 2.70 on the bid to cover. That's above the recent averages for those. Indirect bidders were up to 70%. So that's an improvement of about 65%. We've seen some weak auctions of late, and this was a pretty strong one. We saw a continuation of a bid into treasuries, yields falling, and then also Treasury Secretary Yellen came out with some positive comments in an interview where she said the soft landing might be in sight. She
thanks, Carmen.
Strong consumer and the GDP data that was pretty spectacular in her eyes. So that gave a lift to us when we were.
Yeah, I'll probably.
But, you mentioned some of those.
I'll probably. I want to do a.
NASDAQ 100 in correction territory. So we'll see what the bulls can do here ahead of that PCE data tomorrow.
A little disappointed Treasury Secretary Yellen didn't steal my trampoline landing moniker. I mean, we bounced hard. That GDP was a shocker. So,
but looking for that cycle to reverse probably next week.
It's understandable. Nobody expected it to be this strong. To your point about the auction, good eyes on that, Tom, because we were wondering how that 7-year was going to go today. That's a more important one. The longer we get out on the curve, the more important those auctions are. So you think that kind of helped sentiment a little bit here?
Yeah, definitely helped sentiment because we've seen really weak indirect bidders on a lot of these auctions. And if you look at the size of it, that increased it by $1 billion also. So the actual scale of it was a little bit bigger also. One item of note is that GDP number, and I think people are overlooking this, is the fact that if you saw government spending portion of that GDP number, maybe it wouldn't have been as good or above those whisper numbers that we saw. So keep that in the back of your head because there's still signs that the consumer spending is starting to slow a little bit. So we'll have to wait and get some, maybe some up-to-date numbers. We got consumer sentiment tomorrow, too. That'll be one that'll be highly watched.
Yeah, definitely. Good point there. Okay, so maybe the macro conversation continues tomorrow. Let's talk a few of the micro stories, a couple stocks.
All right, so we are building at the moment, trying to build some higher highs and higher lows. So my thought process is let's look for the cycle to turn next week. I'm interested in, let's take a look at the S&P. I want to show you what I'm thinking. Sorry for coughing in your ear there. All right, let me show you what I'm thinking here. All right.
Over in Japan that basically Western Digital is walking away from potential. Their partner, they develop a lot with them, but the rumor.
All right, so
Speculation swirling about this is that Bain Capital, who owns a big portion of Hynix, which is part of this deal, kind of basically gave demands that Western Digital was not going to meet at this point. So kind of walking away from that merger deal. And then Western Digital has earnings on Monday. We'll have to get some clarity on their how they're doing. But I guess the demands that Bain Capital wanted out of this merger were
okay.
Digital at this point. Okay, so I guess too early to try and sleuth through any macro indications until we get the earnings.
Okay, so what I'm thinking is if the cycle turns next week and we start to rise back up into price action, I'll probably take a not a 0 day, but the following day. So I'll probably if it Monday we get a change in direction, what I plan on doing is like selling a 10 delta put and buy, or a 20 delta put, selling the 20 delta put, buying a 10 delta put for a credit, and look for price action to rise and just keep the premium as price action continues to move higher. But I won't do it now because there's too much of a chance that we could roll over. So once again, next week, if the cycle does change, you can see RSI starting to turn. What I plan to do is sell a 20 delta and buy a 10 delta right below it for protection. Now, what that'll do is it'll give me a credit, probably $300 or $400 per contract, and I'll look for prices to reverse. If it does into Monday, actually, if it reverses on Monday and I can get a credit, if I can get a credit and be out of the trade before the end of the day, might do that as well. So, but one more time, I plan on selling a 20 delta put on the S&P and buying a 10 delta put just below for protection, just in case the markets move lower. But if the cycle turns, it's a pretty good odds that that'll be the low, and we can see at least a temporary reversal. So rather than buying calls, I'm doing the same thing. I'm just using a spread on the S&P, which is pretty expensive anyway, to give me a bullish trade for a reversal. Sell the 20 delta put, buy a 10 delta put. Not until Monday, most likely. Now, if it changes tomorrow, I won't be here, so I won't be able to do it. But at least you guys know what I want to do. Amazon, you're looking at the puts for Amazon?
The last couple months of this year and going into 2024, joining us from Newberger Berman and the Custom Direct Indexing team, Jacob Green is the head strategist and that's partner. Jacob, great to have you here on the Schwab Network.
Thanks for having me, Oliver.
What are you thinking about here at the end of the year? I know you guys have a lot of tax ideas on your mind. People are thinking about that, of course, as the bill comes due on a year where a lot of people are still up on the year too, and capital gains, I would assume.
Yeah, ideally clients are really focused on tax throughout the year. We want to see clients capitalizing on volatility as it comes, as you talked about.
All right, SPY's starting to reverse.
So realizing losses when they're there, not just waiting until year end, because by year end, the opportunities may have been missed and there may no longer be losses. But as we do look to year end, you have to start to examine how are you going to realize these losses. There's three key components there. One, what securities are you going to look to sell? Number two, how much of those securities you're going to sell. Oftentimes, you may not want to sell the entire position because from a risk perspective, it may not.
All right, so that's what I plan on doing. If you missed any of that on Monday, I don't know if it turns tomorrow. If we get a 3-candle reversal tomorrow, you might be able to do that as well. I won't be here, so be tough to do. I don't like doing credit spreads on my phone. I'd rather be sitting in front of my computer. That way, if I need to roll or do anything, I can do it without freaking out because I'm used to trading with my setup, not with a cell phone. So if we do see a follow through tomorrow, I'll probably take a 20 delta put, sell that for a nice chunk of change, buy the out of the money put, a 10 delta for a credit, and look for the reversal to continue throughout the day. Again, it all depends on the way options fill in by the close today into tomorrow. But the thing is, pretty good odds if we do make a change in direction. That's what I would do on any of these bounces. All right, so right here on the low that we saw the third week of August, start of the third week of August, taking a bull credit spread, selling near the money, 20 delta put, buying a 10 delta put out of the money, for a credit and wait for this to rally to take profits. Again, same thing over here in October, first week of October. Sell a 20 delta put. I don't like to go too much higher. 20 delta. That gives me about an 80% chance of being right. Sell a 20 delta put. Buy a 10 delta put for protection, and then look for the stock to reverse, just like it did the first week of October. That's what I'm looking for tomorrow into Monday, Tuesday. All right, now that I beat that to death, I think you understand what I'm doing.
We've seen that in certain Morningstar categories. That's right. So where you invest is important.
And maybe buying the Friday instead of Monday or Tuesday so I can get a little bit more premium.
Somewhere in between. It's like active, but it kind of aims to sort of be a more kind of passive index, but then people will still select and omit things they don't want, which is kind of active.
It is definitely stepping away from the benchmark, even if you're talking about direct indexing. What we do a bit differently.
Okay, we've got a little bit more than 43 minutes to go. 43 minutes to go.
Indexing or active equity strategies. We think about it as taxable investors have specific problems they're looking to solve, many of which are tax related. So let's realize losses, let's defer gains, let's get them better after-tax outcomes across the equity landscape.
And this is just by being in that, earlier you said you want to be thinking about it all year, basically. You're saying that this approach generally is a way to just kind of minimize your tax losses over time.
Exactly. Keep more dollars invested in the marketplace so they can grow, compound, and benefit the client on an after-tax basis.
Okay. All right. Good stuff to think about as the calendar comes to a close. Jacob, thanks for the intel.
Thanks for having me, Oliver.
Appreciate it. Good stuff. Jacob Green joining us from Bloomberg Furman.
All right, Casaba looking good here.
David Bonser joins us, talking about what we're learning from advisors and also about you as retail investors too. What type of products and funds have been catching on? And interestingly enough, apparently millennials are super into bonds and fixed income. Well, look at that. Maybe I'm making a difference here.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Trading the trending names every day. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and get all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. And everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Download the Schwab Network app and join in on the latest market trends. anytime, anywhere, on any device for free. Schwab Network. It's time to look forward
Find the next trend.
from every click to every tick.
Okay, let's see. NVIDIA. I see HCPG talking about NVIDIA. All right, so we got a nice potential hammer. Coinbase turning.
1 p.m. Eastern. Only Schwab Network.
Low tick alert -8.
Apple. Tesla.
Welcome back to Market on Close. I'm Oliver Rennick. Let's continue talking some investing themes. Here joined by David Botset, head of equity product management, innovation at Schwab Asset Management. David, great to see you.
Good to see you.
We just spoke
I'm thinking Amazon's going to be lower
New York, talking about the drop
on earnings. Amazon.
bond funds. I'm looking at your survey here that says millennials are more interested in ever than buying fixed income. Coincidence? I know maybe the calendar doesn't line up.
Amazon.
The calendar doesn't line up necessarily, but it was a very interesting finding for us to see that millennials are
Try it at the 200 day.
interested in fixed income. Perhaps
You got a lot of selling the last 2 days, today included, and yesterday. So with UPS earnings, looking for Amazon to be lower. UPS, let's see, UPS.
So the willingness to jump in and buy a fixed income ETF for that exposure rather than individual bonds is one element of that.
The vehicle,
The wrapper, the exact set. That's exactly right. The other perspective we're seeing, and we at least think we're seeing from the survey data, is that the younger generation has tended to be a little bit more conservative than maybe their parents.
Oh, wow.
Having gone through the tech boom, the great financial crisis, in some cases, they paused on being too aggressive in their portfolio and have over-allocated to bonds.
So what, did they learn their lesson in the COVID speculative trading boom? Everybody got their haircuts and they're buying bonds now? Because that doesn't look very conservative.
That did not look very conservative, but I think it's also a matter of who you're surveying, right? We looked at both ETF investors and non-ETF investors. Not necessarily those who speculated in some of the things we saw during the meme craze.
I see. Okay, now, so if you move out of ETFs, what does that kind of interest or asset class breakdown look like? What were the big findings there? Because we were just talking about the ETFs part of the survey specifically, right?
That's right. That's right. And that's what the survey focused on, is really looking at both ETF investors and non-ETF investors and what the propensity would be in the future to buy ETFs and what it is today. So we're looking in that space, we're finding a couple of things. Number one, they're focused on their long-term objectives, okay? They're thinking about retirement. They're thinking about saving for future wealth. And when they do that, they're also thinking about the asset classes that they're investing in. A lot of in equity, fixed income, real assets, kind of your traditional asset allocation elements.
So, okay, the vehicle definitely plays a role. Some of the experience maybe too kind of changing across generation, which certainly makes sense. I mean, the fees probably big too, right? I mean, that's still, I know a lot of mutual funds have brought down their fees, but there still is a general gap.
There is a gap. And we've been doing this survey for over a decade. And consistently, the number one reason people say they select ETFs is the low expenses, right? Number two, number three, number four, they've increasingly moved higher. So the gap between fees and everything else is narrower than it used to be, but fees remains the number one driver.
You also had some questions geared toward the subject of personalization.
Yes.
And I would, I guess, assume now with active ETFs, with, passive ETFs, factors, styles, sectors, there's literally everything. So you can piece together things very specifically. There's even single stock ETFs now.
Yeah, and what we're seeing there is a couple things. You mentioned that. Maybe dividends, it may be growth value to personalize. You're also seeing things like thematic, right? You have a particular interest. Gen AI this year has been top of the raised list. Can I get that theme, get that exposure that I want in an ETF? Or if I move beyond themes, how do I think about things like ESG? If I want to invest with my values in my portfolio, using products like that to also personalize.
I'll put you on the spot a little bit. When you look at the survey and then you look around here, because I see a lot of active management, I see a lot of ETFs too. Does it seem like the advisor community is appropriately ratioed active to ETF offer, like mutual versus ETF offerings compared to what the people want?
I think they are, but there is a bit of a gap in education on the active wrapper, right? I think we're seeing that in the survey data is that individual investors are interested in active strategies, active in ETFs, but they need more education. Okay. So I look around this community as that focus on that education, understand the client need, and help them understand what the product, the active products can deliver.
All right, great stuff. Good setup for us, too. We're going to get into a specific tactical product in a second. David Botson, good to see you. Great to catch up.
Thanks so much.
Excellent. David Botson, head of equity product management and innovation at Schwab Asset Management. Let's talk about some of those strategies. What we've heard more about lately is private credit, and particularly the effort to build out alternatives in the portfolio. Stick around. We're going to dive into that subject some more. We'll come back and keeping an eye on the market, too. We've got about half an hour left here. Stocks started off real rough, and it looks like we might be ending that way. So much for the possibility of a bounce, perhaps. The Russell, the only ray of light right now. Nasdaq's got a long trek if it's going to close positive within 34 minutes.
I remember when I first started flying, and we would experience turbulence. I would watch the flight attendants. They're not nervous, they're not nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know God will guide to help them through. I definitely feel privileged to be in that position.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free.
All right, Amazon, I took some 117 puts into earnings. The possibility that this blows up, could blow up.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to
Low
bell
ticker minus 800.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Welcome back to Market On Close. I'm Oliver Rennick. Stay buckled in. We've got a lot to get through here. We're going to talk about alternative investments. Then we're doing some stock picks with Mario Cabelli. So we've got a busy half hour until the market closes up. Right now, let's talk about alternatives and how they fit into a portfolio in a higher for longer environment. Joining me, CEO at iCapital, Lawrence Calcano, here with us on the studio. Great to meet you, Lawrence. You too, Oliver. Thank you. Tell us about what you guys are doing at iCapital. I know you have a long history in markets. You're at Goldman for 17 years. Now it seems like you're focused on a topic that maybe kind of been a little off the radar for folks like me, but everybody keeps talking more about it. Private credit, lending, alternatives in general.
Yes, alternatives broadly defined. So our platform allows financial advisors to offer institutional quality alternatives to their clients, all B2B. The platform includes all the strategies, private equity, private real estate, private credit, as you mentioned, hedge funds, direct investments, structured notes, annuities, and importantly, all of the products provided insurance platform. So if you think as important as access, quality access, is efficiency and processing, which is really important to the advisor community.
That platform, how much is it about the investor understanding what these products are, what's in them? I mean, it's not quite as easy to go and look up. I type in a stock, I get a lot of intel for free now. I don't even have to sign up for anything.
So, yes, it's education is really critical. And so what we try to do is present all of the elements for advisors to succeed. So education, all those sort of pre-investing work that an advisor should do with their clients, and a set of analytical tools to help them understand how different alternative choices will impact their portfolio. Then the technology to process all of the activities around the transaction, and importantly, those transactions are very, very critical. And then tracking, reporting, and managing the advisor's information flow so they can serve their client really effectively.
Got it. Okay, so first step, kind of thinking about that decision-making process. And platforms there to help them along the way. Decision-making process about actually getting to the product. I guess it begins with like asset allocation. What portion of a fund overall they want to have an alternative slice in?
Yes, it's very important. And, historically, people in the high net worth space have had very limited access. So the allocations to alts have been very, very small. But if you look at what's happening, look at CIO's suggested allocations to alternatives across many of the largest banks, largest independent advisors, you're going to find numbers of 20-25% suggested allocations to alternatives.
Wow.
But that's a big gap, right? But we'll never get there, nor should we, frankly, get there until people are properly educated to the client trust. And that's really essential, both at the advisor level and at the client level. And the other thing
All right, so what do we got? Amazon. All right, I took some 117s. These could blow up. All right, so this is not something to take lightly. All right, it's a bet. This is not a strategy. I'm just banking on what Russell said earlier. If UPS earnings are that bad, it has to impact sales for Amazon, you would think. But what do I know? So I generally don't play earnings. I wait until after to see what the reaction is. This is just a couple of hundred puts, a couple of puts, a couple of hundred puts, a couple of puts that I'm watching. If it blows up, so I'll lose $500. You know.
have floating interest rates. And so in a time when interest rates are going up, inflation, et cetera, there's a built-in hedge in those products for investors. So that's driven a lot of interest there. And frankly, given the banking crisis and the banking situation we've all been dealing with, there's a gap in available loans for businesses, growth businesses. And so the private credit marketplace itself has grown to step into that gap that has been created by some of the banking challenges.
I'm curious to get your thoughts on the last time I had this conversation. You answered the same question, which is basically how do you make sure that in the private loans
minus 800.
Okay, so it's probably going to take a couple of days for this reversal to find its footing. So could expect a little bit more downside. That's why I didn't want to do anything today. I don't want to do a credit put spread, a bull put spread, looking for the markets to reverse and continue higher. It's a bullish thesis. Looking for a credit. I probably won't do it until Monday since I won't be here tomorrow. VIX moving higher, volatility high.
uncertainty in that market. You folks have to get used to. If you got 20% big jump in alternatives and stuff like private credit, should you be more understanding that you might not be able to get in, get out like you would if you had that in traditional equities?
100%. And this asset class is definitively not for everybody. Okay, right? You know, you have to understand. This is why the education is so important. You have to understand the liquidity characteristics. Private equity, for example, is relatively liquid. Private credit is a little bit more liquid, but still not liquid in the way people think about liquidity with stocks and bonds that are trading regularly, right? So you need to really understand that, and you need to really be comfortable with the illiquidity that comes with many of these investments.
Understood. All right, great. Some education on the subject continuing here, Lauren. Thanks for the conversation. Thanks, Oliver. Absolutely. Capital, talking about the alternative space. And once again, we still have more ahead. My window is up next. Let's talk stock picks. Still about 25 minutes left in the session. Equity got a long way to go for getting that NASDAQ back up. And we're losing the Russell, too. But basis points keep evaporating at any time we check in and take a trade. Let's talk some stock picks when we return and see how Mario's thinking about baseball, too. You know, he's an Atlanta Braves guy.
All right, continue. We continue. Amazon's on a sell into the close for now. We've got 23 minutes to go. 23 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday the 26th. We got earnings. To look forward to.
Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Good.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades and full power of trading. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It's time to look forward.
Find the next track.
Extreme low ticker.
Every tip.
With no fear of missing out.
Available anytime, anywhere on any device for free. Empower your portfolio with the Schwab Network.
Low ticker -800.
T-Bounce Coffee, I'm ready for. Join us for next set investing.
1 p.m. Eastern, only on the Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Market on Close. We've been talking a lot of strategies and big top-down stuff. Let's get into some stock picks and a little economic conversation. Of course, you know, we've got Mario Bell. You can't skip that part. Joining us, Chairman and CEO of Gamco Investors. Mario, I'm loving this yearly in-person conversation.
Well, it's great to be here. This year in Philly, the prior years in Denver or somewhere else.
Well, did you find any Schadenfreude in the Phillies losing after beating the Braves?
Well, it happened last year, and I'm not saying that the Phillies should have lost.
Extreme low, take alert.
Independent of that, they are a C corporation now. The stock is 34. You think you're going to make 50% in a year, so you got to own it. The pitch clock work, the notion of advertising because of the Hispanic market, everything's going right.
Still on baseball.
Yeah, I'm still going with BATRA and BATRA, which is the voting stock.
Okay.
We own a lot of the voting stock, like 15%.
Your economic foresight might have been a little better than the Braves' performance foresight.
Braves did okay. The Orioles, the Braves, and the other teams that were leading in the pack, maybe because they took time off. But anyway, the economy is not taking time off.
You told us, I think our last conversation was in the spring, roughly, and you said the economy is going to surprise people to the upside. It still has juice left in the tank. You just printed almost 5% GDP. Quick thought on maybe what comes next?
I think basically you have to be worried about another crisis. And the crisis this time is the Mideast and the unintended consequence. We had the bank crisis. We're starting to deal with that. Now we got the Mideast crisis. What else is next? Then you have a house divided. The United States political system needs to be fixed. Then we have to deal with an election 12 months from now. We have a lot of dynamics. The tax cuts that were put in place in 2017 expire in 2025. The deficit that came in at 1.7 billion was likely to be closer to 2. The fact that interest rates are going to be higher for the Fed, that increases the deficit. How are we going to solve and put the U.S. house in order? Well, the world is also a mess. And so, but that's okay. It gives you opportunities to buy stocks at reasonable prices.
Are you worried about the big tail risk event some are with the deficit and the Treasury spending, or if Powell keeps fighting inflation?
All right.
Powell learned the lesson. He's going to have what I said was the 4 R's. Rates higher, longer. I don't know what they'll do next week at their FOMC meeting. The second part is the runoff of this debt. They are taking down $95 billion a month. That's $1 trillion a year. Basically, then trying to reduce aggregate demand. That is not working. On the other side, when I look at consumer, 70%, industrial, 12%, government local spending, the consumer sector has what they call autos right now because these.
All right, we got IWM with extremely large
When that strike is over,
bullish prints.
in that sector
IWM.
it's too late because of Christmas holidays, and so that's going to provide a button. Secondly, in the industrial area, well, it has housing, and housing starts permits for single family are okay, multifamily are not. But you got the CHIPS Act, the maturing, and that. So the economy's not so bad.
Yeah.
The problem is we have to help individuals.
Okay, Amazon.
The lower end of the income.
Amazon dropping below VWAP.
Food, fuel, and everything else.
Sure, it still is high. Even though it's not going up as much anymore, it's still high. Still
Depends, yeah, but you exhausted your resources, so you got to refill your own economic tank for those individuals.
For those that want to refill their tank by way of long-term investing, as you just put it to me, you're trying to find stuff, maybe works short-term, but ultimately works long-term as well. If you get the both to work, that's the ideal. One of the stocks we like right now, Guaranteed Parts. It's an autos adjacent trade, right? And it's been getting hammered.
Well, the stock is GPC. They've got 140 million shares. The stock's 129, 130. It's down from 160 because of a short-term air pocket. What happened is the fill ratio in some of their parts was not as good, so they got more suppliers. The company has been in business almost 100 years.
Low, minus 800.
All right, so this is what I was in considering that this could happen. So I didn't want to get balls to the wall long. It just didn't feel right. The cumulative is green. It's 1-to-1 up by him, but got to see more. Got to see more bottoming.
So when I look at earnings, they're going to earn $10.10, maybe $10.50 next year in 2024, and the stock is 13 times that with an okay balance sheet, a great record, strong management, and focused on their customers. And there's always an air pocket, and that gives you an opportunity. So I like it for the next 5 years.
You think the strikes and the labor strife at the automakers has contributed to some of the negative sentiment here?
No, not necessarily, because what's happened is their AutoZone and O'Reilly are competitors. I think they certain parts that they would sell through their stores, which they're not all company owned. They may have had some dynamics in terms of fill ratio. You're a mechanic and you say, I need a part for a 57 Chevy, okay, and that part is out, and so that is just a temporary dynamic. The only issue on the aftermarket is the rate of inflation for parts, and the second part is that with a long period of time, this love affair with electric vehicles will reduce demand, but not short term. Short term, the learning curve on how to fix those cars.
Yeah, very interesting.
You got 280 million vehicles on the road. The HVIX is right for parts, and 1.4 billion on the road in the world.
Yeah, the parts are still going to be in demand.
Raytheon. All right.
Their pocket, right? It's kind of
also
overlooked.
I'm not doing it myself. I do it for me. I have to go to a mechanic and have it do it for me. So that market is different.
RTX, Raytheon. That had a nice bounce pop yesterday, Raytheon. Thank you, John. David, sorry.
Well, Textron is best known by you for commercial aviation on the Cessna airplanes. Okay. They also, however, make Bell helicopters. So Bell is the helicopter that just got an award to do the future Black Hawks. So they're going to do the next generation. Well managed. Stock is $75. There's 200 million shares. That's $15 billion market value. And I think they're going to earn $550, and it's not expensive next year. And so that's why we're looking at that. We think there's a place for private aviation. We think there's a place for Bell and what they do in a helicopter, both for defense and commercial. They have other businesses which could be a little comfy, challenging short term. But they just reported either this morning or last night the numbers were okay. And the balance sheet's in good shape.
Yeah, stock right now up about 2% post earnings. So you got a little bounce there now.
What's the number?
Right now we're at 76.
Okay, so it's up a buck.
It'll do.
Come on, we're thinking about will this company earn $7 or $8, or will it sell it 20 times? And what is the management going to do to create value incrementally to that? For example, Crane spun off a division. The stock is the same price, but I got $50 from another asset called Crane CXT. And they're more in the defense area than commercial aviation. But just think about the shortage of airplanes. Think about the shortage of housing. Think about the shortage that's developing in other sectors of the U.S. economy. The only problem we have is the government is divided in this country. And then we have parts of the world where Xi and China won, the Russians and the Ukraine, and then the Iranians, and that challenge that they're presenting because they want to be puppeteered. Oliver, it is not easy out there, but over the next 20 or 30 years, people are superior returns in owning equities that have pricing power and buying a good management. So,
and U.S. industrial equities too. It sounds like generally you're still willing to continue to bet on.
Raytheon looking for a bounce.
Well, which spot specific? Always a pleasure to be with you. Thank you. Take care.
Catch you before you head out for the weekend almost. Mayoki Valley Damco Investors, of course. A Braves fan as well next year. All right, thanks, Mario. When we come back, still got some time to fill the bell, Schwab panel, and this afternoon too. Don't forget we got Amazon earnings, so we're not even close to being done.
Thanks.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network. I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
All right, Raytheon with the bounce.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through being a single mom. At the end of the day, my mom raised 3.
Okay, look at Raytheon. Raytheon's a buy if it stays above the 50-day. Okay, with a stop underneath. Volume shows institutions. That's 60 million shares trading hands in 3 days. 60 million shares.
Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens.
All right, we got buybacks too.
No subjectivity, there's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Okay.
Heading to the bell looks like a bounce is too much to ask for. We got 2 great smart guys who let us took advantage of it. So Mark Tom joins us here, Chief of Investment Strategist, Ken Ford, Senior Investment Strategist at Charles Schwab. What's up, guys? Yeah, absolutely. Well, it's been a pretty busy couple of days, and we're kind of rounding it out with a bit of a sell-off, adding on to some weakness. I like the way you really put it, Kevin, which was that the ghost of 2021 still haunts the market. Today, bonds are doing okay, but generally we know they haven't been.
Yeah, well, it's more about actually from the equity market perspective, at least in the case of the U.S. What we saw in 2021 that was more of a worrisome trend was even as the cap-weighted indexes were moving higher, you had seen pretty significant deterioration under the surface and in breadth metrics. And that's really now what's happening. So you've got these opposing forces where sentiment has washed out considerably. So that, in and of itself provides a little bit more of a breeding ground for a rally, but you need a catalyst. And we're lacking the catalyst on the breadth side of things where you're seeing across the spectrum, not just in small caps, but up the cap spectrum too, even with Super 7 losing some momentum collectively as a unit, that's working against you. So you're kind of at this push-pull where you can't really get a good catalyst or a bad catalyst in either direction. So I think it keeps us in a little bit of this malaise for a while.
Was that kind of jugular this week to see Alphabet get hit? I mean, I know you don't do specific stocks, but like the fact that cohort, we can span out to 7, so it's not a specific one. That cohort just suddenly like dispersed in half.
Well, I think it's more so that you don't look at anything really as a monolith anymore. So even within the Super 7, that's three sectors. It's tech, communication services, consumer discretionary, and each of the biggest names in those sectors account for half or more than half of the sector itself. And the fact that you had such a huge divergence yesterday between communication services and tech, I think tells you that you don't want to just be looking at it as a monolith. You have to look at what the qualities are and the underlying factors are for each company and each sector itself.
Stock market is still dicey. I mean, at best, basically, Jeff. But at the same time, our economic data is like shockingly good still, at least relative to where everybody thought we would be here.
Definitely
The stock market doesn't seem like it.
No, it certainly does. Right? So take a look at what's going on overseas. We had a pretty weak third quarter in Germany, right? Very strong third quarter in the U.S. Central bank, we heard from the ECB today, they're not going to hike. They're probably going to be cutting next year. I'm not sure the Fed is going to be as quick to be able to declare victory on inflation because of the strength, relative strength of the U.S. economy. And now with the Magnificent Seven turning into the Keystone Cops here, we really lost some of that leadership in the U.S. markets. And that's why, even today, yes, markets around the world were down, but international markets fared better.
What did that print do, 4.9 on GDP, to the overall kind of relative perspective on U.S. versus the rest of the world? I mean, did our leadership take another leap forward when we had already kind of been in front?
From an economic perspective, we balanced down. When you take a look at the recovery from the pandemic, certainly the U.S. leads the way. China's fumbling to try and catch back up. But this is 4 quarters in a row for Germany without any economic growth. That is a recession, right? But at the same time, those stocks are trading at a discount to the price earnings, that is their 10-year price earnings multiple average, and braced for a more difficult environment.
In your situation, does that look like then? It seems like if there's anywhere we should start trying to price in cuts, maybe that's where it legitimately is something to think about.
I think that's where it begins. Maybe the Bank of Canada, and which we heard from yesterday, and the ECB. So I think that's where we're going to start to see that turnaround, and that can really help to lift those multiples.
What does that mean potentially for the U.S. picture? I mean, in Europe, I mean, look, everybody wants to chase cuts and liquidity, it seems like still. But if it's coming from a bad place, China still is fumbling. Is there hope then that kind of just the money finds its way into U.S. stocks?
I'm not sure if it's as easy as that. And you have to keep in mind, too, when we think about rate cuts in the U.S., pivoting to aggressive rate cuts from hikes or from the pause is very different than a very calibrated, more surgical, 1 or 2 cuts here. And I think from the Fed's perspective, certainly they want to keep upward pressure on real rates and make sure that they're not overly restrictive, but they don't want real rates to be moving back down to where you get to some sort of a combination phase. So I think that's the dynamic we need to keep in mind. But, from a U.S. perspective, flows have actually been relatively broad-based and evenly distributed across the equity universe, but they've actually been much stronger in the bond universe than they have in the stock universe.
Yeah,
so
people just keep plugging into TLT.
Oh yeah, I mean, for all of the sort of discomfort with moving yields that we've seen, there have been a fair amount of investors, particularly households, that have jumped into that and actually started to play what we've been saying defense with the bond market in the face of an equity market that has looked more under the surface for the entire year, but definitely much worse since the peak in July.
I was talking to somebody today that described the TLT flows that keep showing up positive. It's basically like the kind of institutional fight in the Fed, Jay. Like people really think that if they just keep trying, it's going to stop. But as we've seen, like for example, earlier this month, we got the NFP report. Everybody was excited that the wages were cool. Bonds rallied that day, kind of like the on GDP. Fast forward 3 weeks, we're at 5%. What do we look for?
Raytheon, we're looking for follow through on the bounce. All right, we are closed. All right, so we'll be here. I'm going to be here waiting on Amazon. Waiting on Amazon earnings. Let's see. Make sure they don't come out early. Amazon. Amazon. Watch Amazon blow up. That would be so funny. Watch Amazon do the opposite.
Young lady who was mid-30s, couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through being a single mom At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. The client won't care how much you know until they know how much you care.
Look at Amazon. His earnings out. Look at this. Look at this.
Anytime, anywhere, any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern, on close.
All right, Amazon looks like it's out. I don't know if shorts are covering what's going on here. It's all over the map. It's all over the place. Hit 125.50 there briefly. It all depends on how it opens tomorrow.
Russell, the hero of the day, but that is not saying much at all. Just up less than 1/3%. NASDAQ, not exactly a disaster, but it was far from a good day, especially because you can't blame it on the bond market. Bond market reacted to GDP exactly as bulls would hope. Treasuries firm, yields dropped after almost 5% GDP. Let's talk some earnings. This afternoon, Amazon is our highlight, of course, but not the only one. We got Intel, we're going to get some eyes on as well. But the move here for Amazon is pretty, okay, there's another tip, pretty solid. Looks like it's picked the direction here. Up about 2% after a down day of 1.5%. Sales on the top line, $143.1 billion. Earnings per share on the bottom line, this is all, of course, for the trailing third quarter, 94 cents.
All right, folks, listen, I won't be here tomorrow. I don't want to beat it to death. I will be in the trading room, but I won't be broadcasting live. Got to take my daughter to Duke University in Durham, North Carolina. So I bid you all adieu. Just know that I'll be in the room and wishing you well. You know how we trade. Look for VWAP up and to the right. High relative volume. It's a Friday, so I'm not expecting a whole lot. Watching Amazon, it's up $6. It all depends on what's said from here on out and how it opens tomorrow. Take care. We'll see you tomorrow. Take care, and we will see you in the room tomorrow. Ciao.